Elon Musk battle in Brazil over social platform X. Yesterday, Musk's satellite internet service Starlink said it would comply with court orders to block X in the country, so it could continue operations there without the threat of losing its license. Starlink initially said it wouldn't cut off access to the platform. The Supreme Court has ordered Starlink's assets frozen to ensure that X would pay its penalties. The top justice there taking the position that Musk's two companies were working in concert. And that's always, I guess, what you could accuse the company has such myriad interests, and you could never, boring tunnels and Starlink and SpaceX and Tesla. None of them are boring.
No.
But yeah.
Except for the one that actually is boring, right, in a different sense.
Neuralink.
Forgot about that. Let's get an update on the carriage fee battle between Disney and DirecTV. That provider is offering customers refunds of $20 for the loss of broadcast by ESPN, ABC, and other channels that are owned by Disney. Subscribers lost access to those channels on Sunday when the existing distribution agreement expired and the signals were blacked out. The loss of those channels means that DirecTV customers will not be able to watch the debut of Monday Night Football next week or the U.S. Open tennis matches that conclude with the finals on Saturday and Sunday. And I believe DirecTV pays something around $2 billion a year to Disney, but they've been stuck in this morass where they cannot come to a new deal.
We talked a lot about this yesterday. I think they're going to come to a deal, but before football.
That would be my guess, too.
That's pretty much how this always goes. Yeah. Somebody capitulates.
Well, that's the mass level of leverage that you have just before.
Meantime, Nippon Steel offering now a new olive branch to critics of its $15 billion deal to buy U.S. Steel. Japanese steel giant saying that the new board would include 3 U.S. citizens and that the core senior management members of the company would be American. Separately, in an interview with the Wall Street Journal, the CEO of U.S. Steel warning that the company would close steel mills and likely move its headquarters out of Pittsburgh if the planned sale collapses. Of course, trying to put pressure on both former President Trump and Vice President Harris, both of whom have come out publicly against this merger, in large part because they think that there's voters on the other side of it. We're learning more details right now about Sam Altman's plans to build out machinery and other infrastructure needed for artificial intelligence. The OpenAI CEO planned to begin an effort in the U.S. that could cost tens of billions of dollars. This is according to a new report from Bloomberg, saying that the types of projects that Altman has been pitching include building data centers, increasing energy capacity and transmission, and expanding semiconductor manufacturing. Part of that pitch is that other companies, aside from OpenAI, will benefit from the infrastructure projects. OpenAI executives have also been courting investors in Canada, Korea, Japan, and the UAE as well. And of course, there's always been rumors about whether he's going to develop his own phone.
All right, coming up, small caps were hit hard in yesterday's sell-off. The Russell fell by more than 3%. More on that move next. As we head to break, here's a look at some of the consumer staple stocks that did rise amid yesterday's sell-off, like Molson Coors, Smucker, and Campbell Soup, each up more than 3%. Squawk Box will be right back.
Victory. That is Washboardjim's battle cry. Victory. Victory. All I need is a little victory. Yeah, I think we'll just keep it like it is. Resistance to break will be 554.16. That'll be the hard resistance.
earthbreeze.com.
Oh, shut up.
The Russell declined 3% in yesterday's session. For more on what's next for the small caps, let's bring in Chris Retzler, portfolio manager of Needham Small Cap Growth Fund. And growth, you have a fund that's based on growth. Is that the concern right now that hit the markets yesterday?
So I think what hit the markets yesterday was, some of the concerns in growth and, where is the economic numbers going? What is the Fed going to ultimately do here in September? I think what we're going to probably see there is maybe a quarter point, which would be a
Oh, here we go with the interest rates again.
result versus a 50 basis
God.
point cut.
Help
in
us.
That, if they did 50, I think we're going to be looking at something more serious. But growth is certainly under pressure, and we're seeing it, coming out in some of the share
Under
prices.
pressure.
Meantime, you point out global economies are slowing. That we probably will
Under
see
pressure.
some weakness in the labor market that we started to see already. So that could happen on Friday. So you think that the risk is not to inflation being rekindled? You think it has to do with
Too bad you had to say that.
James McAvoy will scare you speechless. Speak no evil.
He looks like Batman. Da da da. Da 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 da.
Tipping around, my brains on the floor. These are the days it never ends but it falls. Turned away from it all like a blind man. Sat on the fence, but it don't work.
Keep coming up with love, but it's so slashed and torn.
God, I can't take it. The song's great when they're just singing Under Pressure, but when they go through all that rigmarole and screaming, that's Queen, Under Pressure. So everybody have a good day. Let's knock it out. Under Pressure. I'm gonna listen to the Rednecks.
So again, it's just more
I'll be back.
uncertainty. The market doesn't like uncertainty. So what are you going to do?
Oh, the market doesn't like uncertainty. How
Goes down
wow.
And wait until you have that, certainty, in
That's some
November.
good advice.
You don't know till December. I mean, from the past elections, you don't know.
Man, you need to do something with them eyebrows,
and
buddy.
Again, you're in a headline period where I think candidates are going to
Need a
put
little
out their
waxing, man.
positions, and then what likely gets done, is probably a lot less.
Under pressure.
But there's also regulation.
I'm gonna raise my alert
policies you're gonna
up a
have.
little
Are you
bit
gonna continue
higher
forward,
to right
with some of
there.
the stimulus dollars that are still going into the CHIPS Act. You've
Replaced.
got the, infrastructure spending, broadband build-outs. Are any of those things going to be at risk if there's a change
God.
in administration or within the Senate or Congress? So
You're an
all
asshole.
headline risk, and I think it's really hard to determine right now what the outcome's going to be.
So you like some of these small caps? So you like Marvell? We mentioned that earlier. Cheaper today than yesterday, huh?
Yeah, look, I think it's probably the day
Joe,
to
good
buy it,
one.
But, you have a lot of news out around Intel. What are they going to do with some, potential strategic options? There's probably some assets in there that, Marvell could be potentially,
Potentially.
a good acquirer of the old Altera assets. But long term, we do like semiconductors. They go into just about everything. I think you just have to buy them right. And they're going through this corrective phase. I mean, yesterday for the SMH and the SOX, it was down very big. So I think you cautiously watch, do your due diligence on those names, and see where the right entry point is. You don't want to buy something too early.
Badger meter.
So that's a water metering business. So all of your residential, you have to meter, and those meters run out over time, and it's moving more to a digital age as opposed to the old standard copper. But that's a utility play that has to be updated every so many years. So it's a well-run company out in Wisconsin.
I wonder. Yeah, Badger.
Yep.
You know that state, I guess, a little better. And then Calix, finally.
So that's a broadband play as we roll out, getting to rural broadband and, pushing into tier 2, tier 3 areas. They provide a new service, a new experience for viewers. And, it's more of a software based as opposed to a hardware based play.
Okay, great. Chris, thanks. Chris Retzler.
We come back a lot more right here on Squawk Box. Robinhood looking to attract customers in the UK with a new stock lending program. We're going to bring you some of the details about that in just a moment. Plus, another consumer-facing company rolling back diversity initiatives. We're going to discuss this increasing trend and what it means. Squawk Box rolling on this Wednesday morning. Welcome back to Squawk Box. Online brokerage platform Robinhood launching a share lending program in the UK today in an effort to grow its presence abroad. It would allow consumers to earn passive income by lending out stocks that they own outright to interested borrowers. Users will earn a monthly fee for doing it. To rent out those stocks in their portfolio. Institutions typically borrow stocks for trading activities like settlement, short selling, and hedging risks. Most companies that offer such plans in the UK pass on 50% of the interest to clients. Robinhood offering 15%. The risk of the product is that the borrower defaults on their obligations and then unable to return the value of the share to the lender. Robinhood saying it aims to hold cash equal to a minimum of 100% of the value of the loan stocks at a third-party bank. So that means customers should be covered if either Robinhood or the borrower suddenly couldn't return the shares, though with all things, read the fine print, folks.
Yes.
And Molson Coors is the latest company to roll back some of its diversity policies. That's according to an internal email viewed by the Wall Street Journal. The brewer of Coors Light, Miller Beers, and others said it would no longer participate in a scoring system that measures LGBT inclusion in its workplaces. The company will also eliminate supplier diversity goals. In the email to employees, Molson Coors said it is shifting to a broader view in which all its employees know that they are welcome. Other consumer brands have recently rolled back such initiatives after facing pressure from activists, including companies like Ford, Lowe's, Jack Daniels maker Brown-Forman, and others.
When we come back, a new CNBC poll found that more Americans are worried about their retirement savings. Sharon Epperson has that story next. Right now, though, as we head to a break, take a look at yesterday's S&P 500 winners and losers.
Electronics.com.
Good morning and welcome back to Squawk Box live from the NASDAQ market site in Times Square. Let's look at the futures. Down but not out. Much worse yesterday. Okay.
In fact, after yesterday's sell-off, a lot of investors may be even more concerned about being behind with their retirement savings. A new CNBC SurveyMonkey poll found that about 7 out of 10 workers are concerned about being able to fully retire. CNBC's senior personal finance correspondent Sharon Epperson is here with us right now to break it all down. Good morning, Sharon.
Good morning, Becky. You know, market volatility may explain some of the concerns of many Americans. This survey of more than 6,600 adults, including about 2,600 retirees and 4,000 adults working full-time or part-time in early August, found a number of findings about how people feel about their retirement. The majority acknowledge that reaching retirement may not happen like it did for their parents. 8 out of 10 workers, 82%, say achieving a comfortable retirement is much harder or somewhat harder to achieve. But looking at their own futures, the CNBC poll found 44% say they are cautiously optimistic about their ability to meet their retirement goal. 27% are realistic about that happening. 21% though are doubtful, and 9% say they believe it's never going to happen. With the decline in traditional pensions, rising healthcare costs, and people living longer, many experts that we spoke to say rethinking retirement is the new reality, and it may mean working at least part-time in your later years. The CNBC poll found most workers, 69%, are concerned about being able to afford to stop working or retire fully. The highest percentage of concern was among millennials and Gen Xers. And even among retirees, more than a quarter, 28%, say they are currently working to supplement their retirement funds, either because they want to or they have to. Joe Coughlin, who heads the Age Lab at MIT, tells me that retirement itself is being retired. He says often within a year or two, retirees find out that they're either needing more money or they need to do something, and so they go back to work in some capacity. You can read a lot more about the key findings in this CNBC Your Money Retirement Survey on CNBC.com.
I guess the good news in that is that a larger percentage of the folks who go back to work in retirement are doing it because they want to. Good news, maybe because we're living longer, we're in better shape than we used to be. In terms of the concerns people have, though, I guess inflation probably has a big part to do with that, too.
Inflation has a real big part to play in it, sure, but also people are looking at what am I going to do during this time that I'm retired? What we found in the survey also was that when we asked people what ideally they wanted to do in retirement, they talk about travel, they talk about spending time with family, doing their hobbies. When they say realistically, do you think you're going to be able to spend a lot of time doing that? That number comes down.
Yeah.
So the idea of what are you going to do just on any given Tuesday?
Right, you're going to be bored.
No, right, right. So you may end up consulting or picking up some type of freelance work, pursuing a business that you want to, idea that you have. So,
Probably good in some scenarios. Probably helps keep you active and with it, too.
yeah. But it was interesting how many people were talking about working in retirement and also thinking about whether or not that's a reality for them given their health concerns and other things that come up.
A lot of people worry that they're never going to be able to stop working and fully retire. So what steps can actually be taken to make it easier to meet your retirement goals now?
Well, one of the things that people, of course, we always talk about maximizing your savings and the tax advantage accounts. Looking at those Roth accounts even more closely, I think, is really important for people to do because the money that is in those accounts, since it's after tax, is actually your retirement savings. I think people get a little bit surprised when they look at their 401k and then realize that actually money is taken out for taxes, so it may not be all there for them. The other thing that I think it's really important to do is to make sure that you're monitoring your expenses as they're rising. As we're getting into raising our families, saving for retirement, saving for college education, all of those things that come up, it's important to do that. But the main thing that people don't do is estimate their retirement income. How much are you actually going to have in retirement income? What is your Social Security going to look like? You can do that estimate right there on the website. And then finally, test drive your retirement. I think this is a brilliant idea that many of the advisors have talked about, which is figure out where you might want to live, take some time off when you take time off, go to that place and do what you would do. Not just sightseeing and that kind of thing, but how would you live your life?
What real life look like?
Real life look like, and then what would those real life expenses and what the real life budget look like, from your housing to your transportation to food, and see how that would work and if you could stick to it.
Sharon, thanks a lot.
Sure.
Okay, coming up right after this, the NFL season kicking off tomorrow. We're going to talk about a new venture looking to provide football-related content. We'll tell you about that next. Former NFL coach Matt Patrice is going to be joining us right after the break, along with an investor in that venture. And a reminder, you get the best of Squawk Box in our daily podcast. Follow Squawk Pod on your favorite podcast app and listen anytime.
Jim.
Welcome back to Squawk Box. The 33rd Team is a sporting venture that offers NFL content from former players, coaches, and executives. Today, the platform is adding to their A-team of contributors, NFL coach Matt Patricia and Adam Gase, and Super Bowl winning coach Bill Belichick. The content is available for free, but that could change in the future, and want to talk right now to the folks involved in it. Matt's here, the 33rd Team strategic advisor and former NFL coach, and Ryan Moore, the 33rd Team and investor and strategic advisor and Accomplice founder. Good morning to both of you. Congratulations. It's a very cool endeavor. Tell us how it works.
Yeah, good morning. Thanks for having us on, Ryan. I don't know, I guess I'll kick it off here for us.
Sure.
You know, I think the great thing about the 33rd Team is really, Mike Tannenbaum, I think, has just put together an incredible collection of, coaches, executives, guys that work maybe in the personnel department, just different areas of the game that I think if you want to grow and learn and, really get into the details of, what the NFL is really about and what the game of football is about, I think it's just a great resource for fans and coaches, former executives to go. They have the weekly newsletter. We have a Zoom call that we can get on and get great insight into the game and really all different areas. And it's really a place to just grow and learn, in the sport and really have that growth mindset to be able to just continually trying to develop and get better.
As an economic matter or business model, we just said it's free. What is the long-term revenue plan for the company?
Yeah, well, I say there's two opportunities. I would say first on the business to business side. I mean, I look at the opportunity as there's $32 billion companies. Yes, they're teams, but these are absolutely organizations. And now you have PE coming in, so the value is only going to appreciate. And in my experience, businesses that utilize more tech get more valuable. So I think there's a few revenue opportunities still to come on the business to business side. Then on the consumer side, I think fans have a tremendous amount of desire for this expert programming or expert analysis. And the deeper you get into the game, the more enjoyable it is. And I think that those are some of the avenues that I think 33rd can provide, both sides.
How much of this, by the way, is for, by the way, if you were interested in betting this, I would imagine you might want to hang out on your site, and you'd probably be willing to pay for that. Do you imagine long-term having multiple sort of strategic partners in terms of media? Do you ultimately think this is a business that gets, by the way, bought by a bigger media company?
Yeah, I mean, I think that's probably the logical, conclusion, or it could be a standalone business for quite some time. But I would agree with that's a likely scenario.
Matt, and I'm curious, we got football about to begin in earnest. By the way, we were just talking about this DirecTV situation. I don't know how you think that's going to end.
Yeah, I'll probably let the people involved with that handle that situation. I know that's a hot topic, but I think for me, I'm just excited to get football going again. I think everyone's really can't wait for the games here this weekend. Kicks off Thursday night. We got to go to Brazil on Friday. That's another great game matchup there, and then into the weekend for just the game that we love to be involved in. We love to watch. We love to we can now get into. Being in those situations where we can play fantasy football, we can be involved as an executive side of it, we can, be involved as a coach side of it, as fans, and, be able to go watch the guys on the field do what they do at a great high level and see the coaches compete. And I just think, it's a really exciting weekend every year when the football season starts.
What do both of you think about private equity and sovereign wealth funds and the like getting involved and being owners of these teams, and whether you think ultimately it's going to change the dynamic of the game?
Yeah, from my perspective, it was inevitable. I think, like I said, these are 32 very, very valuable businesses, all north of $1 billion. And I think the other thing, I don't think it's done yet. I actually think we're on the cusp of seeing private equity get very involved in the college athletic space as well, where it'll probably have much more of an impact in some ways, I think, in the inevitable professionalization of college athletics. But again, I think private equity involved is a good thing.
Good thing. The reason I ask is whether it's a good thing is, you've had these families own these teams for a very long time. And because of that, you could argue they've actually been able to make very long-term decisions. By the way, sometimes good decisions, sometimes bad decisions, but with a sort of a truly sort of long-term horizon, if you will. I don't know if that's going to be the case in the same way if you have private equity investors who are watching a team, for example, on a cash-on-cash basis, for example, not be bringing in the money that they're supposed to be bringing in any given year, and what that ultimately then means to the team.
I think it's going to attract talent. I think with capital going in, you're going to get even more talent alongside these families, and where talent goes, actually, you see appreciation of value.
Hey, Matt, you mentioned this idea that people are doing this not only because they're fans, but also because they're super fans. Maybe part of that is fantasy football and things that play into it. A big part of it is the potential to gamble on these games like never before. There's a new estimate that this year the NFL is going to have something like $35 billion in wagers that it ushers in. How much do you think it increases fans' likeliness to watch games, just to have the ability to bet on some of those things? What have you seen over the last, let's say, 5 years?
Yeah, I think, that engagement that the fan has now with the ability to do that, I think really, invest them even more into all of the games. So not only do we see fans that are, certainly extremely just proud of their teams, maybe their area or whatever the team was that they grew up watching, but it really branches them out to the entire league at this point. You know, you're obviously cheering for players and rooting for teams and rooting for different areas of the game that I think it just completely enhances, you know, the overall experience of the fans now watching the game. It really puts them right in the middle of it. They're invested, not that they weren't before, but now they're just, you know, completely invested, you know, week in, week out to a lot more of the opportunities of the games that are being played.
Before we let you go, Ryan, tell us about the relationship with Bill Belichick and how that's going to work.
Yeah, well, I mean, I think in many ways he's the GOAT. So getting his involvement, I think at the end of the day, you know, his stamp and his brand being a part of the 33rd team and his insights and him bringing over Matt and his whole team is really just going to show kind of like the caliber of expertise that Mike and Mike Tannenbaum and the team have assembled. So we're excited about getting Coach involved.
Matt, Ryan, I want to thank you this morning. Appreciate it.
Thanks so much.
And a programming note, tomorrow CBC will reveal the official 2024 NFL team valuations. That begins right here on Squawk Box. Also tomorrow, don't miss the NFL kickoff on NBC and Peacock. Coverage of the Ravens-Chiefs game starts at 7 p.m. Eastern Time.
By the way, did you see Bill Belichick was in the Garden State last week watching a high school football game? He was there for the Battle of the Beach, at the Battle
That
of
I
the
did
Beach.
not see.
It was Bergen Catholic, which is, I think, ranked 19th in the country,
Okay.
versus IMG National, which is ranked number 9. Bergen Catholic's right by us. My son was basketball thing there, they lost, but it was a huge game. Even drew Belichick in to come to high school football. Kind of unbelievable.
We'll see who they're going to be recruiting from that team.
Yeah.
Bring a date.
I didn't see one in the box. In the pictures, they had of him in the box.
He was stepping up for
Yeah.
a while with a
Yeah,
more youthful person hanging around with that they started as friends and I guess became more something.
I just saw he didn't have a hoodie on. He had a baseball cap on. So yeah. Unusual look, but yeah, watching high school, it was pretty awesome. When we come back, we're going to talk about the former top aide to New York, Governor Hochul, who was arrested yesterday and is now charged with acting as an undisclosed agent of China. As we head to a break right now, check out the price of crude oil, rising back above $70 a barrel, just barely, after a Reuters report said that OPEC Plus is discussing a delay in the production increase that was planned for next month amid this recent decline in oil prices. So right now, oil's up to $70.90 a barrel. It was at $69 and change when we last checked just about 15, 20 minutes ago. Squawk Box will be right back.
50% off.
A former top aide to New York Governor Kathy Hochul was arrested yesterday on federal criminal charges that she acted as an undisclosed agent of China and laundered millions of dollars for China. Linda Sun served as deputy chief of staff to Hochul for a year and held other state government positions as well. Her husband was also arrested on money laundering conspiracy charges, both of them pleading not guilty in court in Brooklyn yesterday. Prosecutors allege Sun engaged in political activities in the interest of China and received substantial economic benefits as a result. Hochul's press secretary said her employment by the state was terminated in March of 2023 after discovering evidence of misconduct, and that she was immediately reported to law enforcement. When we come back, NVIDIA facing a DOJ subpoena over potential antitrust violations. It comes after a 9.5% decline during yesterday's session. We will dig into that story next. You can see NVIDIA shares this morning off almost another 1.5%, 106.44. Year to date, still up by about 115%. We'll be back with that story right after this. Well, the Department of Justice has subpoenaed NVIDIA as it continues to investigate claims that the chipmaker violated antitrust laws. Joining us right now to talk about the potential case against NVIDIA is former Department of Justice prosecutor Firdaus Al-Tayyi. And Firdaus, let's run through this because it's not illegal to be a monopoly. It's not illegal to be really great at what you do. What would the Department of Justice be looking into? What could it potentially see that would be unlawful?
You're exactly right. What most companies want to do, what most businesses want to do is dominate. The way you dominate is by bringing superior products to the market as quickly as you can and servicing your customers. When you do that successfully, I often tell my clients, congratulations, you are now in the crosshairs of the federal government. So what happens is DOJ is very focused on, and the Federal Trade Commission as well, monopolists who have used their monopoly power illegally. So there are many legal monopolies. A patent is an example, a trademark is an example. But when you use that power illegally, then the federal regulators step in. NVIDIA is incredibly acquisitive. In 2024, it had many acquisitions. It did extremely well in the market, and that has brought in a lot of ire from federal regulators.
A lot of ire just because there's more demand for the chips than they can supply at this point, or based on who they're giving those chips to? I'm not sure I entirely understand.
So I came out of the DOJ Antitrust Division in a section that looked at things that were federally regulated across computers and processing chips. We have a consolidation in artificial intelligence. The government under the Biden administration on both the FTC and DOJ have announced that consolidation in chip makers is concerning because they don't want only certain companies to control how many chips go out. NVIDIA has been accused of selectively providing their product quicker to market to certain consumers of their products. The government doesn't want that. They want an equal distribution, and now the FTC and DOJ have divided up the AI industry. So DOJ is looking at NVIDIA, and the FTC is looking at 2 other acquisitions. And the reason why is because they don't want consolidation into certain companies, because then those companies could restrict supply, which would increase demand. They could drop prices, so they could block out their competitors and then raise prices. Both of those are critically illegal, actually criminally illegal under the antitrust laws.
But simply, I mean, Jensen Huang in the past, the CEO of NVIDIA, has said that he wants to give the chips to places where they're going to most quickly be used and put into place. You're saying that's part of the problem, actually, that what they should be doing is distributing it more evenly, so that even if there's not enough to go around, that means what? That you get, if you ask for 100 chips, you should only get 20 so that we can give more to other outlets?
Right, so that's a great question. This is where business acumen, what the CEO of NVIDIA is saying, meets a regulatory review. So it just depends. It depends if NVIDIA's story about how they're selecting their customers and consumers, if that proves true to the government. You can discriminate against certain customers in advantage of other customers under a very specific set of facts. If NVIDIA can prove that what they're doing is beneficial for customers, then they win that argument. If they cannot prove that, then they lose that argument. And that is the battle of the experts, both the experts internally at the DOJ, who are economists, external experts that DOJ will hire, and of course NVIDIA's counsel team and their own experts. They have to prove that in a court of law. Right now, NVIDIA, because it's going through yet another acquisition, has to and has made a public filing under the Hart-Scott-Rodino Act that goes to DOJ and FTC. DOJ is now the regulator who's going to be looking at that acquisition. They can, of course, always send a civil investigative demand, basically a document and deposition subpoena to any company that's regulated. When NVIDIA goes for another acquisition, that actually opens up DOJ's opportunity to look even deeper into the company before approving that acquisition to go forward. That's the position that NVIDIA is in. So DOJ...
Let me just back this up one moment. I'm not sure I understand. If they can prove that it's good for customers, for certain customers, or it has to be good for all customers, because I'm sure if you're asking the big guys who are getting all these chips, they're saying it's great for us. If you look at other customers who aren't getting the chips they want, they're going to say it's bad for us. And some have even supposed that this is coming because some of those customers who aren't getting as many chips as they want are complaining. Does that sound like the type of situation where it would pass muster or would not pass muster?
You are right. Usually it's the customers who are not getting the supply that they demand that go to DOJ and the regulators and complain. DOJ will take a look at what those customers are saying versus what NVIDIA is saying. And of course, NVIDIA will bring to bear all of its own customers who are very satisfied with the product, very satisfied with the supply. And then DOJ will balance what is happening across the market for AI chips. They will look at the market entirely, and then they will decide whether it is permissible under the federal antitrust laws to discriminate against certain customers in favor of others. Of
What
course,
if all the customers are mad because none of them can get as many as they want?
well, then
I mean, that's just supply and demand.
100%. And that is where business and regulatory regime under our antitrust laws are always going to be at loggerheads.
Then if I was NVIDIA, I would not be looking for customers who were happy. I'd be saying, none of my customers are happy. This is just the situation. There's so much demand, I can't please everybody.
And that's part of it too. But if those customers who are happy are very important to the national security of the United States, very important in what they do for our economy, then their voice will outweigh the small customers who aren't getting what they want. And
So the solution becomes, okay, maybe it's not fair, but it is in the interest of national security, and that's how you win and get around that. Okay. It's pretty complicated stuff. It sounds like there's a lot at play and a lot that can yet be interpreted. What would the solution be if there was some sort of action brought?
The solution is always divestitures. So the government will look at NVIDIA, they will look at their customers, and they will say, okay, you want this acquisition? Well, you have to divest these other business units. You have to sell to your competitors certain capabilities. Or a divestiture can be that NVIDIA would license something to somebody else, to a competitor. So a competitor could then be able to produce the same thing that NVIDIA could produce. So think about pharmaceuticals. You have patented pharmaceuticals, and then you have generics. When you have a patent, you have a legal monopoly for a certain term of years. When you come out of that patent, you can then license to make generics. That could be a workout. But this is a wonderful place for legal creativity, right? These are lawyer arguments and economic arguments. And most lawyers who do this work have an economics background. It's all about the market. It's all about what's best for U.S. consumers, not U.S. manufacturing, U.S. consumers. So that's the lens the government looks at.
All right, Ferdos, thank you for walking us through it.
It is just past 7 a.m., 7:02 on the East Coast. You're watching Squawk Box right here on CNBC. I'm Andrew Ross Sorkin, along with Phil Kern and Becky Quick. Got a lot going on this Wednesday morning hump day. Today's top stories include this. Snapchat is going to be soon starting to test sponsored ads right next to the chat threads. Snap CEO Evan Spiegel saying that sponsored snaps with brands will appear as unread messages in the main chat tab. It's the first time that they have tried to sell advertising against that part of the app. Meantime, DuPont Steel offering a new olive branch to critics of its $15 billion deal to buy U.S. Steel, including Vice President Harris, who rallied against the merger over the weekend. Former President Trump also against that merger. U.S. citizens and that the, quote, core senior management members of the company would be American. Meantime, the CEO of U.S. Steel warning that if they don't do this deal, there'll be plant closures and the company could move its headquarters from Pittsburgh if the deal falls through. We will try to find out what Vice President Harris and former President Trump think about all of this. Meantime, we're watching crude prices climbing back above now $71 per barrel on a new report that OPEC Plus could delay production cuts that were planned for next month.
All right, let's take a look at the futures this morning after that big sell-off yesterday. Not really a huge downdraft this morning, but also not a rebound. Dow futures right now off by about 90 points. S&P futures down by 25, and the NASDAQ, which was down by close to 3.3% yesterday, down another 155 points this morning. Right now, we want to check in with Dom Chu and look at this morning's pre-market movers. And Dom, what's happening under the surface here?
It's a lot of earnings reports, Becky, right now. We'll start things off with some of the late-breaking earnings news this morning. We're going to start with shares of Hormel, which are down by about roughly 4.5% pre-market. The packaged food company behind its namesake chili brands, also other brands like Applegate Farms, Spam, Skippy Peanut Butter, reported what appears to be mixed results compared to consensus as investors look towards comparability to those analyst estimates. But the initial look is a slight beat on earnings with a miss on sales. Hormel also narrowed its expected full-year profit range with a higher low end, but then a lower top end. So those revised forecasts are due in part to lower than expected commodities markets, as well as disruptions to a couple of key facilities in Virginia and Nebraska. For Hormel, those shares are down roughly 4.5% to 5%. Now let's check on shares of Zscaler. They're down about roughly, call it 16% right now after the cybersecurity company issued a weaker than expected profit outlook. They did post a beat on the top and bottom lines, with revenue rising 30% from a year ago, but it was not enough to boost the stock, which is now down about 25% or so on a year-to-date basis. And then let's move on to shares of GitLab. Those shares are actually up big, around 13.5 to 14%, after the software development platform company reported a beat on profits and revenues for the quarter. They also raised their outlook as more businesses work to integrate AI and security protections into their technology. Those shares still at about 19% so far year to date, but GitLab bucking the trend with regard to this overall market downturn, Becky. I'll send things back over to you guys.
Hey, Don, I hate to throw this at you, but can you show us maybe the semiconductors ETF or something, just how things are shaping up this morning after that rough day yesterday for all these sectors?
If we can get NVIDIA, SMH, all those other ones up there. The VanEck Vector Semiconductor ETF is right now down about 1.5% pre-market. The curious part about this is whether or not this kind of downtrend that we've seen over the medium term, over the last couple of months, remains in place. Whether or not we do kind of approach the lows that we saw back earlier this summer remains to kind of be seen. But if you kind of look at the moving averages here, there is a little bit of weakening or relative strength momentum declines with regard to VanEck Vector Semiconductor ETF. So this one, along with NVIDIA, Broadcom, Qualcomm, many of the other names yesterday were among the biggest laggards in terms of the overall drag on the NASDAQ. If you look at NVIDIA overall, it's still down 2% right now pre-market. It's going to be a big driver of sentiment because many of those names kind of fall in line with the NVIDIA trade, even if they are not exposed directly as much to that so-called AI narrative that we've seen so far. But that semiconductor ETF, Becky, is so key because a lot of traders do kind of look at that chip trade as maybe the leading side of things with regard to the overall tech trade. So it's going to be kind of key.
You're so good, Dom. I knew I could throw anything at you without any heads up, and you would have the answers.
Well, we've been covering this so much, Becky. You and I both know it, right? So
Thank you.
You got it.
We'll see you later, Dom.
Okay, meantime, quarterly results are just out from Dick's Sporting Goods. Earnings of $4.37 per share, beating estimates of $3.83. Revenue also coming in above estimates, and comp sales rising 4.5%. It beat expectations of 3.6%. The company raising its full-year guidance for earnings and comp sales as well. Coming up on the other side of this, futures extending losses after the worst day for the S&P since early August. We're going to talk about the market sell-off right after the break and what it means and where things may be headed. Plus, Sam Altman's plans to build out AI infrastructure around the world apparently moving closer to reality. Early OpenAI investor Jeff Lewis is going to come on to talk to us about that and so many other issues. Squawk Box returning after this.
futures at this hour in the red. Modest declines at this point, relatively speaking, to yesterday. Dow futures down another 70 points. S&P futures down by 21. The NASDAQ off by 133. Let's bring in Ed Yardeni. He's the president of Yardeni Research. And Ed, let me just ask you, it's September, it's back to school, it's back to work, and the market vomited a little bit yesterday. How are you feeling this morning?
Well, that's a good expression for what happened yesterday, absolutely. And it's kind of reminiscent also of what happened at the beginning of August. We're seeing quite a bit of choppiness going on in the market here. I think it may continue until the elections, and then I think we'll resume to new record highs. Of course, much will depend on who wins, and I'm rooting
I was
for
going to
gridlock.
say, does it matter who wins?
Well, I'm rooting for gridlock, so I think it matters if we get a sweep of the Democrats or a sweep of the Republicans. I don't think the market's going to look forward to those kind of regimes. I think the market much more prefers gridlock. So I'm betting on gridlock. I think gridlock will win. And if that's the case, then I think the market will move higher simply because the economy is doing fine, notwithstanding the tightening of monetary policy over the past couple of years, all the geopolitical and domestic political stress. But all in all, the economy is doing fine.
What happened yesterday? We keep talking about this DOJ investigation into NVIDIA, but the sell-off took place before that was reported by Bloomberg. So what really kicked things off? What are the underlying concerns? And I'm assuming it's about a lot more than just the election, because it doesn't seem like it was an election sort of issue that played out yesterday.
Well, it really didn't make much sense that all of a sudden the market started off with such a decline. Becky, I hate to say this, but it sure seems like there might have been a leak. The ferociousness of which the market took a dive suggested that somebody had figured out that something could come out in terms of bad news for the semiconductors, particularly for NVIDIA. And then at 10 o'clock, we had the Purchasing Managers Index come out, and that kind of brought in all the hard landers out there, that here's another example of a hard landing. The Purchasing Managers Survey of manufacturing is turning out to be another useless, misleading indicator of economic activities, kind of like a leading indicator, which hasn't been very useful. The reality is real GDP is an all-time record high. And by the way, it's an all-time record high in both services and goods.
Let me ask one more question on NVIDIA, and then I'll let this go.
Sure.
Markets clearly aren't always rational, don't always make sense, especially in the short term.
Sure.
If NVIDIA, and if all these stocks were selling off, all the semiconductors were selling off because of the DOJ, wouldn't the DOJ investigation be bad news potentially for NVIDIA, but potentially good news for its competitors?
You would think so, but there's a lot of kind of internal dynamics to the market that have nothing to do with fundamentals. I think we saw that in August where we had the carry trade unwind, and I think this is the semiconductor unwind. Just, the knee-jerk reaction was, if it's bad for NVIDIA, it's going to be bad for everybody else. But you're absolutely right. It shouldn't affect the rest of the market.
We had Ed, we had someone on yesterday that was talking about some of the other internal dynamics of the market, that even though the VIX came down, that there was a lot of hedging still going on, and September's not a great month typically, and that was a weird growth scare that we had 6 weeks ago. It came and passed so quickly. It was pretty significant. The VIX got up over 50. So there was something to it that all the Fed hikes, the lag, we may have underestimated how much bite that those higher rates had on everything. So Friday's the jobs number. I think it's angst about the jobs number. Now, we had one person say that they're worried that there could be some hot inflation data. Maybe it could be both, and that's the worst of both worlds. That maybe things still stay a little bit hot in terms of inflation, or at least we don't go down. We're up 20% in the last couple of years overall with prices. So that's still tough. And what if we get a bad jobs number on Friday? The growth concerns will be front and center again, and that could really, it would be a recession fear at that point.
Well, I've been dealing with this recession scare since 2022. I've been arguing that we're not going to have a recession, that we've been having.
Ever again?
No. Eventually, I just wrote a piece, said someday there will be a recession. But the data still looks unbalanced to show that the economy is doing just fine. And with the Fed ready to lower interest rates, that's going to help the mortgage market. That's going to help the housing market.
Right.
Car sales are hanging in there really well. But you're right. I mean, people are looking for reasons to be nervous. The market's had a heck of a run. Valuations are not exactly cheap. Warren Buffett's sold some stock.
That's something.
And it's September. You know, September is the market's Halloween month.
So, Ed, what would make you think, okay, this is a time to jump back in? If you're convinced that we're going to end the year on new highs,
Yeah.
what's the point that, okay, everybody back in the water?
Well, I don't think anybody really got out of the water yesterday. Maybe some traders got out, but the degree to which the market went down didn't really give too many individual investors or institutional investors any time to think about it and conclude, let's get out. Rather than thinking about getting back in, I'm just staying in. I've been bullish on the market, and I don't see any reason to jump out of it.
Okay. Oh, wait, did you say 1 minute? Or did you say get out of this?
Sure.
Can I ask him another question?
Absolutely.
Let me just ask you about oil prices, because
Yeah.
we're back above $70, just barely, but that below 70 that we saw before, even 71 at this point, raises lots of questions about, is this more than just concerns about a China slowdown? Is this concerns about a China slowdown here with the economy as well?
I think it's to a large extent the China slowdown. You know, over the weekend, I mean, if you're looking for something fundamental that happened over the weekend, and maybe it wasn't a leak after all, perhaps the market kind of knee-jerk sold off on the bad PMI, Manufacturing Purchasing Managers Index, coming out of China. But who doesn't know that China's weak? And it wasn't any weaker than it's been for a while. On the other hand, we've also had some back and forth on whether OPEC Plus is about to increase supply or not. And this morning it's like, well, maybe they're not after all. I mean, it's certainly not in their interest to increase supply in an environment where the market's quite weak for them. But it's good for the economy. It keeps inflation down. Oil is the key leading indicator of inflation, and I think this is great for the economy.
Ed, thanks a lot. We'll see you soon.
Thank you. Sure.
And coming up next, the market sell-off hitting one of the pockets of the financial industry harder than the others. Leslie Picker has that story next. And then later, tennis coach to the stars. First, they got to be good tennis players. Then maybe you can be a star. But Brad Gilbert joins us to discuss the business of tennis, and he loves talking about stocks. Investing for decades. Squawk Box will be right back.
Time now for today's Aflac trivia question. Since starting production in 1953, what is the only year the Corvette wasn't produced for the public? The answer when Squawk Box returns. Peacock. And now the answer to today's Aflac trivia question. Since starting production in 1953, what is the only year the Corvette wasn't produced for the public? The answer, 1983. The only known 1983 Corvette is on display at the National Corvette Museum.
Welcome back to Squawk Box. Within the financial sector, yesterday's market sell-off hitting one pocket of the bank industry harder than others, those deriving more revenue from investment banking. Leslie Picker joins us with more on that this morning. Good morning.
Hey, good morning, Andrew. That's right. Amid slowdown fears, the market is selling off capital market sensitive stocks more than others. Goldman Sachs and Morgan Stanley, two firms that derive a substantial amount of revenue from investment banking and trading, each declined more than 4% yesterday. Boutique firms, which serve as in many cases even more of a pure play on the capital markets, such as Jefferies, Evercore, Perella Weinberg, Moelis, and PJT, had a similar fate in Tuesday's trading. Now contrast that with mega banks with more sizable consumer and lending practices, which held up a bit better. JP Morgan did slip 2%, but also got hit with that downgrade by Deutsche Bank from a buy to a hold. Bank of America and Wells Fargo were only fractionally lower yesterday. Deutsche Bank did upgrade those two to buys as well, and Citi was less than 2% lower in Tuesday's trading. But regional banks too, very minimal investment banking activity. Those were down a little over 1%. Now the recovery story in deal making and securities issuance really appears to be a fragile one, and any hint that the economy may miss its soft landing could delay transactions until C-suites have more confidence. Therefore, uncertainty about the economic picture can spook stocks with more exposure to investment banking, especially since over the summer, most of them were actually bid up on the hopes of a recovery in this market, Andrew.
Leslie, it's an interesting one, and I just wonder whether these stocks are going to come back. I mean, obviously, hopefully they'll come back at some point. The question is how tied they are really to this issue. You think it's overdone?
I mean, we'll see in the next earnings report. So it's interesting, in the second quarter earnings, a lot of the companies with exposure to investment banking said pipelines looked pretty good. That's essentially kind of what you don't see on the surface of deal activity bubbling below. That ultimately takes a while to actually translate into revenue, especially as it pertains to M&A, because you have to wait until those deals actually close to book them as revenue. Issuance is a little bit of a different story, but so far this year, investment banking has really been held up by debt capital markets. A lot of that refinancing activity getting pushed to the first half of the year. So the second half of the year has been a little bit more of a question mark. It looks like the IPO calendar is going to remain dormant for most of the year, most of the rest of the year, as well as M&A, which still is a bit of a question mark.
Leslie Picker, thank you. Nice to see you.
When we come back, Shein and Temu under investigation. We have the details right after the break. And as we head to that break right now, let's take a look at crypto prices this morning. Down across the board, Bitcoin off by about 2.5% to 56,515. Squawk Box will be right back.
Welcome back to Squawk Box. DirecTV offering customers a $20 refund for the loss of ESPN, ABC, and other channels owned by Disney. DirecTV subscribers lost access on Sunday when a distribution agreement with Disney expired. Now, the signals were blacked out. DirecTV saying it pays Disney about $2 billion a year for its channels. It's got about 11 million customers, making one of the largest pay TV providers. Meantime, a pair of commissioners at the Consumer Product Safety Commission, they're calling on the agency now to investigate Shein and Temu. This after deadly baby and toddler products were sold on both of their websites. They want the agency to examine how those retailers comply with U.S. rules and handle relationships with third-party sellers. Both have come under scrutiny for the quality of the items that they sell.
There's even been a Saturday Night Live skit on this already, talking about, you know, they called it some combination of those two names when they did it, but it was basically, you know, you wear this stuff, it's cheap, it's poison. It was funnier than I'm making it sound right now.
There's a movie out called Saturday Night. It premiered out in Telluride. The last 90 minutes of the very first show.
Right.
Yeah, it's pretty good. Pretty good.
Oh.
What was really going on? Lorne Michaels. The guy didn't really remind me of Lorne Michaels very much.
But he was supposed to be the guy.
Yeah, the guy that actually looked kind of like Chevy Chase, John Belushi. They're all.
Oh, the same. Like,
They're actors playing those people, but you know, a lot of the Generation Z people out there, they're just
they didn't know what they were watching.
Had no idea. That's the way it will happen to you.
Wait.
It has.
I do want to say one thing that's very important.
Oh, the audio.
The audio. We're getting
We're
complaints
trying to
about the
figure
audio.
out what's going on with it.
We don't know what's going on. We're trying to figure it out. We are getting complaints about it. Alex says it's fine.
Yeah, don't switch. Don't switch for that reason. I'll give you a different reason. Coming up, we're going to talk about Sam Altman's big investment plans for OpenAI with Jeff Lewis, plus much more on NVIDIA. That's how it's pronounced. Write it down like it's got an E in front of it. NVIDIA. If you hear an analyst call it NVIDIA, don't listen to him. Anyway, lower again this morning after a more than 9%, and it's Nevada, by the way, too. More than a 9% drop yesterday. The company wiping out, or at least the market cap itself went down on paper, $279 billion. We'll be right back.
Squawk Box.
Welcome back to Squawk Box. ChatGPT maker OpenAI flirting with a $100 billion valuation in its funding talks with investors. The company growing up, adding board members, experts as the AI landscape gets more competitive and draws more scrutiny from regulators. Joining us right now to talk about this and so many other issues, Jeff Lewis, founder of Bedrock Capital, is also an investor in OpenAI. Good morning to you. It's nice to see you. Hope you had a great summer. Curious, just your reaction to sort of some of the big grand plans that we've been hearing that have been reported about in terms of what OpenAI and Sam are trying to do, potentially outside of OpenAI even, around some of the infrastructure issues in this space.
Certainly. Well, good to see you, Andrew. Thanks for having me. I mean, obviously, as an early investor here at Bedrock, we're very enthusiastic about what's been reported. I can't share too much on the specifics given we're under NDA, but it has been publicly reported that the lead of this prospective round is another early investor in the company, Thrive Capital, which is a firm we think very highly of, and the sort of infrastructure efforts we're very enthusiastic about. Ultimately, AI is going to need a tremendous amount of energy, going to need a tremendous amount of data center infrastructure, and we think there's a huge opportunity in the United States and with some of our allies. So very excited how things are tracking there.
There's been a lot of speculation about ultimately whether OpenAI will have to go to public to provide liquidity and an exit opportunity for folks like yourself. But if it's to do that, it may have to change its structure, I would imagine, in some way, given that it is technically considered a not-for-profit.
Yeah, I imagine they're going to work that out. It might get worked out with this forthcoming financing round. It might get worked out down the line. You know, these companies in practice have been staying private much longer than historically. So something like SpaceX has been private for, at this point, 22, coming up 23 years. They have a quarterly tender offer process for early employees and investors where if you want to sell your shares, you can do that in the private markets. Stripe has been private for, I think north of 12, 13 years at this point. So in practice, you can get liquidity as an investor and employee in the private markets. I think they've really evolved and grown. And then ultimately, I imagine that OpenAI structure is gonna continue to evolve. It's sort of a scenario where, in order to really pursue the research, they had to create a commercially viable business, and they did that exceeding anyone's wildest expectations. So
Jeff, if in fact the company turns into a for-profit entity that ultimately goes public, what do you think someone like an Elon Musk or even some of the other early funders, I'm going to call them funders of the company, or the not-for-profit were, at least under the guise that it was going to be a not-for-profit, should they get an equity stake in this thing? Should they get huge, should there be a massive payoff for them or not?
Well, I think several of them actually invested in the for-profit entity. So several of those early funders of the nonprofit then came back in and invested in the for-profit subsidiary. Elon was not one of those folks who did that. I think ultimately that'd be a question maybe for Elon's tax advisors on, does he want to get a stake based on this nonprofit donation, and what does that mean? But I think that opens up a whole host of tax questions. There is still the nonprofit entity. I'm not an expert on that stuff at all, but yeah, I would check with his tax advisors and his lawyers.
More broadly, we've seen a little bit of a sell-off in the market. I should say a lot of a sell-off in the market just in the last day on the back. I don't want to say on the back of the news around NVIDIA, but maybe on the back of the news. Obviously, the news came out after the market closed, but maybe there was rumors in the marketplace around this DOJ investigation. What is your take on whether NVIDIA is a monopoly?
Man, it's a really hard question. I think the DOJ Google case to me makes a lot of sense. It's sort of very narrowly focused on this violation of the Sherman Act, which was sort of this phenomenal Republican senator from Ohio, Senator Sherman, came up with in 1980, where basically they have the superior product with search, clearly a natural monopoly, and then they took it a few degrees too far through some of these partnerships with device manufacturers. And so it was that narrow point too where they extended the monopoly power beyond the product through the partnerships that really got them caught in the crosses with DOJ. So big fan of that Google case. I think the DOJ is right to have ruled the way they did. And
what do you think the answer should be? What would be your remedy on the Google case?
Very hard to do. I think the government in practice is way too incompetent to actually effectively break anything up. So I don't know what the solution is, but I do think that that most likely there should be some major punitive action against Google. And then NVIDIA to me is just a much less clear story on whether there's been true anti-competitive behavior there. I haven't been able to see it from my observer's vantage point.
As an investor in the AI space right now, and we're going to hear Apple, coming out with its new phone on Monday, are we at an inflection point? Do you think that there's going to be a whole new sort of super cycle when it comes to either hardware or software in the next year as a function of this, or do you think it's going to take a lot longer?
Feels like it's going to just take decades or many years. It's not like there's going to be a 2025 super cycle, and so I'd be very skeptical of anything with AI in the name that's not OpenAI. Maybe X.AI as well. I think what Elon's doing is pretty cool also, but I'd be very skeptical broadly.
Anthropic? Where are you on Anthropic?
Well, they've certainly gotten a lot of traction. Certainly, they're the number 2 sort of standalone private markets foundation model player. And then I do think there is this question that folks should be looking into around, we sort of have this movement in Silicon Valley called effective altruism, where the basic idea is there's this set of entrepreneurs, this set of companies where their vision is they want to make all the money in the world and then use that money to quote unquote save the world. And sort of the standard bearer for effective altruism till 2021 was Sam Bankman-Fried. Of course, he's now in jail for the FTX fraud. Today's standard bearer is Dario Amodei of Anthropic. And so I think we want to really look into the effective altruism, Anthropic link, and what exactly is going on there. Google, of course, second largest investor in Anthropic. Maybe the DOJ should take a look at what's going on there as well. So quite skeptical personally of effective altruism. You want to make all the money in the world to save the world. That scares me. That's a really scary thought to me. And that's sort of the Anthropic ethos. So I'm alarmed by that. But they're certainly a formidable competitor at this point to OpenAI.
Jeff, there's a lot underneath that you just threw out. I wish we had more time to get into it all. I'm going to ask you to come on back so we can get into it all, and I appreciate you being with us this morning. Thank you.
Happy to. Be well.
You bet.
Coming up this morning, tennis legend Brad Gilbert talks tennis and stocks. That's right after this break. And at the top of the hour, we'll talk technicals with Katie Stockton. Squawk Box will be right back.
Insurance.
Okay, let's talk tennis. The latest coming out of the U.S. Open tennis tournament, and investments also from Brad Gilbert, former pro tennis player, now tennis coach. You've been a longtime friend of the show. You've been. What's your longest holding position? You've been Microsoft longer than
still Microsoft. You know, I tell my kids it's the modern bank, because if you put your money in the bank, you get 0 interest. At least if you put your money in Microsoft, you're doing okay. I'd like to see their dividends be a little more than 3%, though.
Yeah, over time, Microsoft is.
That's the way to go, at least for the moment.
We'll get back to stocks in a little while. It's got to have, for just so you know, market cap of over $1 billion if you're going to, and more than, I mean, you've got some stocks that you've come over for that have 12 letters in the symbol, and you have to look up something. It's not even the pink pages, it's the chartreuse pages where you find this dog crap.
No, back in the day, you used to have to look in the newspaper to see it, but now you go to your app, and you know things are a little bit easier.
$1 billion, not $1 billion yuan, not $1 billion renminbi, none of that. All right, so let's talk about. I guess we'll talk about Coco. I've known you long enough. I used to sit in the box with you, with Andre, with Andy. I'm surprised you have any fingernails. You are more nervous than the players when you're doing it. No,
okay. Obviously, you hurt for your players. You want the best, and sometimes things don't go the way you want. But I try not to get too elated when my player's doing well, and then you try not to get too down. Sometimes they catch you with your head down a little bit. It didn't go as well here as we'd like, but you know what? The sun comes up the next day, and then you got to be positive, and hopefully things will get better.
It's relationships don't last forever a lot of times. Is this, how's it going with Coco right now, would you say?
It's been a good 14 months. She's accomplished a lot, and the great thing is she has huge upside at 20. And if she was a stock, you'd still put a buy rating on her. She's a great kid. She works hard, and good things will happen for her. Unfortunately, it wasn't a great tournament for her, but the player that beat her, Navarro, is playing great tennis. She's in the semis. Who knows? Maybe she got a legitimate shot to win it. We still got Pagula left. And on the men's side, this is the first All-American semi since 2005. Andre Agassi beat Robbie Ginipri, so we got Tiafoe versus Fritz. It'll be the first time an American man is in the Slam final since 2009.
Do you think the Olympics was a problem for the Open this year?
The Olympics?
The Olympics. The fact that all of these guys, by the way, who were all the medal winners, are basically all out of the Open.
So every 4 years.
And I just wonder whether you think they got tired. I don't know what happened.
No, but every 4 years we have the same issue. And obviously the toughest part is the switching of the surface. We went from grass at Wimbledon back to, well, first we went from the clay at Roland Garros, back to grass, back to clay, and the quick turnaround. So normally every 4 years, the Olympics is not very far away from the U.S. Open. The changing of the surface made it a little more difficult. Listen, what about in 2021? We still called it the 20 Olympics. We came from Tokyo, but it was still on the same surface, same as Brazil in 2016. So back to 2028, it will be coming from LA, the same surface. I think that was the toughest thing, but is what it is.
We were just talking about inflation, and one of the things that has been incredibly inflationary are the drinks that they're serving out at the U.S. Open. The Honey Deuces, they're cool-looking drinks, but I saw something about how they're $23 a drink at this point, and that has far outpaced inflation over the last.
Oh, it's probably $10 for a water. Actually, though, I heard during the Qualies Week, which is the fan week, they drew 200,000 people, and it's free for everybody to come. But they did $9 million in sales in the Honeydeuce, and prize money for the Qualies was $7.5 million. I think it's only up $1 from a year before. But if you go to anything here in New York or LA, heck, I went to a Warrior Laker game and a beer was $18. Yeah. That was last year. So it's every sporting event.
It is a pretty drink.
Yeah. So if you're gonna go, it's gonna cost you that, But they're gonna draw well over 1 million fans for the tournament. The fan week was unbelievable, And every day, the first week, they were getting over 75,000 record crowd. So whatever the prices are, it's not affecting people.
Who's going to take the mantle? I guess Alcaraz is a heir apparent, but there is a changing of the guard that probably has never been seen before.
Well, there's no doubt. I mean, in everything, nobody beats Father Time. Joker's done the most amazing job.
He's still going, yeah.
I mean, Rafa's at the end. We've lost Fed. Joker's, 37. He's on the back nine. I think he'll still be good.
Probably he's on 16. At 16, he just teed off.
You know what? He's probably at 15 and holding.
Yeah.
But, Francis said something really, kind of what other players think. He goes, normally when you're in the quarters, and if you were playing Rafa, Fed, or Joker, you're looking at flights home. And I think guys now, for the first time, have a different belief. Obviously, Sinner, who's still in, plays Medvedev tonight, is the favorite. Alcaraz has already won 4 majors at 21. But I do feel like it's been 21 years, since Roddick won. And that's the question the Americans always get asked. We have 5 now in the top 20. I think they're playing with a lot more belief, so it wouldn't shock me if one of the Americans won. Sinner is still the favorite on the men's side, and Swiatek is the favorite on the women's side. So both number ones are still around.
We're talking about the health of the Open, the economic health of the Open. I'm curious about what you think of the health of tennis broadly, because there's been a big question about the health of tennis, how many people are even playing it. By the way, Nike, I mean, I know that they have their athletes, but they hardly make even tennis sneakers anymore. I mean, literally, there's been, in terms of the underinvestment in tennis, and if it's underinvestment or divestment in tennis, it's not the way it used to be. And the question is, why is that? It's because there's less people playing.
You know what? I'll spin it a different way.
Okay.
I've heard,
and I love it, by the way. I play every weekend. So.
I've been playing tennis since I've been 3. I'm 63 years young. And if you play tennis, you live 9.5 years longer. And so tennis is a game forever. Whenever you pick it up, it's always there for you. People are saying, oh, pickleball's taking over. Pickleball's a great game, but there's room for everything. There's more people playing tennis now than ever. Obviously, it needs to be a little more accessible at every, from schools to more public parks. But I think tennis is in a healthy spot. And the great thing about tennis, if you learn to play tennis or just play a little bit in high school or socially, it helps you in all avenues. It helps you in business, it helps you in life. And if you join a tennis club, there's a really good chance that the circle that you're with your tennis friends is the circle that you'll surround yourself for the rest of your life. It's a beautiful thing about tennis. So I'm not worried about the health of it. I'm not worried about what pickle's doing. We should be worried about what tennis is doing, and I think tennis is in a great position to succeed and do better.
All right. Telling us we got to stop. You don't like the Fed, but I'm not going to let you go off on the Fed, right?
No, he's got to go. I would, listen, if you got a company, you don't have somebody run a company that doesn't have any experience. How do we keep putting in scholars to be the Fed? Roger Federer is here. I'd rather have him. But there's no chance I'm letting somebody be the Fed who's a scholar that's never run a company. That's unacceptable. So that gets on my nerves.
Well, make him president.
No, can't have that. Don't get me started on that. But
I'd like to. No, I'm not going to.
No, we don't have to talk politics.
All right, man. Good to have you on.
I appreciate it. And come to the tennis.
I would like to. It's later this year. Usually it's almost over usually by.
But we're on the back. Listen, things are getting exciting now.
Yeah.
Now's the time to be there.
Okay. Thanks.
Thank you.
Squawkbox will be right back.
Squawk Lift just announcing a restructuring plan. It involves disposals of certain assets related to bike and scooter operations and termination of about 1% of the workforce. The company expected to incur a $34 to $46 million restructuring and related charge. We'll dig into more of that news as we get it.
The tech sector is coming off of its worst day since September 2022, dragged lower by everything from the Mag 7 to semiconductor stocks. It was really the semiconductor stocks that took it on the nose. Joining us right now with his outlook for the sector and his Squawk picks is Paul Meeks. He's Harvest Portfolio Management CIO. And Paul, how are you feeling about this in the aftermath?
So what I think is going to happen is we'll have a repeat of what happened only a month ago. And so if you take a look at the bellwether stock, NVIDIA, a month ago it did close at about 98, 99, even got lower than that in early August in the intraday move. And so we'll see how it goes. I imagine that we'll retest. And if we successfully retest that, then I'd probably go in and become a aggressive buyer again. Because in the last month or so, we had their quarterly earnings report and we had some other data. And of course, the company is going to slow a little bit, but it's still growing at a really good rate. The outlook is very bright. And I think the only thing that's really new that changes the thesis, I don't really think it changes it at all, is the subpoena that they've received from the Department of Justice, which is typical in the technology sector when angry competitors start complaining to the government. So I actually think it's a pretty good buying opportunity after with the smoke clears here, and I hope it's fairly soon. Today it looks like the stock's going to open up at 106. That means it's trading at 29 times next year's earnings for 42% earnings growth, which is a nice discount, whereas the S&P 500 is trading at 20 plus times earnings. And it's probably trading at a PEG ratio of about 3 times, and the PEG ratio for NVIDIA is about 60-70%. So I actually think it's quite attractive.
That's what I'm trying to figure. You would buy it today, or you would wait? You said till the smoke clears, or until it tests that the low from before. Because I mean, if you're really bullish on it, it's 10% cheaper than it was yesterday.
Yeah. So this is what I would do. This is what I am doing. For clients where I hold it, I've held it for years, so I'm not adding to it. But if fresh money comes in today, I think you have to get started. You can't necessarily worry in the short term where it goes, but I'm very comfortable, 110% comfortable, that if you bought it today, a year from now, you'd feel great. Of course, in the near term, it could go lower, but that's always the risk.
Sure. You're also really bullish on Micron. Why?
Yeah, I like Micron, and only 2 other companies. The South Koreans dominate in high bandwidth memory, and high bandwidth memory is absolutely a key building block for AI infrastructure. They don't have their quarterly announcement until the end of September, so I'm always a little bit wary, particularly in this environment, of buying a stock ahead of company news, because what we've seen in the last couple of weeks and months is companies report good news on their quarter. They report pretty positive guidance, and the stocks still go down. It's just a squirrely market right now. But I like Micron very much, and those would probably be my 2, NVIDIA and Micron, key semiconductor plays.
Well, I love that you are so decisive and so sure of what you're seeing here. It really is a pleasure talking to you. Thank you.
Oh, always my pleasure to be on the program. I love you guys.
Okay, we'll see you soon. It is just after 8 a.m. on the East Coast, and you are watching Squawk Box right here on CNBC. I'm Becky Quick, along with Joe Kernan and Andrew Ross Sorkin. Among today's top stories, Democratic presidential nominee Kamala Harris getting ready to unveil a $50,000 tax deduction proposal for small business startup expenses. That's according to a campaign official who spoke to CNBC, and that would be up from the current expense deduction of $5,000. Space-based internet company Starlink says that it will block the X social media platform in Brazil. Elon Musk owns both businesses. X had earlier defied orders from Brazil's Supreme Court and failed to pay fines. And the CEO of U.S. Steel tells the Wall Street Journal that the company will close mills and probably move its headquarters out of Pittsburgh if its proposed sale to Japan's Nippon Steel falls through. Separately, Nippon is saying that if the sale is completed, core senior management and a majority of U.S. Steel board members will be U.S. citizens. They've also said they'd spend about $1.7 billion investing in some of these mills that could be threatened to be closed.
We were talking about it yesterday, Andrew, and we'll have Ro Khan on later today. Great piece. And we, it's really kumbaya. We both
You guys agree on this?
Yeah, we both agree that it should not be blocked. And the journal.
I agree on that too.
Great piece today.
I didn't watch what you guys said.
We'll admit that the competition for the dumbest economic policy is fierce these days. With price controls on food, 10% tariffs, national rent control, so they go over the laundry list of things we talk about. But this wins the prize, according to the journal. If it's Cleveland Cliffs, 100% of the capacity in this country will be controlled by one company. But it's a union shop, so that's why the Biden.
Look, I just even look at this. If the answer is that Nippon is going to invest in the steel mills, and by the way, I grew up right outside one of these steel mills, and my dad worked in it one summer. My uncles worked there. If the answer is you're not going to have a steel mill anymore because nobody will invest in it, that's a bad thing.
Yeah. Do we want people? Leastman sent me something yesterday. It's bad. Well, we need free-flowing capital.
You need Japan to buy stuff.
And we need to be able to go buy stuff over there if it makes sense. Otherwise,
and by the way,
it can be a bad thing for the dollar if we
it would be
get
owned
that
by
protection.
the American division of Nippon Steel that's been based here in the United States and forced out with this.
It's just bad when both sides just demagogue it for the wrong reasons, and us poor schleps in the public, where we end up holding the bag for the political demagoguery.
We'll get over to Dom Chu with his look.
But hide your children when Andrew. When we agree on the same thing, hide your children.
I don't know.
Bad times are coming.
It could be union related. I don't know.
I feel like if you guys can come together on this, that there's hope for the world out there. Anyway, that's the only comment.
That's true.
Anyway, for the morning movers, we'll start things off with a couple of earnings stories this morning. We'll start with Dick's Sporting Goods, which is right now just down about 1.5% after the retailer posted a beat on both quarterly earnings and revenues. Sales growth at established store locations as opposed to newly opened ones also came in better than expected. Dick's also raised its full-year outlook, but not by as much as some analysts had predicted, so maybe that's behind some of the downside move there. Next up, you've got Dollar Tree, which is right now down roughly 11.5%. The discount retailer missed expectations on both profits and revenues and cut its full-year profit and sales forecast. Dollar Tree says it expects a more conservative sales picture for the balance of the year, given a tougher economic backdrop. And let's cap things off with a check on semiconductor stories that are not NVIDIA. This one involves Intel. The Dow component has swung to a pre-market loss from a gain, partly on a Reuters story that Intel's contract chip-making or foundry business suffered a setback after Broadcom sent test products to Intel for manufacturing that did not pass Broadcom's parameters for larger volume production. That's according to sources familiar with the matter at Reuters. The report also noted that Intel said its most advanced manufacturing platform remains on track for volume production next year, and that Broadcom has not yet concluded its evaluation. So, Joe, that's the reason why Intel and Broadcom are in the news outside of NVIDIA. I'll send things back over to you guys.
Under 20 on Intel now, Dom. Thank you. Now back to the volatility, latest volatility in the overall markets. Joining us to talk about key technical levels, Katie Stockton, Fairlead Strategies founder and managing partner and a CNBC contributor. Is this a completely separate event we're witnessing now from what we saw 6 weeks ago with the growth fears? Because it feels like we didn't get that totally behind us.
I would agree. I think that was the start of a high volatility cycle for the market. The VIX spike aside, which was obviously pretty major, we had already seen the volatility index lose downside momentum for some time, so we feel like it's a pretty meaningful shift. Usually the high volatility regimes last maybe 9-12 months, so we think it'll carry into early 2025. And with that, we moved to a neutral long-term bias just to reflect potentially a range-bound environment. And I do think we're in store for a seasonal correction, so that would suggest that that first pullback maybe was a little bit of a foreshadowing of things to come.
And the rebound that we saw might not be long-lasting, and it might not be built on a solid foundation, which we're starting to test right now. So do you think we get below the, what are we calling that break? When was that? What 6 weeks ago was?
Around
It's like
5,200 or so. So it was right, sort of a volatile.
So we make new
selling
lows from where we were there.
I think
the
we
VIX won't
probably
make new
will.
highs though. Will it?
No, but the VIX tends to see these aftershocks, right?
Yeah.
So we are expecting aftershocks as part of the higher
Like
volatility
30
cycle.
on the VIX or something.
Easily, yeah. And with that, I think we'll see this relief rally, which is a bit of a gift from the market for folks that hadn't reduced exposure already. It's an opportunity to reduce, especially to the semiconductors that are exhibiting at times, including yesterday, downside leadership. So we feel like it's a good opportunity to reduce some exposure,
That's
just
really
partially.
interesting. So
Yeah.
other people look at this. We just had Paul Meeks
Yeah,
on. He said
exactly.
this is a buying opportunity. You look at it as, the upside was your selling opportunity.
Yeah, and there are signs of upside exhaustion across time frames for NVIDIA and others. So, in fact, having scanned the S&P 500 yesterday, I felt that large cap technology was probably the best source of short opportunities. We feel like the rotation on the sector front is really meaningful as well. Utilities, REITs, healthcare, staples, we're now overweight those sectors in relative terms. It doesn't mean they go up strongly from here, but relative performance from those more defensive sectors, probably we'll see a little bounce in yields, but then that should fail. And it's very seasonal, what we're seeing.
Tom Lee yesterday sort of got very similar comments to some of the things he said. 8 to 10%. You think we get more than that on the S&P?
I think it's around that as well. The initial support is around 52,200 based on those lows. We think it could go even below 5,000, but probably briefly based on secondary support and simply based on where our indicators stand, which they're still pretty overbought, right? Of course, with this relief rally, we still have an overbought condition to contend with, and it usually takes several weeks to come out of that. So I think the messaging is that the secular bull trend is still very much intact, but maybe a cyclical sort of trading range might unfold here, and to wait to add exposure.
Can you tell from the where the weakness is concentrated whether? See, I'm going to ask you a fundamental question. What's causing this? Is it a growth fear or inflation fears at this point? Can you tell from the?
Well, I'll go back to market sentiment, which is the driver of pretty much everything, right? The sentiment had gotten pretty, I guess, overly bullish or extremely greedy for the large cap tech space.
Yeah,
and they have tended to exhibit upside leadership and downside leadership. So I think it's that so-called big rotation, probably coined here, that is real, and it should benefit in relative
What's causing
terms.
that? Growth or inflation?
Oh, well, I would think growth, but that's
Growth
just
worries,
my opinion.
growth concerns.
Yeah.
Well, yeah, I mean, that's what I was looking for. I wasn't asking you for your opinion. I'm saying if you can look at your indicators to see whether it's an inflation fear or a slowdown fear.
We also watched the growth value ratios very closely, and the retracement was massive in that sort of ratio or relationship. And we think it's something that will continue during a corrective phase. It shouldn't be long lasting, but the shift is meaningful out of the AI names. We're even seeing that in other sectors of the market, AI related.
How about oil? They gave me one more minute.
Yeah, so
It's oil
crude oil
down below 70?
Yeah, so it's taken out just in the past week or so, the bottom boundary of its long-term triangle formation. And if it confirms, meaning kind of closes there this week and next week, that's a major breakdown for crude oil prices that we weren't anticipating. So the long-term range, which has been neutral, is now potentially a breakdown. So we're watching that very closely. It is oversold short term, so it has the potential to bounce here and avoid that confirmation, but it's pretty tenuous for crude oil bulls.
And the objective would be 60 or?
Yeah, low 60s. I mean, there's some minor support around 69, but I would say low 60s would be very.
Then we're back to the growth. Then it's all sort of pointing in the same
Comes
direction.
together.
And Friday's an important jobs number that we're
That's
missing.
right.
Okay, thank you, Katie.
Of course.
Okay, coming up, a wipeout in chips. We're going to talk about it with the top analyst from Bank of America about yesterday's rout in semiconductors and where things go next. Plus, California Congressman Ro Khanna is going to be with us to talk later this hour about campaign 2024. Don't go anywhere. We're coming right back. Welcome back to Squawk Box. Yesterday's semiconductor sell-off bleeding into Asia tech stocks today. Among the big names, Samsung down more than 3%. Though the biggest loser overall here, NVIDIA in the U.S., it fell 9%. That's just yesterday. And more after hours on Bloomberg reporting that the company received a subpoena from the government as part of an antitrust investigation. Joining us right now to talk about all things chips, Vivek Era, Bank of America Securities Senior Semiconductor Analyst. Good morning to you. Let me just ask the question I think a lot of folks in the marketplace are asking before we even get to where the stock goes. Do you think that this rumor was in the market earlier in the day?
Good morning, Andrew. So first, commenting on anything DOG related is outside of my area of expertise, but I'll just make one or two kind of factual comments. First of all, NVIDIA's products have consistently outperformed every industry benchmark. So it's a superior product. Number two, all of NVIDIA's top customers are large, sophisticated companies. They not only buy from NVIDIA, most of them, in fact, buy from AMD also. Many of them have their internal chip projects. Google has been making the TPU for the last 8 years. Amazon has been making its own products for the last 5 years. So there is plenty of competition. And then finally, tension between regulators and large cap tech is not uncommon. We have seen this consistently. So it's hard for me to say how this trends, but you may be right that perhaps there was some speculation of it out there that perhaps impacted the trading yesterday.
Are you of the view that the government would have a fair case to be made against this company?
So that's why I think that this is outside of my area of expertise, but the key, I think, for the technology industry is that how competitive is the environment. Today, the large hyperscalers have a choice of, buying. So many of them are in different stages of setting up their accelerated infrastructure. Only about 35% of their spending is going into this accelerated infrastructure. So still 2/3 is going into areas where NVIDIA doesn't participate yet. And in that 1/3 of spending, NVIDIA has about 75–80% market share. AMD is selling to most of these customers. Broadcom and Marvell are making custom chips. There are many startups that are making chips for these companies. So we think it's a fairly competitive environment. And then the other point that I mentioned, which is about large cap tech, if you look at most companies, large successful technology companies, whether it's in search, whether it's in social, operating systems, e-commerce, they tend to have 75–80% market share. So for the large companies with scale benefits to dominate, that's actually the norm for the industry. That's not abnormal for the industry.
Well, the question is, should that be that might be in the software space? Do you think that should be in the hardware space as well?
Well, in semiconductors, remember that the design cycles are even longer. I mean, many software companies rely on features that come out every 6 to 12 months. But to design a semiconductor chip, you have to start 2 or 3 years before. It goes through stages of EDA design. It goes through stages of manufacturing, then packaging. Just look at the AI market. It has been supply constrained consistently, and it is still supply constrained right now in many parts of the market. So I would actually argue designing chips, manufacturing them, getting them out reliably, working with software and developers. I know I'm biased when I say it because I cover the industry, but I would argue that it's actually a harder, endeavor, which is why when we look across the semiconductor industry, companies with scale tend to dominate. Intel is in tough shape right now, but they still sell 7 out of 10 CPUs out there, despite them falling behind over the last 5 years. So, scale and incumbency matter tremendously in semiconductors.
We got to leave it there, Vivek. Thank you. Appreciate it.
Thank you.
Coming up, we've been talking about it most of the morning, and yesterday too, oil. Why have prices fallen when worldwide tensions are up? We'll have that story when Squawk Box returns.
right, let's talk energy, oil, and how it's been lowered despite all the tensions around the world. We're also seeing a report from Bloomberg that OPEC is looking at a possible delay to output increases that had been planned for next month. As a result, you saw WTI trade back above $70. We were at $69 and change earlier this morning. Right now, it's sitting at $70.54. For this, we want to bring on our own Brian Sullivan to chat about all of this. Brian, anybody we were talking to last year was pretty certain that oil prices, if they didn't charge higher, were going to stay pretty high. That has not played out. What do you think's happening here?
Well, I think what's happening is that people got it wrong, Becky. I mean, listen, if you know exactly where oil is going, I've got some beautiful beachfront land to sell you right around Arizona. I mean, listen, this is oil. This is the only, or one of the only truly global markets out there. And there's a lot of oil in the world. And China is not using as much oil as many people thought. I think the entire bull thesis, Becky, that you are rightly referring to is how much more is China going to take coming out of COVID a couple of years ago? Well, the reality is that between their economy being in the doldrums, their demographic disaster, they're now the second largest, most populous country in the world, and this build out of super cheap and disposable electric cars that are doing, China's demand has simply not gone up. You factor that in with record U.S. production, Iraq, and I'm looking at you, Iraq, they've been cheating over their OPEC quotas. It kind of got slapped on the hand yesterday by OPEC. China's slowing, we mentioned, and Libya. They've had effectively, I don't want to call it a civil war, Becky. It's not far off. They had about 400,000 barrels a day come offline. That's expected to come back online. And now you throw in these will OPEC change its plans headlines, and you got this swirling mishmash of oil right around 70 bucks.
I mean, it makes sense to hear from OPEC that they're not going to increase production when you watch oil prices fall. What level does OPEC have to see in order for them to feel comfortable, for them to be profitable?
They're very profitable now. And with all due respect to my good friends and colleagues that cover this unique little world that is OPEC, you've got dueling headlines out there, Becky. I want to be clear. This Bloomberg headline that some of the delegates are talking about, they're going to delay these production cuts or hikes. And what am I talking about? Okay, under the current OPEC plan, and it can be very confusing, so I'm just going to top line it. They all cut, but it's about a 5+ million on paper cut, 2 million coming from Saudi Arabia, Russia, and more. The group had planned to add those barrels back into the market slowly, initially this year, then they pushed it back to next year. So they would add, Saudi Arabia will add 1 million barrels a day of output between now and next December of 2025. So the headline that we're seeing is, are OPEC delegates considering either not doing those additional barrels or maybe doing a lesser version of those barrels? Now, put that graphic back up, because I wanted to come on this morning and talk about this as well. What's amazing, guys, is that oil's at 70 bucks a barrel here, a couple bucks higher around the world. But look what the world is facing right now. Ukraine is now actively striking into Russia, mostly hitting oil production targets. You got China, I don't know if you saw the video, ramming a Filipino Coast Guard ship the other day. Israel, Gaza, sadly, still raging on. Iran printing money and now has enriched enough uranium to get close to making a nuclear weapon. And the Houthis setting fire to a Greek oil tanker the other day. A lot of global risks, kind of risks versus OPEC. Oil at 70. By the way, U.S. gasoline demand, it's up. It is not down. I think the bias probably is, Becky, to the bull side.
Okay. Brian, thank you. It's great to see you, and we will talk very soon.
All right.
I guess just hitting the wires. News on department store Nordstrom. The Nordstrom family has offered to buy the department store chain for $23 a share in cash. It's already at $22.50 and off a little bit this morning.
Wow. We'll bring more on that in just a minute. But coming up, breaking trade data, an interview with Silicon Valley area Congressman Ro Khanna. We'll break it all down, where this election is going. Squawk Box, coming right back.
instruments.
Just seconds away now from an updated look at the trade deficit, and the futures are about where we started the morning, down but stabilizing, perhaps somewhat. Steve Leisman is standing by now with the numbers, and then we're going to have a little conversation after you're able to finish reporting the data, Steve.
Yeah, Joe, we're waiting on, there it is, the deficit coming in a little lighter than expected here. It's scrolling across my screen here. 78.8 billion. We're looking for 79.1, so a little better than expected. The goods deficit, 103 billion. The service surplus, 24 billion. Let's see what else we got here. Exports were 266, imports 345 billion here, and the China trade deficit a lot higher than expected at $30 billion. Not sure why that is. I know imports from the U.S. have not been doing well there. Oil imports at $75 a barrel. I'll leave it there, Joe, except to say that I don't know if you remember the report I did a couple weeks ago. This is the report that incorporates the Comcast, our parent company's payment to the U.S. Olympic Committee, which is a service import for the television rights. So you tend to get a 1 or 2% pop in the imports of services every 2 years when we pay for the Olympics. I can't see that number right now, but this is the month when we have the Summer Olympics that it's accounted for. So that tends to increase it a little bit. Overall, the deficit is higher, and it will tend to subtract from GDP. But sometimes that's a good sign because we're importing a lot of stuff here in the States. So that could mean at least a view that the consumer is able to buy this stuff and remains resilient.
So that's pretty interesting. The parent company involved in what happens with the trade deficit. Livornia's here. Maybe we'll ask him about that.
Yeah, it's one of like 2 or 3 particular places where an individual company's action changes the macro data.
Yeah, well, there's thousands of employees at Comcast. You've got, it takes a whole company to do what Taylor Swift does, constantly. So, just add hundreds of thousands together. She's the other person that you hear about. Oh yeah, well, that of course Taylor Swift was amazing. All right, let's move on to a different story that you're following. Concerns of what you're calling the Fed's new magic number. What's going on? Tell us about it.
Yeah, this is interesting, Joe. Compared to just following the unemployment rate, the Fed is increasingly following a new measure that comes from today's JOLTS report, 10 a.m. today, helps it know whether the labor markets are loose or whether they're tight, how much of a threat inflation may be, and how to guide or adjust policy. The measure of vacancies to the unemployed, or VU, takes the number of job openings from JOLTS today, 10 o'clock, divides it by the number looking for work. That's from the unemployed report. We get the payroll number. It's a concept pioneered in the 40s by British economist William Beveridge, the so-called father of labor economics, and it's got new currency now. The ratio, you can see, has come down from 2 in 2022, meaning there were 2 jobs open for every unemployed person, prompting employers to raise wages. It's now just 1.2. It's a major reason why Fed Chair Jay Powell has expressed less concern about jobs causing inflation, more concern about a weakening labor market. You can see that right there. A new paper presented in Jackson Hole by researchers Benigno and Egerton, they're from Bern and Brown universities, made a strong case for VU, explaining a lot of what's happened during and after the pandemic. Among them, it helps explain the inflation surge, which researchers see as mostly due to labor supply shortages. In fact, they show 5 of the past 6 inflation episodes going back 111 years were caused by labor shortages. Helps explain the soft landing because inflation fell because the economy cooled by reducing vacancies, not jobs. And the Fed's new labor market concerns are also part of that reason. Vacancies are down, unemployment rate is ticking up. Researchers are not sure where the magic number is. I'm sorry, it's always that case. But they say aiming for a rate of around 1 job open for every unemployed worker, well, it's a place to start. A higher number risks inflation. A lower ratio means further declines in inflation come from real people losing real jobs, not vacancies disappearing. And I think we might be there now or close. And, Joe, this is a reason why Fed Governor Chris Waller, he ended up being right in 2022 when he looked to this number. and maybe why Larry Summers in his prediction with Olivia Blanchard for high inflation ended up being wrong.
What's the number for Friday, and where is your anxiety surrounding that number?
So the number's 160. I have seen estimates lower in the 140 range. I do think the overall consensus is that the number on Friday offsets this huge weakness that we were so worried about in July. Again, nice piece in the Journal about something we've been talking a lot about, the role of immigration and immigrants in the U.S. population, in the labor force. It makes it very uncertain to know. One theory about the weakness in July and the unemployment rate was that we had this entrance of immigrants into the workforce. They didn't find jobs right away, and that they get jobs, say, the next month or thereafter, because it takes some time. Goldman Sachs did a nice piece about the rising participation rate of immigrants in the economy. They begin with, say, a 50%, and then it rises over time. The question becomes, Joe, the underlying strength of the economy and the ability to put these new workers to work, assuming there's work for them, kind of gets to the reason for maybe why they're coming, which is that apparently there are jobs here, or maybe they've come in at a time of weakness, and we'll see. But it's something that's very difficult to gauge. The other thing out there, Joe, is that the unemployment rate's supposed to tick down to 4.2%. I don't think a strong jobs number up to a point would stay the Fed's hand from cutting in September.
Could it be 250? Could it be 85? Could it be either one of those, or is that too? We don't have that type of standard deviation.
Oh, absolutely we do. And Joe, I'll just throw up my hands to show you that the idea of predicting the jobs number in this post-pandemic economy has been, difficult to say the least. There's been a lot of things going on that have been different, and I am interested in the JOLTS report.
Instead of feeling better about the July number, could it confirm the July number?
Sure, absolutely. Although I will say, Joe, the jobless claims number on a weekly basis have not confirmed it.
Okay.
When that big revision came out, I went back and looked to see, can the jobless claims be going along fine, whistling past the graveyard while the economy is deteriorating? And it doesn't. In general, if you have this big deterioration in the job market, you also have a contemporaneous deterioration in jobless claims. Joe, you pointed to the fact that there's a huge variance and a huge amount of change and revision that can happen to a number. But we don't look at things in isolation. If the whole economy is deteriorating, we have multiple measures to pick that up. Jobs in July were an outlier. I don't believe it's going to be confirmed again in August, but we'll see.
All right, Steve. Thank you.
All right, joining us right now for more on the economy and also the details that are trickling out of the Harris and Trump campaigns about the candidates' economic plans is Joe Lavorgna. He's chief economist at SMBC Nikko Securities America, also a former Trump administration National Economic Council chief economist. Joe, let's just start with what you think for this Friday jobs number, what you think the Fed may or may not do this month.
They're definitely going 25. My guess is 50. It won't take them a lot to go 50. I mean, if it's 250, as Joe mentioned, I don't think they're going to go 50. But even anything, maybe even around consensus, could get them to move, because the labor market tends to be a lagging indicator. Jobless claims are low, but the recipiency rate is also historically low. People aren't filing claims. So that makes me more cautious that they're giving the right message. The fact the rate is up 90 basis points from a cyclical low is important. You've always had recession when that's happened. Yes, employment has still been positive, but we've noticed in the past, you go back almost every cycle except one, unemployment starts to go up and other people enter the workforce because there's stress, and that generally precipitates broader weakness. So we're pretty negative on the economy. I think it's been weak for a while. I think the numbers have been overstating things.
We spoke with one guest earlier this morning, I'm trying to remember who it was, who said that if they cut 50 basis points, it could be a bad signal for the market because they're going to panic.
Yeah, I don't believe that. Yeah, I mean, look, the Fed has told us that R-star, that equilibrium rate is, even the range on R-star is like 250 to 4. So even if you're the high end of where you think rates should be in a neutral setting, it's way above where rates are now, 5.25 to 5.5. And in the last two easing cycles, excluding COVID, the Fed went 50 initially. So if you think rates need to go lower, why waste time? Get there sooner.
Is there any sort of politics that play into this at this point? One campaign or the other thinking, oh, they're getting helped or hurt by this?
I mean, the one thing, to Jay Powell's credit, the Fed did market the easing last December, and then all of a sudden the data kind of moved against them. I've also argued for a while the Fed should be cutting rates because the yield curve is massively inverted. Inflation expectations have been low. The economy's not that strong. So yes, there could be a political argument that's made. I don't think it's that strong at the moment.
It takes a while for a Fed rate cut to
It
actually
takes a
get
while.
hit.
Yeah, the thing that I have a problem with is the Fed, to me, pivoted very quickly from we're going to go to only one cut this year in June, and all of a sudden in July they were thinking of cutting at that meeting, which shows you how hard it is to look at data and interpret data and make predictions. I think the Fed, communication-wise, could have done a better job.
There aren't a whole lot of things that the two campaigns agree on, but both of them have come out, both candidates have said that they're not in favor of the purchase of U.S. steel by a Japanese company. Where do you come down as a former economic?
I understand that's certainly there are political considerations there. I guess I would say that I'm going to leave it at that. I don't want to go into details. I think we could figure out why the campaigns are doing that. What's that?
Meaning you don't think it's a good idea?
No, I didn't say that. Look, economics is great, but economics used to be politics, used to be political economy, and too often we're all about Ricardian equivalence and free trade, and we're not really sure about how the other side is behaving. And I've always said to people, Ricardo would tell you it doesn't matter whether you have the comparative advantage in potato chips or computer chips. I would say I'd rather be the country to produce the computer chips than the potato chips because high value added, higher wages. So it does sound like an economist. It does depend. But on that issue of steel, I think that's a contentious issue, so I'm not going to answer. I don't want to address it.
Because you don't want people mad at you.
Well, I don't want people mad at me. I don't want the half of the world that doesn't necessarily agree with my politics to hate me, and I need to try to be persuasive and objective, so that's where I want to be.
Okay, so on that note, what do you think of the other ideas that are floating out?
Well, I'll put it this way, that raising the capital gains rate to 45% and a wealth tax, that's very poor economics. If the economy's weak, the last thing you want to do is even talk about a wealth tax. You'd have a massive fire sale of assets across the board, and you'd have big price discovery for those assets that aren't necessarily liquid like real estate. So I think that's very poor policy, and I think most economists would agree with me on that.
Do you think if capital gains does go up to 44%, what do you think the reaction in the market will be?
It's going to be much less capital formation, Becky. I mean, if you're taxing something to that extent, so the highest capital gains rates we've ever had, that's going to certainly hurt capital formation, hurt productivity growth, capital investment. It's just, to me, it's just, again, kind of become soak the rich a little bit. I just don't think that's very good economic policy.
Can you make up for it with what the Harris campaign has floated today? I guess this idea that we're going to give $50,000 in tax deductions for startups instead of the standard $5,000 that you get now.
For a business, start
small business.
I mean, look, right now the equity market's doing pretty well. I don't think it's going to necessarily last. So you can raise capital pretty cheaply. I don't think the government needs to come in and start to dictate what you should give money to. I mean, the market's pretty efficient. It raises capital quite easily. I don't understand why we need another agency to give money forward. It doesn't make sense to me.
It's funny though. Small businesses we like. It's just so horrible.
Well, the thing is, if you look at small businesses, their hiring intentions have come down. Economic uncertainty is the highest it's been in a long time.
All business is important. The private sector is important.
But the private
not so important.
But what starts big, what's big, obviously by definition, was small.
It's small when it started.
Yeah.
Celebrate all of them. I don't think size should be an issue.
Really?
I don't know that, Joe. Joe, thank you.
I understand your perspective.
I'm thinking this, Joe. Thank you, Andrew.
Thanks.
Coming up, California Congressman Ro Khanna is going to be with us to talk about the emerging economic plans from Vice President Harris, the debate around taxing unrealized investment gains, and so much more, including this small business incentive. You're watching Squawk Box on CNBC.
We spent time talking about the idea of taxing investors on unrealized gains. Our next guest is looking at something we've also talked about quite a bit on this program, and Andrew's been talking about it for years. Bill Ackman recently talked about it with Jay Clayton, I think yesterday, the day before. That's taxing loans related to the gains instead of trying to do it in a really a way that's probably not even possible to do. But Democratic Congressman Ro Khanna of California, his 17th district is located in the heart of Silicon Valley, and anybody that doesn't realize that that is a goose that lays golden eggs constantly for this country and for the world. He's joining us today. Well, it says in your capacity as a surrogate of the Harris-Walz campaign. I'm going to forget that. I'm going to say you're joining us today as my and as my running mate. If we
bottom of the ticket, Joe Rowe.
No. Rojo. I want a cushy job where I don't have to do anything, but I can take credit for things. I want the.
We need you in the Midwest.
Anyway. But you tweeted it out to me, unsolicited, I think last week. What about this idea? And we've talked about it. It bears, I think, some consideration and a conversation. I immediately hear from other conservatives, we don't need to raise taxes no matter what.
Right.
But there are founders of companies that start with nothing. They have $5 billion. They die and they pass it on to their heirs.
If you're using it as cash, it should be taxed.
It's never been taxed, ever. It's never been taxed.
But they're borrowing against it.
But they borrow against it, and the idea, and it's what you came up with.
Well,
why do you not want to do Kamala's idea? Well, or whoever came up with it. Why do you not want to do the Elizabeth Warren? Why do you not want to do that one?
Let me tell you why I don't think a blanket tax on unrealized gain is a good thing. I mean, let's say you're an entrepreneur. You create a company. It gets to 100 million or 200 million on paper. Now, if you're taxing that, you're probably going to force that person to sell it. They're probably going to sell it to private equity. Do you really want the entrepreneurs to be forced to sell their companies to larger institutions and to decline in value? I don't think that that's what you want for a startup ecosystem.
Unintended consequence. Jeff Bezos wouldn't have to do that. They're going after these very, I think the whole policy is demagoguing to go after these people that they say pay less of a tax rate than their maid does, and they have billions of dollars.
I get why, but this is not the right way to do it. And also, 95% of investments in startups fail, and so you're going to disincentivize investments in those startups. But here's what I think we can go after. You have folks, okay, they start to have capital appreciation, and then instead of realizing that, they take out a loan, which I call backdoor realization, to fund their entire lifestyle. They never pay tax on that. Then, when they die, they pass that money on to their heirs, and their kids never pay tax on that.
But let me ask you two questions. First of all, I think to make this actually work in practice, you actually also have to have the step up in basis at death. Otherwise, the entire effort doesn't really work because you need to change the incentive structure for why people would even want to take out these loans to begin with. Okay.
Totally agree.
There's a second piece to this, though, which is, and I actually was just on the phone with an entrepreneur in the Valley who I think everybody knows yesterday about this, who said, look, I understand what you're trying to do, Andrew, but if you do this way, it's going to disincentivize additional investment by entrepreneurs in the into either investing in their own companies or investing in other companies. So one of the things that a whole bunch of people who've made a lot of money do is they actually not only take out loans to fund their lifestyle, if you will, but they also take out the money to then make investments in other startups, in venture capital firms. By the way, venture capitalists and private equity folks often are taking loans against their own firms to look like they have carry in their funds. So their actual carry in their own funds is coming from a loan that they're getting from the fund. And so all of these folks are calling up everybody, including, by the way, the Harris team as well, because they're aware of this, because people are calling them saying, well, if you do it this way, you're going to actually be disincentivizing investments in small businesses, to bring it all back to today's conversation that Harris has now proposed. So what do you say to all of the pushback on that front?
Well, your first point, it's absolutely correct on the step up a basis. And that basically means you start with $100, it grows to $1,000, you give it to your kids. The kids should have to pay the capital appreciation tax. The second point, look, the easiest way is to tax luxury items and luxury items
as like a VAT.
as a bad, or if you're going on luxury things at hotels and planes, luxury purchases, that should be taxed.
What's the line on luxury then?
Well, I mean,
What if you're somebody who's paying ordinary income?
we can figure that out. But on the loans, look, there's always going to be some disincentive or negative effect. But I think that is outweighed by the fairness of people having to pay a tax, which is largely being used.
For me, it's if you're using this as cash, you should be taxed on that.
Right.
If you're using what you've gotten as cash, if it's just sitting there and going along, or it's in a family farm or something along those lines, or in a company that you founded and you're not using it, that's one thing. If you are actually going to use it as cash to borrow against it for whatever reasons,
Right.
it's the same as cash. It should be taxed.
Exactly. It's realizing it in just in a different way. And loans. Now,
what do your constituents say? What do all the venture capitalists call you and say on this issue?
they're opposed. They're blanket opposed to the unrealized taxation. They're open-minded to something like a tax on loans or even a tax on luxury items.
What about stepped-up basis? Who defends that?
The stepped-up basis they're also open to, which are three things you could do to raise a lot of revenue. I mean, look, people. Here's the animating spirit, which is that folks who are doing a job as a teacher or as a janitor shouldn't be paying 25, 30% tax, and then multi-millionaires paying zero. So they understand that the system
carried interest.
I think carried interest should be taxed.
Where are you on capital gains going to 44%?
No, I think capital gains. I think capital gains should be lower. The current state that's in now.
3%.
The issue about over a certain amount, if you want to have capital gains move towards ordinary income, that's an open conversation. But even that makes a lot more sense as long as it's realized. But taxing the unrealized portion isn't going to generate that much more revenue, and there are all these other ways to do
Make
it.
it really complicated.
Okay.
Unrealized gains that are donated to charity that will never be realized by anybody ever.
Okay.
How do you feel about that? So, if you are Warren Buffett, Bill Gates, name your person.
Right.
You give unrealized stock, right? So, meaning it's never been taxed, ever.
Right.
It gets sent to said charity. We
Yeah.
decide whether we like certain charities or not charities.
Yeah.
Not. It gets sold immediately by the charity.
I think that should be taxed on it. And
But there is no tax on it.
look, I'm all for charitable giving, but we have a democracy, and the reason we have a democracy is all of us get a say in how money is spent, and that shouldn't just be that Bill Gates and Warren Buffett get to decide what their pet causes are. So if they're going to have unrealized gains that are actually used by a charity, that's a point of realization.
The philanthropic lobby is going to call you now.
Should that be the case for all charitable giving, or just above a certain limit? It's weird, this limit above where the rules.
Look, I think you can say above $1 million or something. I mean, if you're having ordinary folks give money, that's different. But the big issue here is, we've gone in income inequality from 54 or 53 in the 1980s to 128 today. My district is $12 trillion of value. NVIDIA, Apple, Google. You've got more billionaires and multimillionaires, and folks are saying you've got all this concentration of wealth. At least they should be paying some tax. And I think that's a reasonable sentiment and a correct sentiment, but we've got to figure out the smart way to do it.
If you're using it cash, I think it should be taxed too. But let me ask you, what happens with both candidates saying they think you should be taxed for tips, or not be taxed for tips? How is that fair to the teacher who doesn't get any of their income in tips?
Well, look, the biggest thing we ought to do on the tips is to make sure that you have a living wage. In most parts of this country...
I don't know. Should they tip?
I support not taxing tips, but...
Why? That is ridiculous. Somebody who's a teacher, a fireman, they don't get tips.
Because some of these folks are still making $2.13.
Not in your state.
Not in my state, but in states that...
And by the way, if you're paying them $2.13, that's because the rest of your income is coming in tips.
But if you're a surrogate, you think your candidate ought to take a couple of questions that aren't in a teleprompter? You think maybe that might be something that she should do before the election?
I think both candidates should. I think they should come on.
He has been. He's been on constantly. He's been on too much. That might be a problem. She hasn't done anything, and it's obvious. It's obvious to everyone. And if you're a surrogate, you need to tell them to get off the whatever it's called and
I'll tell her to do the show. There should be
where she stands.
Look, I think she's competent. She's capable, and she should do more of these. And you know why?
Thank you, Rob.
Thank you.
I waited for the end of
Joe.
So you can. Thank you.
nvidia.com/TV.
We got a lot more coming up tomorrow. Make sure to join us. Squawk on the Street begins right now.
Good Wednesday morning. Welcome to Squawk on the Street. I'm Carl Quintanilla with Jim Cramer at Post 9 of the New York Stock Exchange. David Faber has the morning off. Stocks do look to add to Tuesday's losses. Worst day for the NASDAQ since July, second worst day of the year. NVIDIA is down another percent. The two-year yield at a 16-month low. Our throwback begins with this tech-fueled sell-off. S&P clocks its worst day since early August, but there are areas of opportunity, some say, to buy the dip. NVIDIA is under pressure again after the biggest one-day market cap wipeout for any U.S. stock in history. The chip maker reportedly now facing that escalating DOJ antitrust probe. And the state of the consumer, Dollar Tree and Dick's, the latest to deliver some cautious guidance. Let's begin, though, with the markets after the sell-off yesterday. Jim, looking at what you wrote this morning, it doesn't sound like you think this is a growth scare in the classic sense.
Exactly correct. I feel like there are many situations that are individual in each sector. For instance, just take last night, Zscaler. People saying, because Jay Chaudhry's going to be on there today afternoon, saying he's very cautious on billings. Yesterday, we have a lot of people saying, okay, Supermicro is really in trouble. We have another Supermicro cut. Intel, obviously very, very troubled. So it was not just NVIDIA. We all make it sound like that NVIDIA is the sun and everything revolves around it. But there were a lot of negatives yesterday. They were all individual negatives. NVIDIA, I've been saying, let it come down. Look, I love NVIDIA. Everybody knows that. I hate the love. I shouldn't say it because it's just a stock. But I've been saying ever since the quarter, you got to let it come down. And don't be a hero in this. I mean, I tried to compare it to last night to the Cowardly Lion because, you know, counting you guys to stop me basically before we go into it. And I feel that that's the way it is. I really do.
We talked yesterday about the Michael Sembolis note out of JP Morgan.
That was the
where he
factor.
looked at not just the argument that competition is coming for NVIDIA and their historic margins and market share, but it sounds like he thinks there should be more progress by now on some of these use cases.
Okay, I think that's really great because there were a lot of people who told me why it was down yesterday, and they were all wrong. I mean, it's down because Michael Sembolis is one of maybe the most powerful strategic thinker right now on Wall Street. Yes, he didn't reveal he is a friend. But so what? I saw his son this weekend. His son's a great fisherman, just like his dad. Here's what the problem is with NVIDIA and that piece. He does say that there's competition, and he really just kind of signals that it's AMD. I would trust those AMD and NVIDIA. I think Lisa Su's doing a remarkable job. I don't think that she would even admit that they're competition right now, NVIDIA. I think Intel, let's just take them off the table. We've got to stop considering Intel as a competitor to anyone other than itself. But there was that notion that mainframe spend was all wrong, and there was the 2000, oh my God, the 1990 to 2000 fiber connection. He compared it to that. I wanted to vomit when I saw it. I think that Michael's terrific, but let's just understand, these are going down because there are real thinkers, big thinkers who read Michael Sembolis, and they just changed their mind. One of the few people makes you change your mind.
Jim's referring to this chart, which I think the
Many
booth
people
has,
change
where
my mind.
He looks at
I used to be a
data center
Democrat.
revenue for NVIDIA versus IBM peak revenue in '69 and Cisco Nortel Lucent peak spend in 2000.
Look, I remember that anyone who remembers the Cisco Nortel Lucent knows that was a collapse situation. Nortel just immediately collapsed.
Oh, you
Lucent
dumbass.
collapsed. Turns out that both of them had accounting issues, so it made it even worse. Cisco got to some outrageous multiple on dessert. And what I never attacked Michael.
Who
But
that
I did
is?
say, listen, all these companies, give me a break. The companies that are customers,
Give me a
are
break.
Absolutely, just they're nation states. They
Jimmy boy.
NVIDIA himself, Jason Wang, has said over and over again, the CEO, look, if you buy our stuff, you get an amazing return. And he has demonstrations of amazing return, and that was ignored by Michael. And that was painful. But can we have no doubt about it? The idea is so chilling that if it might be mainframe or
13 million.
that it made you think, let's step back. Now, I believe this was going to be the case because this
We did hit my
we should have
105.
seen that there are a lot of
Good morning, retail traders. I have, oh man, I got 25 minutes to do jumping jacks. Hope everybody's having a good day. I got to make up for yesterday. Simple thing to watch today is the VIX. Mike says he doubt the market will move positive unless it starts to come down, consolidate. Good morning, Jesse. Good morning, Magnificent. Good morning, Randy. I'm glad I had my mute on my thingamajigger. Good morning, Mustang. Good morning, Patrick. On YouTubers. So, can't wait to see how the market opens up today. We got gap plays on the SPY and the SPX, and I did a video on this here. This is called a gap. And that's on the hour time frame. So a lot of times when the stock will pull back, it'll pull back to the top of that gap. Now we've got the pivot point inside that gap at the 200. Then we got the bottom of the gap. So if it pulls back and hits that gap top, which is support for right now, and doesn't hold, we should surely see the 200 or the bottom of this gap here. And I'm going to raise, that could be raised up just a little bit. So let's change that. Put it right there. I want to put it right on the body of that candle. Now this is on the hour time frame. Right there. 54.61. Now we got an inverted hammer, which means we could reverse to the upside, but I still think we're in for a little more holiday on pullback. Now, there's people that are still bullish on NVIDIA. They're all bullish on NVIDIA, but the DOJ came out with some rigmarole. They always do that when they think there's a monopoly and the other people ain't getting a fair shake. Well, too bad, you know, make a good enough chip. Get your sales force out there and start selling them. So that's all it is. They do it all the time when companies... They don't have a monopoly. There's no, you know, there's just too many of them. Now, United Airlines, if they're going to, Boeing, that's a monopoly. They would never go after Boeing. And Boeing's hurting. Maybe if they had some competition, they'd put out better planes. That's my opinion on that. So I'm going to be watching Boeing. It had a pretty good lick yesterday, but still yet, there's a huge downgrade. And these fat cats won't believe it because they're bullish on Boeing. So we could definitely, let me get rid of this here. We could get a trade out of it today. Maybe. Got a two-headed snake. And a certain resistance to break and draw that trend line from up here to that and just extend it on out, and that's your hard resistance to break. And if we break that, we go higher. So I'd probably wait till it hit that. Well, that ain't too far away, so I'd say the 200 then. Then you got that double top. So we just... I ain't going to be no hurry. We got an ascending triangle at open, and after hours, yesterday, so that can easily pull back and hit either one of these support levels and then take the trade. And Google had a beating yesterday. Now Google's one that a little iffy. Let me turn on my face. I went out and bought a bunch of new shirts. Got to show my new shirts off. This one's made out of bamboo. Recycled bamboo. It's called a Caribbean shirt. I love them. I've been wearing them for over, probably 8 years, 9 years, 10 years. They're just very breathable and comfortable. And they look good on me. They smell good too with my cologne. It reminds me, every time I went out on a new date, I'd go out and buy a new shirt. Guys that had problems with chicks, I'd say, man, just go out and buy you a new shirt. Put on some decent clothes. Every time I get a new date, I'm always got a new shirt, a brand new shirt on. Probably spent $1,000 just doing that shit. So, I'm glad the thing came up. Monday, it was a holiday. And I got these jobs where I go out and I clean for them. And I had this one account for 20 years. So I assumed today that they were closed on Monday. And I started panicking. I kind of took my time this morning, went out for an hour walk, and early morning, 1 o'clock, 1:30 in the morning. And I got done with my last job, and I said, oh shit, man, did I forget? So I had to hurry and call them up today. And they were off, so. I'm adding on to my weight loss program, a 45 to an hour walk every morning for 30 days. And I think I'll get a little bit of that. I got about an inch around my waist there. I got to get rid of a little lump, not much, but I mean just like a my goal is to get to 160, maybe 155, but definitely 160 and put on muscle. I had a guy at StockTwits this morning say, you know this is a stock channel, and I said, yeah, I do. I posted this in there this morning. My next step is to walk 30 minutes every morning until I build up to an hour. I have 5 more pounds to go. I lost 20 pounds in 3 months. This is StockTwits, you know, about stocks and shit. I forgot to say, yeah, I know what shit is too. Prunes. Prune. P-U-R-N-S. Ah. That was all right. Very good. Amazon. First thing I'm going to do is look at the red ones. See, and do a fast look at them, and then Meta was one. Now they were pumping DKS yesterday for earnings, and it pulled back. Dix. So you might get a trade out of this. It did hit my support that I was waiting for, 224.18. I never, hardly ever, trade earnings unless the market is bullish. Right now we're not bullish. So you don't ever want to try to trade earnings when the market is not bullish. The earnings were good. And again, they were talking about a monopoly. They need to go after Boeing. I mean, after Dix. Now Kamala's got something coming out with her promise of $50,000 for startup businesses. I'll tell you right now, that ain't going to be a fair deal, because she's big into this share the wealth program with, I mean, always clean as Jim. Oh yeah. I'll walk away from, all right, I'll walk away from the computer here for a second. I got 5 minutes.
Okay, because that's what it'll take.
Okay, spit it out.
Okay. Carla called me, not yesterday, but the day before.
Yep.
And he told me, I said, how you doing? And he said,
Yeah. Yeah. Yep. Yep. Oh. No, probably not. Yep. I just got it. I just got another phone call. Go ahead. Okay. Let me call you back. Hold on. Hello, it's Jim. Oh, hold on. I might have someone else on here. Okay. Yeah, Tammy, this is Jim. I got a hold of what another lady that works next to you next. I can't remember her name right now. Becky, and I figured that you were all closed on Monday, so I just kind of had a brain fart this morning. I said, what happened if they weren't closed on Monday? Did I make a big mistake? Yeah. So that's all I wanted to know. I guess I'm fine now. I'll be in there tonight. Right? Huh? Yeah, tonight. To clean, because that's 2 days you'll be there. That's the way I usually do the holiday. Okay. Yeah, I'll be off Thursday. That's the way I usually do it on a holiday, on a Monday holiday. Oh, okay. Bye-bye. La 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 la. How many more minutes? 5 more. More drama. Dick. Yeah, I got to get work here, but I just had a phone call. I might have missed a job, and it all got kind of messed around, but I was okay. So yeah, he won't get no trouble for that. I don't think. You shouldn't have to worry about it.
You shouldn't go to jail over that.
No, there's a lot of idiots out there on the street.
Yeah.
Okay, well I'll let you go.
All right. I want you to have a really good day.
I'll try. Bye bye.
Bye.
Coffee shoes off, and I'm ready to go. Business is done. There's another. I was going to look at Mara. Yeah, Dix is going to pull back because we had 3 crows, and we did. We hit my little support level. That's the bottom of that first crow. I mean soldier. Excuse me, soldiers. So it could bounce back up because you're on the 9. But if it doesn't hold the 9, it'll definitely pull back and hit the 21 and be a very strong buy. And I did the same way with the SPY and the SPX. We can pull back and hit the 21. But now we've got the gap in our way, so we'll see how that works. You got to kind of think like a fat cat sometimes. It's that big gap on the daily. I got 549.40. So if we pull back and hit that and hold, I'm going to jump in a call maybe. Yesterday I just didn't. I don't know, man. Sometimes I just go, you idiot. I got glued to that call I was in, and I thought I could save myself, and it ended up being one of the worst days I've had in quite a while. Lost about 1,200. Real stupid. I made some back, but still, yeah, I didn't get to do it. It was one of them kind of days. It's been probably pretty tough couple weeks. The last 2 weeks have been great, but still they were tough. One day was tough out of it. So we got 1 minute left. Let's see what goes on here with the SPY at open. We got higher lows. A little dip right there. If we hold the 200, we'll bounce up and do a resistance check at 550.70. Not, we'll pull back and see how it handles down here. I'm going to just draw that line straight across. 550.70. Amazon down. AMD broke the 200 on the 5 minute. Apple. I got 105.71 on NVIDIA. We could easily probably run up here, but we're going to wait today. I'm not going to be a clown and jump right in them. Got a low support down here with the head and shoulders. Might be some grudge trading going on today. Let's get that one right there. straight to my watch list. Go to the red ones first. See, we're still red. SMCI down, bad news, and we got PANW, Mara. I'm watching Mara real close. We just hit my support level on Mara. And SPY just popped. $550.70 has to break before I'd think about it. I think we're going to consolidate today. Today's the 4th, so I look at the 5th. September 5th at 555s. We bounced off the 200. We got a stall in the market. Somebody just spiked it up just now. Somebody jumped in it. I was trying to send you a message right there. Yeah, a lot of controversy this morning in the SPY. I think the market makers are getting paid off. See if I can pick this up at $1 on the pullback. If it doesn't break out. Okay, here we are. We'll find out if we're bullish or not. Looks to me like we might be. They're pumping it up. It's going real fast now. There's a 30-cent pump over in 1 second. Yeah, they're pumping it up. Correction, U.S. Red Book, 6.3% versus 5%. That all of a sudden kind of got funny. Yeah, they got their beach trade in. The 550 puts. I can tell they were kind of pumping it up on this candle right here. Little gap. Sweepstakes for Lux. I got a little complacent yesterday. Today I'm not trying to be so complacent. But that engulfing candle says a lot right there. AMD, Chewy, M&M, Tesla's up today. AMD's up $3. Chewy, I'm not so for sure about. Tesla is 40% chance of a win. They definitely will pull it back. We got oil, MRO on here, and I don't know if I got OXY on here. I called that the Buffett yesterday. Yeah, it went down some. No, that's not Buffett. That's Google. Oh, I see here. There you go. SPY's got a long ways to go if it wants to keep running. Mannequin, did you get in that SPY? It's below Buffett's price. I thought so. It's like 57 something. And we got a double bottom on NVIDIA. 3 black crows. I think we still need to wait a little bit longer, but now, if we remain bold, the support's going to be 550.70. This is encouraging. We got an expansion pattern, which means we could pull back and hit that 9 and retest it. It's not a big expansion pattern. Yeah, right there, see? There's your inverted hammer. These things ain't cheap enough. If I go into the 556, I'd like to see it pull back and break below that there and come here and then bounce off the 21. Yeah. Oh, I was going to check out over here. Damn it. I was going to buy that. I turned my head for a second. We hit the 9, and it hit that channel. Yeah, these suckers they're running it up. Mike ought to be doing good in that call. 40% so far, he says. Mannequin, you in there? We've got a shooting star forming right now. Come on, Terrence Crawford. I'll take you on, buddy. It's 2 engulfing candles off megaphone. Little Mikey was pumping his AMC. The guy's convinced it's going to bounce. It will eventually bounce. He's been pumping it for 8 months. They ain't done it yet, but it will eventually bounce. AMC will. I just don't like the kid. Here we go. I like the kid, but I don't. Okay. We're going to find out right now how good this stock is. We're going to see. See how it pulled back to the old resistance? Now we're below the 9, and it's going to squeeze here in a second, and they're probably going to pump it back up. If it pulls back, man, this thing down here will be the perfect, there we go. Okay, I'm going to get ready to take this trade. 555s at 138. These are the 555s. At 138, it's a scalp. And I'll stop right out of it if it gets back down there. We could easily drop down, but I'm assuming that we're going to hold here. But So I might get out just to get out. Should have got out a little bit more. Set stop just in case. Okay, we're going to find out right here. It's retested the 21. I said we'd pull back and hit that 21. If you're not comfortable, get out. Now, if we can respect the 9, $154, I'd take profit here. Take some off the table. There we go. Now, 160. I'm done. Off to the beach. Brian D. I left 5 on the table. Right now, I'll get out of them. 160 and 165. There's an extra $50. Okay, I'm done for the day. Woo! Mikey, you still in yours? We can hit the 200 SMA, 55, 37, 35. If we break the triple top here, you got a 1-2 bits freebus, and it's a little higher high. Tell me what you're going to do if you haven't done it already. I put sell order for 50 to 95, no idea if they sold. Bank of Canada cuts 25%. So we got a symmetrical flag, pennant flag. It'd been nice to get the flagpole up here, but that's okay. We got a support level. You see the support level on that? We got to hold this to stay bullish. Draw it from the body of that candle to the body of that. And that's called a symmetrical flag. It could go either way. It could drop down and hit this bottom part down here and be a bull flag. And that'd be a real strong buy at 550, 90 something. So if you're not in trade, if you're in the trade now, I'd see if it breaks this resistance. It's not going up much. So I'm going to wait for it to pull back to the VWAP. If it holds the VWAP, you'll have a double bottom. And that'll be where I'd want to take the trade. That's on the SPY. Now the SPX had a 1, 2, 3, and I called a resistance there. So if it holds the 21 or the, what is that, the 51? I got to change this. I want to put the, yeah, I got to change that to 63. I think it's 63. Ain't I using 63? And I got it in yellow. Yeah, I want to use the 63 for a support level. I've switched over from the 51 to the 63. I like it a little bit better. Now we're getting ready to squeeze on the SPY. This will definitely tell us if we're bullish or not for the rest of the day. I'd rather take it off the VWAP and run it back up, but we're getting ready to squeeze any second. And I'm out of the trade right now. If I was to get back in it, I'd look at the 556s. In fact, I'm going to move my call down there so I can get it in cheaper. I'm looking, I want to see it hit the VWAP. But we could go ahead and break out. This is 1, 2, bits 3B. 1, 2, 3. If with body hits that right there, there you go. So I'm moving it down to the 556. Wubbits, Tubus, and a freebie. 1, 2 bits, and a freebies. And resistance to break will be the double top. I think we got above it. We just draw a trend line across the body of it right there. 552.20. SPX broke out. We got the 200 SMA coming up, 5536.25. Support now is going to be the old resistance, 55.39. 55.55, there you go. 55.30, 55. We're getting close to resistance on the SPX. At 200 SMA. Now, I want to get this VWAP. I could start a position here and then add on to the VWAP. If you can count to 4, you just might make a little bit more. I'm so glad they were not open on Monday. That would hurt my perfect record for 20-some years. The 556. Let's get another big bounce off this beach at 124. So this is a SPY 556. I gave you a good enough warning there. keep an eye on it. These are scalping material. I gotta make back $1,200 today. I had the internet go out on me yesterday. That didn't help matters. I wasn't in any trades, thank God. I about gave up by that time. If y'all wonder where'd he go, I thought I had that changed. $5.56 strike at 124. I'm going to take profit here, I think, here pretty soon. I don't trust it. I've been reading more about a carnivore diet, so I'm going to make some recipes out of hamburger and egg. Make little cupcakes. And make a donut with an egg on the inside of hamburger, with a little bit of cream cheese on it. Not much. I'm going to make some meatballs this weekend.
Fascinating.
Yep. Come on, break. Randy, we break this resistance, we're going higher. I think we just did. Oh, fuck. You son of a bitch. Look at that. I have no chance. Okay, we're at the bottom of the pattern. Jesus. What the heck? Okay, well, fuck. Damn. 0.75. Job openings were less. Let me look at that SPX. I might be able to get in this. So I got 2,500 in this trade, 2,200 in it, 26, about 30. I got 30 contracts now. That kind of sucked. Okay, get on up there. Now I'm looking good again. I don't know. I'm gonna get out of these tier calls when we get up here again. Right about now, 104. If I get one more candle, it'll be back to one. I'm gonna get out here at 104. There's 105, 109. Take profit. Take profit. I don't know how this is going to hold now. That was a weird reaction. 112. That's nice. So that made up for it. Get out of the trade if you're in it. If you add it on. That was pretty nice right there. Huh. Off the 200 SMA. So I knew I could take it and bounce up off that. That was weird. I mean, that was just like jaw-dropping. I'm up in the trade, and all of a sudden, smack. I mean, I went from being up $100 to being in the whole 700. I mean, yeah, 500. Somebody got their mic on? That's okay if you want to talk. Damn. That was... Whew. I mean, that was a good trade right there. Not good, but I mean, I'm glad it went back. I think we can scalp it again if we come back down and hit that. We're at the VWAP right now. Create some kind of flag here. I mean, that was a nice trade. Got $720 out of it. But I had to put 2,500 in the trade. I got lucky. Now we're red. We're going to consolidate. Here's the SPX. That would have been a nice trade. So I'm going to trade it next. Mike, did you get out of that? You warned these? I didn't see the warning. Who gave the warning? I think they deserve a little bit of credit. I'll call you Rookie of the Year. What? I know you didn't see it, hence, oh, that's cold. That's a low blow. When did the jobs report mean anything anymore? What a short memory we have. There were 800,000 off for the year, almost 1 million in their estimates, and this is probably wrong too. They could be pumping the market. That's fair. There ain't nothing fair about that. Woo! Nailed the resistance level. Can I get a good grade on that? On the SPX? At least change that F to a C plus. Oh, armed migrants take over apartments in New York? Oh, they really? I think they need me to go up there and whip some ass. I wish I was younger. I'd go up there. I'm afraid I'm too old now. I'm afraid to even walk the streets of New York. Well, I could have got 127 out of these spy calls. We're going to find out if we're bullish or not now. We've got a second chance. At 200 SMA. We got higher low, higher highs. We got anything else coming in that's going to shock the market? Oh, I got a D minus. Man, after yesterday, I don't blame you. We're going to find out if we break this here resistance. The 45's got back to 1170. I'm going to get out of these. I did not like that big candle at all. I'm glad I added on a lot. I'm out though right now of the SPY. The SPX, the 5550s. I should carry a gun at night. Here living in Springfield, it's just as bad as Chicago. I've been shot at. Okay, we're back at the old resistance. NVIDIA bounced up off them 3 black crows. Came back right to support at that 105.71 that I charted up in the video. IWM, we're at a double top resistance. Okay, we're pulling back some here. Let's see what the SPX can do for us. We're on the 63, 3 black crows. So if this is any good, here we want to take it right here. I'm going to get ready to get in this trade. This is the 5500s, and I'm buying one contract for $6.70. We could easily pull back one more time, and I'll add on right there. I was 20 feet away from Trump one time. Have anybody in here been close to Trump? We're up $100. Create a head and shoulders if we break this resistance. If not, get out of the trade. $10.4. We're consolidating. Now, definitely this jobs number. I got stuck in that sucker. Out at $8. I'm going to see if we come back down and hit this shoulder one more time. That'll be the second touch off this inverse head and shoulders. And I'm going to set my alert right up here. Now, if you're in the trade, I take profit. I just left $80 on the table. But that was a nice trade. It's called 3 Black Crows. Damn. Okay. It's left 130. $140 on there. But I ain't doing what I did yesterday. I'm going to take his profit. There are 170 I left on the table. Usually after you see 3 black crows, a lot of times you'll take, if it's still bullish, you'll get 3 white soldiers. I can't tell you how many times I've caught that trade like that. Now, see, here we go back down. I want to hit this right shoulder one more time. And I'm going to jump back in the trade. 10-4. Get ready, Mikey. Randy. Right about now, 6:40. 6:10. Get ready. There it is. Now, 6:10. I'll take that. I'll take that. 6:10. Called it. Perfect. 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 You went to 2 rallies? Oh, right. Man, the rallies are great, aren't they? I remember when I walked past, this was during Black Lives Matter. I walked past some of them Antifa members, and I did a little dance in front of them. I'm going to tell you a story. Mustang here in a second. Got back in this trade at 6:10. I've talked about this trade many a times. Once you recognize a pattern, we hit that shoulder the first time and then the second time. So this next scalp might not be as high as the last one. So you just want to, we're coming down to 49 minutes in the market of the scalp day. So you want to try to execute it as soon as you can. There's the 2 big engulfing candles, which kind of throws me off a little bit. That's why I got out of that trade up there. If I didn't get out of that trade, I'd be in the hole. Now I'm up 100. I was up 100. I'm up 100 right now. I can get out of the trade. We got the 63 acting as a resistance level. Okay, now's the time. 750. There it is, 750. I'll take it. I'm out. Off to the beach. Off to the beach. Now. I think I'm going to have a beet salad today. I gotta clean this up. I can't see nothing. I don't want to, but I got to. Okay, Jimmy said we would build a flag here, and that's what we're doing right now. We're building a symmetrical flag. We got the 9 here on the SPY. I think we're still looking a little bit bullish here. We got the IWM up here for a triple top break. An ascending triangle. So I think we could go higher here. 213.62. Yeah, these idiots are calling out in the video like they're chicken of it. There she goes. Jimmy said we're bullish. We just hit the 200, so if you stayed in that trade, I'd be getting out here. We hit the 200 SMA on the 1 minute, and that's the 1, 2, 3. So if it breaks, we're going to jump up to a double top. And we're at $8, so I left $50 on the table there. About 70 actually. Just say you weren't in the trade and you decided to take it. Now, right here is called a tweezer bottom, which would have been a good idea to take that trade. I made my money back from yesterday. I'm thinking I'm going to get a good grade today. Besides not seeing the alert on the big candle drop. I think I'm gonna go get in there and get a salad. Need an early lunch. Had 2 eggs and a, what do you call that? Guacamole. This morning. What do you call that thing? That fruit. Avocado. And I got to eat a banana before they go bad on me. Might be making a banana omelet tomorrow. So the IWM did break that ascending triangle that I called out. We got a symmetrical flag here setting up on the SPY and the SPX, a 1-2 3-bus. This can easily go up to 55.40. You 10 for me? If we break the 200, it will definitely go up to 55.40. I guarantee it. We'll know here at any moment. Or we buy the dip. There we go. Okay. Jimmy's going to get ready again. These are the 55.50s. For today. And I'm going to get one here any second. I don't want to overtrade either. The biggest problem is overtrading. Time to take a break, actually. I just now found support here. Everything's kind of pulled back to a support level. We got a diamond-shaped pattern. We're getting ready to squeeze out of it. You see a diamond shape. Am I missing something in the room again? Another alert? Boom, baby. Take it. Now the SPY. What's the deal with the SPY here? Fuck yeah, I'll keep going. Take profit. No, Sarah, you annoy me. You're a good-looking chick, but you annoy me. She does. A rising wedge and a diamond-shaped pattern. So support's going to be off the 50. If this holds right in here, 551, if you're not in the trade. Or back here to the 200. And I'd probably load the boat there.
juicy price target on this thing, Jenny?
Yeah, they do. I mean, $125 price target, Oliver. So I would say that definitely seeing some upside. And their actual commentary was even more impressive, frankly, as far as like the bullish case goes, because they had nothing but really optimistic things to say. And a name that has seen
Tesla 220
some
break.
you can see actually from a year-to-date chart.
Mannequin, did you get out of your spies? Avocado is the right answer.
So it's volatile. That's definitely no doubt about it. But all things considered, a name that again has been seen by a buy rating, $125 price target at B of A. They mentioned this is the global leader of
Yelnats,
concerts.
that's good information.
Now, what has been a concern is some of the various ways in which the Justice Department is currently investigating, like the monopoly in which they hold over a lot of the concert venues and concert go.
Mustang, was it you that went to San Francisco yesterday? Talked about San Francisco? Where's a safe place to go down there? Woo! I'm going to talk about my Trump rally episode. The 555s are at 9:20, 9:30. Keep going. Made dollars on Tesla. Mustang did. Good job. MacDonald had a farm. Meow, meow. I'm going to walk in the kitchen and make a salad. And then tonight, when I get ready to snack, I'll have a tomato salad. And then next week I start on I'll be adding hamburger to my diet. I'm gonna make burritos for lunch.
Fascinating.
Yep. Still gonna leave the bread out, but I'll have a wrap around it. And then I'm going to be walking every morning for an hour. Today I did 45 minutes with no problem. You can tell you when your legs start burning a little bit, and you can breathe that oxygen in without no cars and shit around you. $9.90 for these 550s. Sold one at $7.50, and I got another one at $6.10. And I'm thinking about just getting out right here. But if it breaks, 55. Oh, here's the double top here. So I'm going to put that across and change the color of that to red or blue. And that's going to be our new indicator. That's a bear flag right there. So it could knife and hit the 200 again if it doesn't gain respect. It has to gain respect by breaking this resistance right here. There we go. Bingo! $10. Randy. We're about to hit resistance. I'm going to get out of them right here. 1090. 1110. Get ready to get out. Right now. I love you. It's the most wonderful thighs in the world. Hare Krishna. Hare Krishna. Do they still have the Hare Krishnas in Portland, Oregon? The most wonderful time of the year. SPY hit it too. Oh, that's the SPX. Yep. The SPY also hit resistance. 1 2 bits, 3 bits, 4. We didn't make it the 4 yet. So the body has to hit the 4. It says it's finished, but I don't know. We've got a long ways to the upside if this wants to keep going. But if you're in the trade on the SPY, consider taking some profit. Because we can easily come back down here and hit the 552.45 area. And definitely I can go in there and make lunch now. I've waited long enough. I've done excellent today. I don't want to ruin it. It's like day and night from yesterday. Market pullback. Mike says market pullback maybe. At Marvel. I had some fat cat this morning talking about Marvel. Joe says, yeah, it is cheap enough now. He was on a kick this morning with the fat cats because they keep saying rotation, rotation, rotation. $73 would be my target if we broke to 63 for sure. 73.50, another couple bucks. I got 2 of these up. What am I doing with 2 of them? I'll change that around. That ain't gonna work. Huh. Waiting to get into PLTR. Don't screw it, trade wisely. And I moved myself up to an A+. I'm going to set the alert off the 200 SMA for the SPX on the 1 minute. 200 EMA, if I said EMA. So I'll hear these go off when I'm in the kitchen. Okay, well, meditated there for a second. And the rising wedge is going to squeeze, and we got 10 minutes for the fat cats. I'm going to raise this alert above the 200 just in case. And I'm going to raise this alert above this trend line just in case. And I'm going to, on the SPX, and I'm going to put an alert for the QQQ above the 200 just in case. And IWM, same story, just in case, off the 200. I'll be back. Where are you? Alert. I got an alert on the SPY already? I guess I did, huh? Oh, up and away. I gotta redo this line. No, I'm gonna leave it where it is for some reason. It should be up a little bit. In fact, I'm gonna erase it, redo it. Bam. Rising wedge. Old MacDonald had a farm. Rising wedge. On this farm he had a duck. Where's the Swanson yesterday, bizarre market action. All right, welcome to the room, Swanson. Everybody read what he wrote. Or she. I'll find out what it is here in a second. Oh, it's a sun, so it has to be a sun. Am I right, Mr. Swanson? I think we're going to break out this fallen wedge to the downside, but we'll see. Okay. Some are saying we're going to go higher. George!
Why I was bullish back in 2022 about mid part of the year was because interest payments to the private sector were so tremendous, and we've been running $2 trillion deficits, which have become supportive of the overall economy. So if the economy starts to weaken and the markets weaken, I'm going to attribute to a fiscal drag, not necessarily because monetary policy was behind the curve, but eventually it'll help pick up the economy. But I think it'll take some time for that to happen as they start to move the rates to the downside.
Okay, very fair point. Especially as we're going into election, would think that talk's going to start getting hyped up around fiscal action, but so far we haven't really heard a lot. So yeah, you're right in that there's probably still some drag here happening. I like that point. All right, VIX back at 20, Bitcoin within 1%. We're pretty close to getting everything kind of signaling risk on here this morning. Our data pretty much behind us, which sets us up for the rest this week, Caroline.
What sets us up? Well, I think that, of course, it's always going to be about Friday's jobs report, but also keep in mind we'll hear some earnings too. Broadcom is out tomorrow. There's, I think, a lot of anticipation about that. Second biggest chip maker by market value here in the U.S. So, NVIDIA set the stage that higher earnings, better than expected, doesn't necessarily mean green arrow. So we'll have to see. But so seeing some green on the screen for chips. So, a different tone today.
Yeah, very encouraging. Maybe a better setup for Broadcom when they report. Good reminder there. All right, appreciate it, guys. Thanks, George Tillis. Thanks, Caroline Woods. Thank you for joining Morning Trade Live. Trading 360. Looking at cold pedal readings is coming up next. I'll see you at 2 p.m. See if stocks can extend the strength here. This election season, stay out of the muck and the mudsling. The Schwab Network's By the Numbers coverage of the presidential cycle.
How could this election impact your financial future?
Next week is going to be a crazy political week.
Election trades are fraught with risk. No agenda, no hysteria, just good old-fashioned analysis of what policy means for your portfolio.
Stay informed, stay ahead. Tune in to our election coverage on Schwab Network.
The market is a multi-trillion-dollar beast. When there's profit there, you take it. That's always going through my head.
My job as a trader is to just make money.
With a history and a geography degree, how did you find your way into trading?
Trading attracts a lot of the best and brightest students because it is this enormous data set. It is incredibly competitive. And so if you really want to put yourself out there, test yourself, and find out how good you are, it is very attractive.
So how are you exploiting human weaknesses?
Being lucky in trading is great, but it's not the formula for success.
You need to be able to find opportunities in the marketplace and sift through enormous, staggering amounts of data.
You certainly see patterns. Context is so important.
I think the best traders I've seen have insatiable intellectual curiosity. Otherwise, certain parts of your skills will become outmoded by competition or by technology.
When we look at your whole brain, we don't see any activation in these emotional or reward pathways, as if you don't have an emotional reaction.
I'm not very good at sales, turns out. I'm very good at trading.
I have a trading system that I've used for over 10 years now, and it's almost second nature to me.
Do you think that this is potentially a human superpower?
Overtime on the Schwab Network.
Quality Focus has worked pretty much across all 11 sectors.
We deployed a fantastic array of new technology.
The companies that are doing well are almost too big to fail.
Have you set yourself up correctly?
It's controversial.
The old guard is saying, away off with their heads.
AI feels controversial and it's going crazy right now.
It is going crazy.
So what does all of this mean for the market?
As long as people want to buy it, the price can go up.
Oh my goodness, the Fed cannot do everything they used to do to save this market.
Instead of taking cues, set the cues.
There's nowhere else I would want my money.
No more than 5% in any one stock, no more than 20% in any one sector.
Now there's a market for every single one of these people. There's a market for you.
Market Overtime on the Schwab Network. Thanks for tuning in.
Good morning. We're 90 minutes into the trading day. Welcome to Trading 360. I'm Nicole Petalides, live on the floor of the New York Stock Exchange. We have a big show for you. Don't forget, yesterday was the biggest sell-off we've seen since early August. We're holding on to some gains here today. Our 360 spotlight will be looking at the big banks after many in the space have been off to impressive starts this year. Our disruptor, First Solar, after Jefferies raising the price target on those shares. And in our 360 round, we talk all about Dollar Tree. The earnings were released. Now take a quick look at the market. So right now, you're seeing a bounce back after, and by the way, it started off a little weak this morning, but managed to gain some ground. Yesterday, the S&P fell 2%, the Nasdaq fell 3%, Nvidia fell 9% plus. Here's a different picture, though. The S&P today is up 1/3 of 1%. The Nasdaq up almost 0.5%, like the Dow, and the Russell is up 3/4 of 1%. Oil and gold are mixed with 69.78 the barrel on oil, 25.27 for gold. Bitcoin 57,830 and the dollar 101. So that's the big picture. Peeking at the VIX, it's at 1950. That jumped about 30%, more than 30% yesterday. So there you have it. There's the setup. We have jolts and jobs and some big stories to talk about. Moving stocks today. Jenny Horn, markets correspondent here on Schwab Network, taking a look at Zscaler, which is down about 16% as we speak. Good morning, Jenny.
Good morning, Nicole. Yeah, and seeing a brutal nosedive today. I mean, like blundering move at Zscaler after seeing some weakness yesterday. And I would say this is a really interesting story now because so far these cybersecurity type companies, we've actually seen some degree of resiliency in like enterprise spending in these large corporate accounts that have actually boosted some of the recent weakness we've seen in like a CrowdStrike, for example, or a Palo Alto Networks, but Zscaler specifically tumbling on this really weak profit outlook, and that was really pressuring the stock. We've seen this pressure remain pretty relentlessly ever since yesterday after the close, but the company does expect now about 62 to 63 cents in adjusted earnings per share for the fiscal first quarter. That compares to the around 73 cents per share that they were initially expecting. Overall, full year outlook also did see some degree of reduction ever so slightly, especially when it came to bookings, or billings, excuse me, billings defined as revenue, though that does change in deferred revenue. And they also did say that while they are still seeing some degree of innovation, high-paced innovation was the terms that was used by their CEO. Billings growth, I think, or lack thereof, overshadowed. They did also say that their profit forecast overshadowed the better-than-expected results. I mean, there was still lots to like in this report. In customers' adoption of their Zero Trust Exchange platform, they did highlight it stronger than ever. They're thrilled to continue to share these major milestones as far as their cloud platform is concerned. So there were things definitely in the quarter to like. I think that anytime you just get weaker guide and weaker expectations now for the remainder of this fiscal year and their upcoming first quarter, you tend to see some weakness. Now, to this extent, I don't think anyone could predict it. This is well outside of what the market had been expecting, but still, nonetheless, coming up short as far as now what they expect currently, and that I think matters more. We're down now 27% on the year, though, so underperforming the rest of the cybersecurity space by quite a sizable margin, Nicole.
All right, thank you. Good to see you. Appreciate it, Jenny Horn. Let's get some insights and news shaping the markets. For that, we welcome in Frank Capillaris with us, founder, president at CapThesis. Thank you for being here. I feel like there's so much going on. You know, you have certain things, utilities at new highs, Oil at 9-month lows, basically. Right? Yesterday we saw so much volatility. What do you make of things going all over the place lately?
Nicole, thanks for having me. Well, I think we all know we're entering a typically volatile period for the market, September, October, November. We obviously had that in August already, based on how it started and how we finished. Throw in the election, and there's probably going to be a lot more back and forth movement into the end of the year. Now, if I'm looking at the S&P 500, clearly an outstanding comeback last month. But, you know, I look at this in terms of patterns, and I get most bullish when we have a short-term pattern target in play. Right now, we do not. That's not a huge negative right now because we had that strong comeback and it's likely placed to pause right now. But if you look back over the last 10 months or so, from our perspective, there have been two prior pretty big bullish breakouts back in December and May. Now, those share two common characteristics, one being that those breakouts that we saw were clean, meaning we didn't have any pullbacks. And of course, both times we saw the targets hit. And so right now, based on the back and forth movement we saw in July and August, a much bigger one has formed, and that would be through new highs and have the target much higher. And so at this point, not be surprised to see this take some time to play out if it does. And until we have that, I think it's probably good to be patient right now.
Yeah, understood. I mean, when you see pullbacks, I'll use examples like NVIDIA was down 9% yesterday. Zscaler is down 16% today, the biggest percentage drop since 2019. When you see certain pullbacks, do you start saying, oh, I want to get in here or I want to get in there?
I think that it's always going to be attractive to buy dips and launch of our trends, but I think we have to take that a step further and probably buy the price flip or as opposed to rise.
Well, I wish I still had them ones I bought on that dip.
Some of these memes, especially at the beginning of August,
on SPY.
Past month, that sometimes those moves can get much more accelerated than we think they could. And, you know, looking at the S&P just as a proxy, over the last
SPXs are at 1450 in the money.
When S&P moved at least 1%, so that's a 50% rate, which is extremely
I don't mind if you keep going. Do it.
2022, as we know, the bear market, a lot of ups and downs, is a 51% rate. So that just made it very difficult to buy breakouts because whipsaws are just fierce, even on the downside too. And so volatility, always say, is a two-way street, cuts both ways. And so to get more confident about buying those kind of dips, is
two-way street.
Action become more subdued again, and I think that's just going to be challenging now, considering again the period we're entering and everything that's going on, including the election.
So what do you tell folks when they say, I want to put some money to work? I mean, what do you advise them? Because you can't just sit in cash, right?
Right. Now, the positive of all this is that amongst the fireworks, there have been plenty of areas that have remained at the highs. Now, we can talk about consumer staples, utilities, but you know, as opposed to those defensive areas, financials and healthcare really catch my eye.
I'm going to set alert above the 200.
And they're talking about some multi-year.
Take this trade again.
And they've remained steady for the most part throughout the summertime. And I think those.
No, 63.
If you're talking about, you know, the economy, you know, those are lead indicators that the economy is potentially holding together, especially financials. So I think that's probably my number one pick into the end of the year, financials and healthcare as well. So there are pockets of areas, again, not just ultra defensive, that are still providing a good foundation for the market. And of course, we want to be in those relative strength areas.
Yeah. We talked a little bit about tech. I wanted to get your thoughts on some of the other areas, for example, consumer staples and oil services. Start with staples. That's been on your mind, right? Is there opportunity there?
Yes, and if you look at consumer staples, number one, it was the best sector of the S&P last month. I mean, new all-time high again yesterday. Now, again, if you're just looking at potential leadership areas, that's one of them. But you have to wonder why that's happening. Again, it's a bond proxy. Bond prices are moving that way. It looks a lot like real estate from that perspective. And we have a chart here that shows XLP versus the S&P 500 over the last 10 years. Clearly, it's in a downtrend, but there have been pockets of times when it's outperformed the S&P 500, and you can see that has coincided with some of the biggest pullbacks in the S&P on an absolute basis, to the point where you've gotten to a point putting an RSI indicator on it that's produced.
You ready, folks?
There. And so we're looking at that right now. The S&P really hasn't pulled back from its top yet, even as Staples has rallied. So if this continues to play out the type of pattern over the last 10 years, then you can make the case that the S&P could have a little bit further to go on the downside as Staples continues to rally. Now, if we see a big slip in Staples where, say, some money comes back into technology, that could tell us that this trade, this mean reverting move is over. But I think as long as Staples continues to make new highs, then we have to be hesitant for the market in general.
And what's your thought on oil, especially now we see oil down below $70 today? Where is that headed in your mind using those charts that you like to follow?
Well, OIH, I think is a very interesting spot. If you look at this long-term chart there, it's been best to buy OIH when it's come back to that lower line of the upward sloping channel. And that's produced some very substantial moves over the course of the ensuing few months. Again, going back a number of years there. So it's at a critical spot now because it's back to that line once more. As you mentioned, Nicole, crude is still looking for a bottom, so it's obviously beholden to what crude oil does. But I think if you're looking for an area that's really not in favor right now, and there's some indication that buying that dip long term has worked out, I think this is an interesting spot to look for right now.
Yeah, I'm going to be talking financials shortly. What do you think is the main story on that group, in your opinion? Where do you think that group is headed?
Well, the XLF is just a monster breakout, and you can talk about how it's breaking out the multi-year highs, but going all the way back, if you look at a very long-term chart, it's not that much further above its 2007 pre-financial crisis high as well. And so that's been interesting because it's tried to move above that over the last few years, obviously pull back 2022, now it's come back again, and right now has a lot going for it. And I think this is a real breakout, and as long as it stays above the most recent high there, I think a lot could be going forward into the end of the year.
Frank Capillari, thank you, of Cap Thesis. Great to see you. Appreciate it. Thanks very much. A lot of statistics there, too. Throwback. Right?
Stop flirting with him.
Well, plenty more to come here on Trading 360. Up next, it's the big three. 3 stocks, 3 charts, 3 trades. Then this time we'll go through the technicals. Don Hoffman standing by a video trade. And he will take
You're mad because Carolina are going out right.
20-plus year bond ETF and Wells Fargo. Next here on Trading 360 on Schwab Network.
Showing them breast off today. Always when she dresses provocative. As long as she dresses sexy like that, she's mad at me. Two medium-sized beets cost me $4 this weekend. Highway robbery. Proactively. Okay, here we go. Right now. Triggered. Triggered. The 555s. $7.20. $6.80, $6.70. So this is my support right here. SPX calls. Scalping. September the 4th. Strike. We could hit the 200. Get 670. The strike is 5555. That's 670. Go away, little girl. Go away, little girl. That's all the crackers I want, and I don't want no more. This is the most serious I've ever been on a diet. I want to get healthy, have good sex again. Make America great again. Blanket. Got Head and Shoulders. resistance 55, 44, 45. $7.90. Now we get the shoulder line resistance coming up. So if you're a scalper, you'd get out now. Nice to get these at 1,000 again, but I don't think so. And the video can pull back to the 200.
Wells Fargo. And what I like about the risk reward is, you know, early in my trading career, which happened to be at a place called Thinkorswim, early in my trading career, we used to always, you know, talk about when markets would see sell side activity, there was always higher degrees of correlation. What that in effect means is you're not going to hit a sector like semis. You're not going to hit sectors like specifically AI. Eventually, if this market sells off, they're going to hit them all. And when you look at the financials right now, it's a spectacular setup for exactly that. So completely unscathed, exceptional risk-reward ratio to the downside, and that is such an important concept.
To the downside.
I'm going to go out in Wells Fargo to the November 15th expiration. The reason I'm going that far out, I want to give myself ample time for expansive movement, right? I'm going to be buying the 55 puts, selling the 50 puts. So it's a $5 wide put spread done for about a $1 debit. Again, this one's all about risk reward, ample time, and the fact that, look, if you're bearish in the S&Ps, really the financials offer the greatest risk reward at this point to the downside.
Yeah, we're going to be talking to Ken Leon shortly all about the bank, so everybody stay tuned for that. Ben, your thoughts on the technicals here on Wells Fargo?
Yeah, Nicole, I feel like Don is such a perma-bear that he's kind of like one of those big ships on the ocean. Steering him off of that path is going to take a little time. We made some progress today, right? 2 out of 3, he's going with that shorter, more intermediate trend. But again, it's the bear in him that you can't 100% embrace this concept. I like what he's talking about in terms of the longer term. I think the chart's in a mess, but he's going against the 2 examples he's provided for us already. So let's just take a look at WFC. I'm going to tell you exactly what I'm talking about. It's in a bull trend across the board. 2 separate time frames to look at, and then the bigger picture, again, very clouded. So maybe that's what he's leaning on. But looking at some of the price activity we've seen just since the lows into the middle of last week, stock was trading, if you remember, down around 56 all the way up to 59. Pretty well-defined trend up. I didn't mark this one up because there's not really that well-defined vertical separation. You just kind of have this channel of price activity to the upside. But this is a bull trend here nonetheless, bottom left, top right. And again, a 5-minute candle chart, so tough to trade this time frame, but easily identifiable, right? Similar pattern. I actually clicked forward into a 1-hour candle chart. If you blinked, you missed it because it's almost identical. Bottom left, top right. But in this instance, I was able to establish a few areas of consolidation that formed at higher and higher levels, areas where the market is balanced out.
I'm going to add one contract here
High conviction phase,
pretty soon.
Horizontal phase, that kind of wash, rinse, repeat pattern that plays out, values moving higher. So trend up on the 5, trend up here on the hourly
Get my
time frame,
soup.
stepping back and looking at the daily. This is a stock here. We're talking about a Wells, which wasn't a bull trend. But look at this, it reversed. It came off. Last time we looked at this, we talked about how bulls wanted to see a test, an area, this key test at 57 hold. That was back in June, July, we were talking about this, and look what happened. It broke down. We got below that. So you lose that bull trend. Since then, a little bit of price decay ensued, but more so just kind of, again, gray area, not a lot of conviction one way or the other. I'm looking at the August lows. You got, again, end of July, August lows. You got around 49.50, and then you have the highs that we saw. Again, that was up around 62.63. Well-defined parameter established. Conviction one way or the other, but bullish on the 5, bullish on the 60 here. It looks pretty random maybe right now.
Yeah, you see those lows right there. Final thought, John Kaufman.
Yeah, in the overall marketplace, look, the bears are basically knocking on the door right now. These are my people. Let them in. Look to sell into any strength, and specifically some of the financials, which are exceptionally strong in what is a weakening marketplace.
That's right. All right, you and the bears. John Kaufman, Trade. Ben Lichtenstein, thank you. There on the charts. Appreciate it. That's our big 3 today. Coming up next, a spotlight on the big banks. Many in the space have performed well this year. Now what? We talked to Ken Leon coming up. We'll be right back.
Ameritrade is now part of Schwab, bringing you an elevated experience tailor-made for trader minds.
This is it, 200 SMA.
Swim, our award-winning trading platforms. Unlock
I'll add 2 more.
Trade Desk, our team of passionate traders who live and breathe trading.
4:20 time.
Sharpen your skills with immersive online education crafted just for traders. Also, you can trade brilliantly.
With Schwab investing themes, it's easy to invest in ideas you believe in.
God, don't
Spot
do
a
it.
trend in electric vehicles? Have a passion for online gaming? Or want to explore the space economy? Choose from over 40 themes, each with up to 25 stocks
420.
certified by our unique algorithm. Buy it as is or customize to align with your goals. All at your fingertips. Schwab investing themes, 40 customizable themes, up to 25 stocks in just a few clicks.
Cut the cord on the way you get market news.
Fuck.
It's Market on Close. Join me, Oliver Rennick.
Did somebody
for
die?
the earnings coverage, insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern. Available anytime, anywhere, on any device for free. Only on the Schwab Network.
Philadelphia Fed begins search for new president as Harker's set to retire.
Welcome back to Trading 360. I'm Nicole Petalides, live on the floor of the New York Stock Exchange. We want to spotlight the big banks, which have done very well this year in 2024, but of late have pulled back off of some recent highs to the tune of 10, 15%, depending on which names you're looking at. We bring in Kenneth Leon, Global Director, Industry and Equity Research at CFRA. And of course, everybody's waiting for cuts from the Fed September through December. What's the big picture on the banks where you have mostly buy ratings? I saw you have a one hold, but the rest were all buys that you sent over. Why the buy ratings?
Great to be with you. So first, from strategy, we're overweight the financial sector. It's 13% weighting to the S&P 500. And the financial sector, like the banks, are trading at discounts to the S&P 500. You know, multiples for the financials in the mid-teens, as well as the large global banks that I cover. The only
So the 555 strikes on the calls for the SPY.
Bank of America, and of course that's part of the Warren Buffett story. But here's the picture. When we look at the outlook for banks into next year, and really financials, we see earnings growth likely to be in the upper single digits. We also see the potential of new drivers.
Oh, that's the SPX.
That are not reflected in the stocks today, and that would be because of lower rates, the impact it would have on investment banking, particularly equity underwriting and mergers and acquisitions. So those are new drivers. They have not been part of the story before. And generally, if we're going into next year to a softer landing or at least a healthy economy, banks with lower rates, they might be able to turn the lights on again for mortgage loans, which have come down catastrophically in the last 2 or 3 years with rates.
Okay.
Fed, you know, at
Right now I'm down on the
5.5% on the Fed funds rate. So
SPX. That kind of hit me hard there.
And by being diversified, they don't have some of the risk of smaller banks that might be concentration risk those small banks have to commercial real estate.
What's interesting is you, and look,
That was a flush.
has done really well this year, and today there are a lot of headlines about investment banking, and that has slowed down. There are fears of that. I know in your note, which was written prior to today, where you had said that you saw investment banking picking up into the new year, I guess 2025. Is that possible? I mean, is this a blip that we might see some volatility?
Give me hope, like you give me a good grade for this bounce back.
Yeah, so if you look at the three legs of the stool, we've had record debt underwriting this year in the first half. Equity underwriting began to improve on second quarter versus first quarter. And I think, Nicole, to your point, when we get the earnings in October, we're going to see progress, but it's not going to be a blowout quarter. That's a good thing. Also, when we look at areas related to equity underwriting and M&A, it's mostly been corporate, so financial sponsors.
Tesla's at the 50 on the daily now.
Private equity firms sitting on $1.2 billion that they have to.
Okay, I'm back to 420 on the SPX. We need a little bit more.
Limited partners.
We need to break the 200 and get it back up here.
So I think the pipeline will be talked up favorably. Again, the backdrop of still an economy that's growing and rates that are coming down, that will also shift not only investment banking, but perhaps investors and traders to more of a risk-on scenario, or one where we're willing to take a higher equity risk premium. So we want to be in banks and financials, and I think the key point for those managing portfolios is that we do not want to be defensive in areas of consumer staples or utilities, and feel you want to ride growth, ride the winners, which is information technology, communication services, and financials. Those are the 3 of the 11 sectors that were overweight, and banks is part of that story.
Yeah, understood.
Everybody wants the banks.
You noted the boom that Goldman Sachs had seen for that area.
I don't know why. The interest rates are going to get cut.
Granted, there could always be risk of a recession or just weaker markets overall. But one thing that I thought was interesting, you said lower investment banking fees. We've seen the real estate market completely change how they are doing some fees. Is this something that really is sort of imminent, or it's on your mind?
No, just to clarify, when I say investment banking, we're not going to have a blowout Q3, but we're going to see quarter-over-quarter improvement as well as year-over-year for investment banking fees. Real estate is more problematic for any bank, but it's mostly isolated to single properties in the office market. When I do the research at JP Morgan, which we do disagree that you should be trading out of that position, because they've been phenomenal over the last 5-10 years on any metric to its peers. But when you look at the large banks on their commercial real estate portfolio, very small percentages office, within office, it's Class A buildings, and it's investment grade type borrowers. So I'm not worried. And what's interesting here is I have not had a conversation with you, Nicole, in the last 2 years or more where any quarter we see systemic risk to a specific industry that's going to significantly hurt the numbers for a quarter. It hasn't happened, but for many years, that was always something. Energy, any area, the consumer. Things still look pretty good.
Yeah, and I like that. We've had a lot of conversations, so that really tells the story. You know, the Office of the Comptroller of Currency noting climate risk management and saying maybe some of these banks are not fully prepared for that and looking into that. Could that mean more regulation or more money that has to be put aside? What is that about, and are you nervous about that?
Yeah, it's something we watch. It's part of social responsibility and governance, but it really doesn't hit a tier 1 area of focus. And I think what came out at the end of August from the Fed on the specific capital requirements for the banks that are under the stress test, I think we're fine there. So, we're going to see some pretty healthy share buyback and dividend repurchases. That worry, if you get into the weeds of a bank analyst, is the Basel III endgame, which was a global cooperation of regulators. And both Congress and the large banks have pushed back saying, there's no need for us to raise up capital of 15 to 20% more. So I think we're in a good place with policy and regulation for the banks.
Yeah, and just quickly, the 3 sectors you mentioned, because everybody's saying slowdown fears, worries about September. You said financials, communication services, and what was the third?
The third is the largest, information technology. So for 2 of those, you're getting close to a 40% weighting. And that's, we listened to Sam Stovall, our chief investment strategist, our investment policy committee, and, Sam's got an excellent record over the last years and decades. So we're going to stay the course.
I've known him for all those decades. Great to see you. Thank you so much, Kenneth Leon of CFRA. Appreciate it. Glad you were here with us today. Coming up next, The disruptors will focus on First Solar after Jefferies raising the price target on shares. George still is standing by.
George,
Take us through the notes here. We'll be right back.
make the market bounce, George. Okay, I might get stopped out of here. This thing don't hold up. Got 4 contracts of the SPX.
Cut the cord on the way you get market news. It's Market on Close. Join me, Oliver Rennick, for the biggest earnings coverage, insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern, available anytime, anywhere, on any device for free. Only on the Schwab Network.
Welcome back to Trading 360. I'm Nicole Penelides, live on the floor of the New York Stock Exchange. Time for developing stories this morning. I want to bring in Kevin Hanks, host of
So next week I cut out pasta.
And yesterday we saw Nvidia dropping 9.5%. It was the largest one-day market cap loss of any equity ever. The Department of Justice is looking into this. I heard there was some sort of rebuttal from Nvidia. It's at 107.81. Tell us a little bit about the story and where we stand, Kevin.
Hey, Nicole, a lot of traders went home yesterday going, what exactly was it that took Nvidia down 9.5%, 279 billion off their market cap? Well, we may have gotten the answer after the bell. The U.S. Justice Department sent subpoenas to Nvidia and other companies as it seeks evidence that the chip maker violated antitrust laws. An escalation of the investigation into the dominant power of AI processors. Now, the Department of Justice had delivered questionnaires. These were a little more legal.
The government punishes you if you get better.
Antitrust officials are concerned that Nvidia is making it harder to switch to other suppliers and penalizes buyers that don't exclusively use its AI chips. So all the competition, Nicole, that we've been talking about between AMD and Intel and Nvidia, all their customers, Google Alphabet, Meta Platforms, Amazon, Microsoft, Tesla, all those customers all thrown into a pile, and now the Department of Justice thinks that Nvidia may be executing some type of monopoly. What they say, their response that you mentioned is, it's merit-based. We're winning because we're the best. And the competition is still there. AMD and Intel are competitors. They're just not as good at us. Now, Nvidia stock sold after the bell yesterday, traded down as low as 104 and change this morning. Now all the way back to close to unchanged, around $108. So kind of a roller coaster day here for Nvidia, but a big story coming out, and of course, a response by Nvidia, Nicole.
Yeah, and if you check so many of the other names, like Intel's down 11% this week,
Yeah.
Nvidia's down 9% plus, Taiwan Semi down 5.5%. So the group certainly has been beaten down. Thank you for all of that.
Yep.
Kevin Hanks, good to see you. Appreciate it. Good luck there at Nvidia, 107.74. Time for a disruptor as George Sillis is standing by, senior markets correspondent, taking a look at First Solar. Bullish note from Jefferies.
Haven't looked at FSLR in a
First
while.
Solar today, which is higher by about 1%.
Yeah, it is higher, Nicole, just fractionally today. I think if you look at Jeffrey's call, I mean, we've talked about First Solar a few times in the past year or so, but they're really focused more on the bread and butter for First Solar, which is the utility grade
Not good.
solar. And this includes things like solar farms and utility installations, as well as their microcontroller technologies. I think the solar market is essentially sort of bifurcated. You've got the residential solar providers, then you've got the utility grade industrial side and commercial side, and the residential market is basically dried up, considering transaction volume for existing home sales and even new homes is actually down quite a bit because we know there's a shortage of houses. But I think Jefferies is looking at First Solar in terms of what's going forward for the business. They've got a tremendous backlog until 2030. They also see robust selling prices going through to 2027. And they've actually incrementally increased their price target, which was $258 prior to the call. They still maintain a buy rating at $271 now. I think the other thing is I looked at going back to May when we covered the stock the last time. I did notice that the 2024 earnings per share at that time were about $3.60 a share, as well as over $22 for next year. Those numbers have actually
Could
not
buy
changed.
4 more of
It's
them.
quite ironic that if you look at the stock price, it hit. This was an early
They give me
June,
$8.
$3 a share, and quickly retraced back to the downside. I think that had to do with maybe
Well, I'll just wait.
some of the political aspects.
I gotta get
with solar.
423. We gotta break the
Democrats have been very
200.
favorable to the solar industry. I think Trump
We break the
gained
21,
traction
I'm
in the
pretty sure
polls
we're gonna
during
get
the
up
time that
there.
First Solar actually fell. But at the same time,
This
I think
area.
there's another catalyst that even if the Trump administration does pull off his second presidency, there may be some tariffs put in place which would actually firm up prices. So I think in both cases, either Democrats
It's going to be
or
tariffs if the Dems are in there,
this
you
particular
dick.
company will benefit, considering as well that utilities are essentially public finance and they will pay their bills and are not susceptible to the discretionary spend, which is considered more concentrated in the residential space.
So the price target is now 271. They are seeming positive on this. The group, I mean, when you look at First Solar, it is a winner year to date, though it's off the highs of 306. It's at 215 today.
I got
How would you go
a pair
about
of
trading this name?
earphones I need to learn how to use.
So if you basically put the stock or even the financials in a box, Nicole, and they're not influenced by anything outside, the stock does look cheap on a forward multiple basis, trading at less than 10 times next year's earnings. But I think the overall aspects of the market sensitivity, volatility, and uncertainty around election is going to
Need headphones, please clean.
to bid the stock up, at least in the near term. So what I think will happen is if you look at the $200 level, which corresponds to some lows we saw in early August when our market correction occurred, I think those levels may be in play once again. So I'm going to put on, in this case, a bull put spread. I'm going to basically sell the 200 put. These are in October monthly expirations with 44 days, by the way. I'm going to sell the 200 put, and then simultaneously I'm going to buy the 190 put below that. So you can earn about $3 a share in credit, or $300 a contract in credit. And essentially all we need is for the stock to hold 200 or higher by expiration in 44 days, and your max profit is achieved of $3. But if the stock does fall below 190, you have to consider that max loss is $7 per share versus $3 a gain. But your return on risk is still pretty considerable at around 45%. And lastly, the reason I chose that strike is it does first correspond to the technical level of support, but second, that short strike of $200 has about a 31 delta. So it implies about a 69% probability that the stock will expire above $200.
All right. Thank you so much. Good to see you, George. Good luck there at First Solar for us today. That's our disruptor, and George Sillis with an example trade. Coming up next, our 360 round, our panel will break down what's going on with dollar trade falling double digits today. Right now, down almost 19%. We'll be right back.
Be part of the latest commodities action on Futures with Ben Lichtenstein, weekdays, 8 a.m. Eastern on the Schwab
Blake it.
Network. Available
If I don't break here, I'm going to stop
anywhere
out.
on any device for free.
Trading at Schwab is now powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
Download the Schwab Network app and join us to
We
follow
could come back down and do it. 1, 2, 3,
Schwab
2.
Network is available anytime.
Oh, I had 4 there if I could hit
any
that.
device
If not,
for
I won't
free.
leave it alone.
Schwab Network. Ethan, how's my favorite client?
Great. I started using Schwab investing themes, so now I can easily invest in trends, like wearable tech. Trends?
All that research sounds exhausting.
Nope. Schwab's technology does the work. So if I spot an opportunity in robotics or pets, I can buy those stocks in a few clicks.
Can't be that easy.
It is with Schwab.
Schwab investing themes. 40 customizable themes, up to 25 stocks in just a few clicks.
It's time to look forward
Find the next trend.
from every click to every tick.
There's no fear of missing out on next-gen investing.
Available anytime, anywhere, on any device for free. Empower your portfolio with the Schwab Network. He's Alex Coffey. I'm Jenny Horn. Join us for Next Gen Investing.
1 p.m. Eastern, only on the Schwab Network.
Welcome back to Trading 360. It's time for our 360 round, all about Dollar Tree, which is around a 4-year low. Has been down 9 days. Today is down about 19%.
We've got a flag. Break it. Break it. I'm up $70 on this one. And I'm down on this one here. If we break it, I'll definitely be up here. Got to break the 200. There we go. Now, do it. Yeah. Don't give up. Then we're at the 200 here. I'm up at 135. And I'm going to see if we can get it past the 200 EMA here. Because right now, once it pops, it drops the price. If I break the 200 here, I think we got an easy shot up. Right about here. 55335. That's called a yin yang. Well, actually, that one's one there too. That's the channel. Channel of resistance. Okay, breaky. Ooh, I just farted. That means I had a good lunch. This ain't working out too good. Just broke below support. We got a 1, 2, 3. Oh shit.
Appreciate it. Stocks have turned into negative, at least for the S&P. I'm Nicole Petalides. I'll see you later. Fast Market is next.
This election season, stay out of the muck and the mudslinging. Schwab Network's by-the-numbers coverage of the presidential cycle.
How could this election impact your financial future?
Next week is going to be a crazy political week.
Election trades are fraught with risk. No agenda, no hysteria, just good old-fashioned analysis of what policy means for your portfolio.
Stay ahead. Tune in to our election coverage on Schwab Network.
See, that kind of went down a little bit there.
The market is a multi-trillion-dollar beast. When there's profit there, you take it. That's always going through my head.
My job as a trader is to just make money.
With a history and a geography degree, how did you find your way into trading?
Trading attracts a lot of the best and brightest students because it is this enormous data set. It is incredibly competitive. And so if you really want to put yourself out there and test yourself, find out how good you are, it is very attractive.
So how are you exploiting?
He likes the competition.
sift through enormous, staggering amounts of data.
You certainly see patterns. Context is so important.
I think the best traders I've seen have insatiable intellectual curiosity. Otherwise, certain parts of your skills will become outmoded by competition or by technology.
When we look at your whole brain, don't see any activation in these emotional or reward pathways as if you don't have an emotional reaction.
I'm not very good at sales, turns out. I'm very good at trading.
I have a trading system that I've used for over 10 years now, and it's almost second nature to me.
Do you think that this is potentially a human superpower?
Well, that Asian girl's kind of cocky.
Welcome to Market Overtime on the Schwab Network.
She must be good.
Worked pretty much across all 11 sectors.
We deployed a fantastic array of new technology.
The companies that are doing well are almost too big to fail.
Have you set yourself up correctly?
And away off with their heads.
AI feels controversial on it's going crazy right now.
It is going crazy.
So what does all of this mean for the market?
As long as people want to buy it, the price can go up.
Oh my goodness, they cannot do everything they need to do to save this market.
Instead of taking cues, set the cues.
There's nowhere else I would want my money.
No more than 5% in any one stock, no more than 20% in any one sector.
Now there's a market for every single one of these people. There's a market for you.
Market Overtime on the Schwab Network. Thanks for tuning in.
Good afternoon, traders, and welcome to Fast Market here on the Schwab Network. I'm Tom White. We've got a great lineup for you today, including discussions and option strategies. We'll take a look at NVIDIA, which is attempting to gain its footing after falling over 9% on Tuesday, and Supermicro, which is lower after a downgrade this morning. And like Folio, break down consumer sentiment data in Chipotle, the Mexican restaurant chain stock, down over 20% from its all-time highs that we saw just in June. Now let's take a look at the major indices, which are hovering around the flat line. The S&P 500 fairly in the red. Dow Jones Industrial Average up about 55 points. The NASDAQ 100 flat on the session. And the Russell 2000 up just over 0.1%. To help me break down this market action, let's bring in my co-host, and that's Kevin Hinks. Kevin, not surprising, a little bit of consolidation today, but maybe warranted after that major sell-off that we saw to kick off September.
It's kind of like a lot of traders. I was just saying this on Nicole Pedalini's show. A lot of traders went home yesterday going, "What happened? Why did NVIDIA go down so much?" And then, not long after the bell, we found out that they're about to get served with subpoenas, and all of a sudden, you know, what can stop an unstoppable company, Tom? The government can stop an unstoppable company.
And it's not just NVIDIA. The DOJ is going after Google, Alphabet, Apple. There's other companies within this realm also.
Unavoidable toll booth on the highway of life, Tom.
Yes.
That's what regulators...
Don't make too much money.
Yeah, exactly. Whoa, success. Woo,
Yes.
bad. So anyway, the good news is NVIDIA hit right around $104 today and has recovered nicely off those numbers to rally, as have a lot of tech. That said, we're still not out of the woods this week. I think the choppiness, that morning sell-off, afternoon kind of rally back to unchanged, we were up almost 0.5%.
Yeah.
And something now back down to just slightly down on the day. Get used to that, I think. And for the next 50, 60 days, I think that's what you're going to see a lot of. Rallies getting sold off, dips being bought, choppy trading, a little bit of volatility. I think that's what we're in for.
Isn't that what it's kind of warranted in the markets right now, equity markets, after, you know, a really good start to the year through the end of August? S&P was up by 18%, did that over 2% pullback yesterday in the S&P 500. But it's also reflective of, Kevin, a lot of the economic uncertainty that's out there right now because of maybe a slowdown. The data kind of added to the sell-off that we saw yesterday, a new month, September, which is historically pretty volatile, that, hey, maybe taking some chips off the table wasn't a bad idea throughout this month into the Fed meeting.
Todd, if you made a list of things that could cause market problems, the list is getting long.
It's getting longer, yes.
It's politics, it's geopolitics, it's economy, it's macro and micro individual stories and overall economy. Think about this. And yet, crude oil can't catch a bid. With everything going on in the world, crude oil's having a tough time. And of course, OPEC's going to come out.
Okay, here's the spice report.
Those production increases that we talked about, maybe not so much now at $70.
Yeah, which was only 180,000 barrels a day, which is a drop in the bucket as far as worldwide consumption.
Yeah, so I just think there's a lot of reasons that the VIX is a 20 right now.
Yeah.
I think there's plenty. Actually, it seems a little low based on everything going on in the world, especially in an election year. So, listen, I think the next 60 to 90 days are going to be
rough,
fun, and active, and bumpy, and maybe not for the meek, frankly.
Right, and especially when the bar was getting too high, I think, maybe for equity markets. Dow hitting all-time highs just at the end of last week. The S&P 500.
Valuations, another one on my list. I forgot to put that on the list. Valuations.
Now,
yeah, exactly.
Let's take a look at the labor market, because that's going to be, the big crux of what the market's going to go off of this week.
Why are bonds rallying on a strong jolt?
Well, I think the bonds are rallying because I think that might be a safety trade at this point. That, hey, people want to get into a little bit of safety in this volatile environment.
That's a fairly weak JOLTS number that we got there.
Now, here's my question on the JOLTS number, because I think this
it's counterintuitive.
Right.
The lower, the worse.
Right. So,
or not the worst. The lower, the worse for interest rates.
Yeah, I think we were at 1.8, 1.9 people or jobs open for people looking.
When it was over 10 million?
Right. It got up to 12 million, remember that.
Yes, yeah.
And now JOLTS, the number of unemployed workers dropped to 1.07 versus jobs available. So that's starting to tighten it up. That's like the lowest level that we've seen in years.
And it's kind of like a PE ratio, right? You've got available jobs, you've got people. Well, this number's not getting smaller.
Right.
There's more and more people looking for jobs, and this number might be getting a little smaller. So, yeah, that number could keep moving.
Yeah, and then you have to throw into the labor force participation, the number of people that are out there in the workforce.
In August.
But a lot of those jobs, and it was, I think the number was over 8.1 million last month. Those were revised down.
8.18 is what a month ago.
That was revised down to 7.9 million. So there was a little bit of a lower bar going in it. But from the 8.18 number, that 500,000 jobs just kind of disappeared. But we always talk about that are those numbers accurate, or are they just left up there by companies where they're still not hiring for that position, but they left job openings out there?
This number, job openings, labor turnover survey, that's what JOLTS means. This reeks of a stale number, doesn't it? Because you're right. How many of those jobs, if you apply for, whoa.
Boeing bounced up.
That's not even supposed to be up there anymore. Why can't, which leads to the next rant, Tom.
There are a lot of people stuck in Boeing.
More high-frequency data. Why can't we get real-time data? Walmart, consumers, we get data on them so fast, so quick. Walmart gets every swipe account. Why can't we get more high-frequency data? One of the new Fed members brought that up at his first speech.
Well, it's a government. It's a government. That's why. It's not a tech company that needs to make their shareholders money.
Some new Fed member, his job should be improve the frequency and the accuracy of data.
Right.
Because these misses are absurd.
Yeah.
But do we trust Friday's number?
No.
Or do we automatically discount it by 68,000?
Well, there's always going to be that flux of revisions.
It shouldn't be that big.
Yeah, it shouldn't be.
Or you shouldn't do it once a year. How's that? Keep rolling those upgrades, but don't get me started on data and how stale some of it gets. You see this data, you're like, what? Crude oil rallies and inflation data on energy is down. How'd that happen? Well, because it was 2.5 weeks ago.
Yeah, and then you throw into the mix here then
Fed Chair Powell, his commentary out of Jackson Hole. Bostic came out with some comments today that he's more focused on the jobs market now. And
that's common sense.
Yeah.
I mean, that's not surprising.
But their dual mandate is now switched and pivoted to the fact that, hey, they're going to start looking
Kevin,
at this
you don't
jobs
sound too good
data
today.
with a magnifying glass, and that's going to be maybe, the catalyst potentially for them to do a 50 basis point rate cut, because that's starting to come into play.
I understand. Remember, they still have one tool. If they look at inflation or they look at the labor market, they still have one tool, and it's interest rates. I still think that they're going to talk you down from 50 basis points, no matter what. Not with a 3 handle on GDP, not with data that's slid to mixed. You can make a case, not one way or another. It's weakening, but it's more mixed. For every bad data point we get a pretty good data point as well. So mixed data doesn't require dramatic interest rate cuts, in my opinion. But if you want to make what I refer to as a maintenance cut and start easing it down, I think that's perfectly appropriate, and I think that's what they'll guide towards. Mary Daly, Loretta Messer, they already did guide to that a week ago.
Yeah, and if they do a 50 basis point cut, does that throw a little bit of caution into equity markets, Kev? Especially ahead of an election. And then, one side of the aisle might say one thing, well, why'd you do 50 basis point cut when 2 months ago you were saying, hey, maybe we only have one cut this year?
Milton Friedman's theory of the fool in the shower, small incremental changes in fiscal policy, not big dramatic changes.
Yeah,
are what's called for.
Bank of Canada, their third straight 25 basis point cut. They're down to 4.25%. Kev, let's look at some of the earnings that came out. On the retail side, we got Dick's Sporting Goods down 7%. That was a
solid numbers.
That was a pretty good report out of Dick's Sporting Goods, but expectation, the bar was high going into it, almost at all-time highs, and they guided a little bit softer than the street wanted. They still guided higher, but they guided a little bit softer.
And that's exactly what we talked about on yesterday's show, that they needed to have really good numbers to hold the incredible rally that they had. So that is not surprising. The trade we looked at, the discussion we had yesterday kind of set that up, that even though they're doing extremely well, and they're really starting to dominate sports apparel and shoes because their omni-channel view of how they do things. That said, the stock had an incredible run, and valuation was getting a little pricey, so not really surprising that Dick's backed off.
Now, let's take a look at another one of the dollar stores. Dollar Tree here capped down 20%. This is kind of reflective of what we saw at Dollar General last week, where that fell over 25% post-earnings. And you know what? Just listening to the commentary from the CEO where, hey, in this type of environment where there's inflationary pressures and a lot of people are under pressure as far as their spending goes, that the Dollar Trees would do really well. Now, traffic picked up a little bit, but they're still not doing well. They missed on EPS. They missed on revenue. They guided lower.
550.08.
What's the story, Morning Glory? Because this is painful.
And they talked about it on their conference call, their CEO. I guess it wasn't the CEO. He was sick, so it was the number 2 guy. He came out and said they're showing weakness in consumers, lower tickets, less trips into the store, and overall ticket volume coming down. So people are cutting back. And remember, we talked about that in the GDP data, how personal income, disposable personal income, and savings are all getting attached down.
My grocery shopping has changed. I'm buying a lot of my stuff at Walmart now because the store up the street just, 2 beets that big around for $4. Five chicken breasts, $22, halves. You can go to Walmart and get them for $12. My salad dressings are about $1 cheaper. Everything's cheaper. I save about 25% every time I go in there. Got stuffed out of the SPX, and now I'm wondering about the SPY. To add on or just leave it alone. Could drop down to 550 before lunch. We've got another hour. Russian lawmaker Butina on CNN report Biden administration to accuse Russia. Oh God, there he goes again. Biden is senile. He can't be talking anymore. He's going to get us nuked. Biden administration accused Russia lawmaker Butina on CNN report Biden administration to accuse Russia of effort of influence the 2024 election. Says the U.S. claims are pure rubbish. I believe it. That's what they said last time and they were proven wrong. Hence, Russia thinks it does not matter who wins the U.S. election. You know, no more nuts. Come on, SPX bad back on. Break the 200 and move up or get out. GM Bluetooth headphone wireless. What are they? I got to figure out how to put them in my. I still don't give me a name. GNMN, is that it? Break it. Back to 114. Oh, they're working. Break it. It's going to be the average right around 55.18 somewhere, 55, a little bit under 55.77. Need to break the VWAP. break it. There we go, finally. I need SPX. That's channel resistance right here. SPX has to break the 200. We're definitely out of resistance. It says it's ready to go. I've never used Bluetooth earphones before, so I'm trying to figure out how to work them. Bluetooth. Bluetooth. Pair new device. That's the Volkswagen. I don't want to mess that up. Power off.
Buckle up, America, because we're about to take you on a terrifying tour of our...
I don't know. Okay. We got a 1, 2, 3 on the SPX. Also needs to break the, if we break the 200, we're going to go higher, period. And then SPY broke the 200 and the VWAP, so now it's consolidating above the VWAP. It needs to hold that. And I'm back to 120. Could have added on down there, but I just didn't want to throw no more money in it. I've got plenty in that SPX. I almost was about even on it there at that last top. Break it. We're almost there. Come on. If we break it here, we're going to be doing good. If not, I should get out because I was down quite a bit. That's a hard resistance. I don't know where I got that from. Oh, there it goes. We're at 320. Break it. SPY's at 133. I can get out of it too. But I want to get it up to that resistance. Maybe get 150 out of them. What's the other one? I can watch both these here. You get 3 black crows, so it'd be the top of that crow. And then we'll lower it down to the body of that candle. So if we break that, it will definitely hit the blue line. That's where I want out. Now we're at 360, so I'm up quite a bit. If we break this, I'll be up a lot. $138. There we go. Come on, break it. I got 55295. 141. Give me 150. I'm going to get out here. That's $200. And if I get out, watch it pop. After all this waiting. We're down to 90 cents, 97, 146, 4 more pennies. Now I'm trying to get I'm getting penny pitching now, so I'm going to get it out at 147. Jimmy's out. Now the SPY's at 420. SPX is at 420. Time to exit. Exit, exit. All right, that was a tough one. Out at 420, you dick. That's good. Now I got to learn how to use these Bluetooth things if they work. I don't know how to use them. I've never used them before, so I'm technically an idiot. I'm tempted to just go out and get a pair of headsets and hook them up with a cord to my phone so it won't be so hard. I'll probably go up there. Oh, that was a nerve-wracking trade right there. What did I just do? Tesla moving up higher. Always clean this gym. Well, we got 45 more minutes left till the fat cats get back. Tesla got a pretty good move on it today. Go get some more water and I'll be right back. Make a cup of coffee, get back in it again. Boom, 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 boom. Got out just perfect. Not a bad day.
Market here on the Schwab Network. Before we take a look at Super Micro, let's bring in Ben Lichtenstein, Senior Futures Contributor here on the network. Ben, you've got stocks consolidating today, but maybe warranted after that steep slide yesterday.
Yeah, much more digestive trade compared to that bloodbath we saw yesterday to begin the month of September, Tom. And today, even though kind of a somewhat mixed trade, we opened in the red, then went back in the black, right? Kind of random type price activity. Here's what you're looking at, more sideways than not as far as what we've seen so far this morning. But I did notice that yesterday's low 55.04, unable to take that out. Today's high 55.60, well shy of that high we saw yesterday, 56.23 if I remember correctly. The NASDAQ traded down to 18,808, so briefly below the previous session lows, but without participation from the other three majors, Tom. Again, limited follow through, much more again like dust settling than real continuation of that weakness we saw yesterday. This comes after jobs disappointed a little bit, shows signs of furthering weakening, and a lot of anticipation in terms of non-farm payroll. Still have a couple of companies reporting this week to keep an eye on, but yeah, a market that's trying to kind of regain composure, I guess, after a big move lower yesterday.
Yeah, maybe needed at this point. But Ben, if you take a look at crude oil, back below 70 bucks a barrel, I mean, you know, the economy's doing well. Consumers still out there spending. Travel over the weekend, Labor Day, that was, you know, the most robust that we've seen in the history of travel during that period. At the same time, is this a demand issue globally? Because crude oil back below 70 bucks a barrel, pretty significant.
Absolutely. It feels nice to be filling up at the pump again around $3 a gallon. According to AAA, that's right around where the national average is, significantly lower than we were last year. This time, we had Ellen Wall join us this morning on the Future Show from Transversal Consulting. She talked about some of what was weighing on crude prices to $69, Tom's mentioned, below 70. Seasonal variations in demand, oil consumption generally dropping after Labor Day, combined with some of the other factors. She cited signs that political turmoil in Libya has been resolving. OPEC Plus indicating that they're going to increase some of that production in October. She talked about China cutting back on refinery runs, basically independent refiners running at half capacity, and slow construction and transportation of goods cutting diesel consumption in China as well. So you've got multiple factors that are weighing on crude, and we've seen the dollar kind of inch its way up off of those recent lows, coming off the recent test of that lower extreme. So again, crude oil back below 70, keeping those prices at the pump down, but also weighing on some of those economic conditions, concerns here in the U.S. and globally, to your point.
Yeah, music to my ears, lower gas prices. All right, great stuff. Thanks to Ben Lichtenstein. He's the host of the Future Show here on the network every morning. But now let's bring in George Tillis, Senior Markets Correspondent here. George, talking Super Micro, downgraded today out of Barclays. But you know what? The stock's still up nearly 50% this year, but man, it's been a downtrending over the last 6-8 months or so.
It has. I mean, we talked about this company at least a couple of times, and ideally speaking, this was essentially one of the darlings during the gold rush that is artificial intelligence. But I think the reality is really starting to set in for Super Micro, which, if you look at it over the past 6 months or so, has been trending to the downside. We're almost back to early this year levels, starting in again about January, February, where the stock really took off. And obviously there's some concerns with what's going on with the underlying company. First off, there was a most recent decline we've seen was based on the short selling report. which, first time for me, the first time I've ever seen it, which is when the company actually comes out on the same day as the short seller report and says, yeah, we're not going to file our 10Qs. So that's not a good look for Supermicro. The stock is down. Now there's some questions about inventory management and sort of this mismatch between cycles of expenses versus sales. And effectively, this is creating a gray area that is becoming a challenge for analysts, which now Barclays, if you look at their call, is sort of right-sizing their estimates for the fiscal year 2025's EPS as well as price target. We're in Q1 of 2025, but they've moved their price target down to $438 from $693. And so they see the elements behind the limited visibility on margins. And the other thing is, we talked about this in our previous segment when we covered Supermicro. I think there's a lot of competition problems for Supermicro. Now, the other thing is Barclays also talked about this erosion of competitiveness that Supermicro is facing. Now, if you look at their technology, it's quite unique. It's a total integrated solutions, both cloud software solutions as well as hardware, particularly servers that are plug and play for NVIDIA's graphic chips. But you have to consider technology shifts. Right now NVIDIA's got some delays on their next Blackwell chips. The Hopper chips are still in demand. Those fit very well with Supermicro's technologies. And their liquid cool technologies are some of the things that people look at and said that they're pretty meaningful. But you have to think about competition. It includes Hewlett-Packard Enterprises, Dell, even IBM. And liquid cool technologies are not unique to Supermicro. They've been used in technologies like computers, servers, and even automobiles for that matter, for quite a long time. So I think there's competition problems that Supermicro is facing, which again is then creating some challenges for earnings visibility going forward. And this is why Barclays has downgraded their price pretty significantly from $693 to $438.
George, when they came out with earnings, a big problem in their last earnings was margins had come crashing down to modest levels, not that you would think for something in the AI business.
Tesla 222.
Uncertainty around this company with all the different things that we can list has taken this valuation down. I've got it 10 times fiscal 25 earnings in terms of a PE ratio. So how much of the risk in this company is out of it right now? It's getting, if it's healthy, if these things all dissipate, this stock is valued fairly cheaply.
That's the thing. So the crux of it right now is when will the price sort of settle out? And if you look at what you mentioned, Kevin, at the end of 2025, it's trading at less than 13 times. 2026, less than 10 times earnings. It's a significant discount to where it was in the past. The other thing is I think what's happened here, and the reason margins have been so compressed, is there was a huge inventory build, and they have to assume the cost of that build without assuming the sales of those builds. And that's where the gray area is, that essentially the short seller and of course maybe the delay of the 10Q is founded from. I think if you look at the forward basis, the expectations for sales are expected to continue by over 30%. And that's from an earnings standpoint, not necessarily sales. Their sales are expected to grow around 12 to 13%. So their earnings per share growth is expected to be 3 times their sales and trading around 10 times forward earnings. So at some point it'll find a bottom because it is relatively cheap, assuming all the numbers are accurate.
Yeah, delaying that 10Q, the short seller report, lots headwinds for this company in the near term anyway. All right, great stuff. Thanks to George Tiller, Senior Markets Correspondent here, helping us break it down. But Kev, let's dive into the example trade I got. Kevin Green and NVIDIA sold a short put vertical after that steep slide in NVIDIA. Well, I'm doing the opposite, Kev. If you think this stock's going to maybe consolidate, maybe you agree with that downgrade out of Barclays, here's a strategy that may take advantage of that. Going out to the September 20th monthly cycle. So really short-term positioning here, Kev. Selling the 455 strike call and then buying the 470 strike call. So a short neutral to bearish $15 wide call vertical. You're collecting roughly about a $4.25 credit. So it's a big boy vertical. That takes your break even up to 459.25 over the next 16 days, Kev.
This is, I think I got the probability of finishing out of the money at exactly 68%, finishing out of the money. So this is just a fade, thinking that over the next 16 days, not much will be resolved. Now, it's risk defined. You're collecting $4 plus in terms of your premiums, but you've got about almost $1,100 in risk. This is just everything we talked about, the three pillars. It's just bigger numbers.
Bigger numbers. Nearly a third the width of the vertical is what you're collecting on this one. We mentioned that break even just below $460. So you got some cushion to the upside. Kevin mentioned the high probability of success on this one also, and the risk on that one. That's all the way. Max loss
Big
would
pop
be
on
about
that one.
470 strike. So you have that cushion on a short-term position here. All right, that's going to wrap up that short call vertical here in SMCI. All right, that's going to do it for us today here on Fast Market. And stick around right here on the Schwab Network. Next Gen Investing's coming up.
We got a half hour before the fat cats come back.
And the mudslinging Schwab Network's by the numbers coverage of the presidential cycle.
How could this election impact your financial future?
Next week is going to be a crazy political week.
Election trades are fraught with risk.
No agenda, no hysteria, just good old-fashioned analysis of what policy means for your portfolio.
Stay informed, stay ahead. Tune in to our election coverage on Schwab Network.
The market is a multi-trillion-dollar beast. When there's profit there, you take it. That's always going through my head.
My job as a trader is to just make money.
With a history and a geography degree, how did you find your way into trading?
Trading attracts a lot of the best and brightest students because it is this enormous data set. It is incredibly competitive. And so if you really want to put yourself out there and test yourself and find out how good you are, it is very attractive.
So how are you exploiting human weaknesses?
Being lucky in trading is great, but it's not the formula for success.
You need to be able to find opportunities in the marketplace and sift through enormous, staggering amounts of data.
You certainly see patterns. Context is so...
Patterns.
I think the best traders I've seen have insatiable intellectual curiosity. Otherwise, certain parts of your skills will become outmoded by competition or by technology.
When we look at your whole brain, we don't see any activation in these emotional or reward pathways, as if you don't have an emotional reaction.
I'm not very good at sales, turns out. I'm very good at trading.
I have a trading system that I've used for over 10 years now, and it's almost second nature to me.
Do you think that this is potentially a human superpower?
God. I need to get rid of that commercial.
Welcome to Market Overtime.
Dear road rivals, every new Toyota comes with Toyota Care, our no-cost maintenance plan. Nissan and Ford.
Under pressure. Under pressure. getting ready to squeeze again. Tesla, yeah. Pressure. Yep, I got a resistance for Tesla. Vegas sent me a resistance here at, what'd she say? It's like 2250, but let me look for me. We broke resistance today. So the next one's right around 224.88 area, if we can maintain this area right in here. So we're kind of at a resistance right now. The 1, 2, 3 top, and if it stays bullish, you got to hold the 221.87 area. $220.93. Right to the penny. So we got to break 222. Got to gain respect above 222. Right now we're at a resistance. 1, 2, 3. Overhead, as Mike would call it, an overhead resistance. $221.97, somewhere in there. $221.87, $221.97. That breaks. Your next one's right around 225. That's another $3. We've had a good run on it. Yes, I get an F for Tesla. I used to be my everyday trader there for a long time. God, where all these tweets come from? Okay. Got an inverse head and shoulders right now on the SPX. There's the neckline. We got 15 more minutes. Anybody ever get to see ZZ Top? Randy? We did get a newer high on it. 2222222222222222222. Too many. Too many twos. Well, DG. I think that's a horrible company. Dollar General. Did pull back to my support though. Yes, today. And DraftKings, DFKG. I haven't heard seen that. Is it DF or DKFG? What the hell is it? DraftKings. DKNG. Ugh. Yeah. Got 14 more minutes. Let's see what we're at the 200 at resistance on DraftKings. It's got a bearish flag. That ought to pick up in the wintertime. especially with football season coming up. Nice little rebound for today for Boeing. And VZ. You got support for 217.77, 777s, 217.77. In case it just pulled back. And it stops right at that engulfing candle on the hour. Now it'd be above the 9. Dow Jones flat. S&P winners today is GEV. It's GEV. I don't think I've seen that one before. General Electric had a huge dip yesterday. And now with GM, what did it do? And Volkswagen's having some issues. They went EV car. They can't afford to make them cars. I think Biden's plan is going to screw over a lot of companies and a lot of people. We've got to have them engines. Okay, SPX is pulled back to support. I'm waiting for this, but I don't know. What do you think, Righty? We're definitely hit that shoulder line. And we've just got like 10 minutes for the fat cats to get back. I got stuck in this trade here and finally worked my way out of it. I for sure thought I had that bounce off the 200. You still holding some shares of DraftKings? I'm going to look at it again. We have to break the 200 on that hour. If we break that 200 on the hour, you'll go up higher. They got a price target. UBS adjusts price target to 58 from 56, maintains a buy. $58. Sasquatch raises the price target to 48. So yeah, the winner plays in. I think we got the winner play going on here. That's $20. That's a big increase. It's a big upgrade. 58. Oh man. Thinking long at least $45. Oh yeah. I remember a guy when I lived in Hawaii, he sat around in a chair all day long. Okay, well, I'm going to watch SPX here. Sat around all the chair and he gambled. And he had urine bottles. He had gallons of urine bottles all the way around him. He hardly ever got out of that chair. He's so addicted to playing poker. I went in his house one time and I just, oh God, I went, this guy was a professional gambler and he made like $250,000 a year, but he sat in that chair all day long and peed in that frickin' gallon thing. Oh, that was rather disgusting. My roommate was an actor for a Y50. They had started a new series. I can't remember what it was, back in 2004. It was his brother, I think. So I'm watching the SPX right now. SPY was at $1. It's at 106 right now. We hit that support line. That's a Head and Shoulders. Now what I got, see, these almost look the same. And that goes to Meta. Called out Meta today. It just hit my resistance. I feel so bad about yesterday. I'm just still down about it. I mean, I'm up from, I got my money back plus. And I'm going to get my money out of this sucker here. And they got the 63. $460 to $420, you're up $60. Schwab. DocuSign. I haven't looked at that one in a while.
Today, I guess now we're seeing actually some overall softness hit the market as we're seeing now the Dow slip slightly negative. So seeing some overall weakness on the session, but we have earnings tomorrow. How do you think about trading this name?
Called out Mara this morning and we hit my resistance.
Set up an example trade here. So the overall trend is down, but we could be near that key supportive area that we mentioned during our chart presentation here. So based on that idea, we're going to bank on the notion of this support area holding here near that 55 level here. So the example trade we're considering here, -1, September 13th, 55.50 put vertical at a 150 credit here. So a short put vertical, 9 days to expiration, pretty short-term trade here, mostly looking for an earnings move to the upside here. A neutral to bullish play is what we're putting together here, and our break even would come in near 53.50. So about 5.4% to the downside. So we got a decent bit of a cushion here before we would start to
3 more minutes and Fat Cat's come back.
in this trade. Max profit 150, max loss would be 350 or so, and we can also see when we look at our shaded area that this is a more high probability trade. The expected move is about 630 or so
I
for
don't
this
know,
option
man.
series expiring in 9 days.
I'd rather
Even
wait.
could be in jeopardy if we head to the downside, but
I'm gonna put an alert
it's
down
not
here.
really aligned with this
I don't
shaded
trust.
area here, so more likely to wind up profitable based on that calculation that we use here. Alternately, you could buy calls around that 60 level, that other ceiling I mentioned. If
Yeah.
you're feeling more bullish, that would be another way to play this. This
Yep.
is a more soft target though, where we just need to stay above that break even to keep the credit.
Okay, right. And just need to hang out just basically above this 53 or so dollar level here,
Yeah.
and we have some time. I mean, that's towards the end of next week is when we officially expire. So earnings pure play, but also we have a little bit of duration on the tail end of this. But now to look at Broadcom, another name that also has earnings, a bit of a bigger, I'd say not more important,
Oh, man, I
maybe
gotta-
more influential name that has earnings this week, because Broadcom has, as Caroline pointed out previously, been able to hold on to, amazingly so, a 40% rally
check out
this
the
year.
car.
So it's actually looking like one of the standout names in resiliency as far as like the recent tech sell-off has been concerned.
For sure, and in terms of market cap, in terms of size, you're absolutely right. This is the biggest name next week that's coming in terms of earnings players here. But, it's an interesting chart as we look at this one. Longer term blue trend line going upward here with a notable excursion to the downside that we had. But it was quickly reversed. We very quickly made our way back above that trend line. And more recently, today, we once again held on to this supportive point here. So it seems like this trend line could be worth keeping an eye on as we go forward. Now we have rallied back above this green line that I have here. 155.41 represented the low points that we saw before yesterday's downswing that took out both of our moving averages, our yellow 21-day and orange 63-day exponential moving averages. We are recapturing the 63-day today for now, so let's see if we can hold on to that level and maybe get another push to the upside for the bulls to take out that 21-day EMA and come back to this kind of resistance area between this red and pink line here. 172.42 to 177.10 represents the near-term high points of note, Jenny.
So now, okay, again, when we look at momentum here, what has RSI been telling you, and have we seen it match some of the choppiness in price?
The price has been kind of a difficult situation.
Well, we know the market doesn't hold its gains.
Dashed lines here are two trend lines. They're
Today's been a real,
from each other, even
like
though
if
they
you're
are
up and you're out, man, you get out. Now, we're definitely down here at a solid support.
Pattern here. Difficult, tricky
I'm tempting to go ahead and give this a shot at $3.
Further and further apart from each other, so it can be a sticky situation.
We can
here.
come back down here and hit
If
the
you
double
just
bottom.
kinda look at from here to here, we've got kind of a triangular shape.
They can come back down here and hit this double bottom. But right now we got a 1, 2, 3 with possibility of a 4 if you want to count the wick. And we've got, right now, the Fat Cats just showed up. So I'm going to jump in this trade. I'm going to give it a Fat Cat shot. Snake, we have a fallen wedge. Not a very, I mean, it's a fallen wedge. Exchange trade funds. After manufacturing data, equities retreat after manufacturing sector data. Top cryptocurrencies drop. Bitcoin drops below 58,000. That was on the 3rd. Yesterday, we got a reversal candle to the upside. September 4th, 5-5 strike, 5540. Okay, we're getting close to the double bottom. Now, we got to hold this area right here. Net is at 235. So I got 240. I'm in at 240. That's a double bottom, higher low. We'll see. Set tight stop. It's a descending flag. We can go lower, it looks like. It's not today's low. I mean, we get 55.10. I don't like that too well. So, let's see. I'm going to give it a couple minutes. We're holding up the 9. That's what I said in the video there. Let's see what I had. I'm going to sleep good tonight. This week's kind of wore me out so far. Yesterday really got me down. So 55, let me write this down. 551792. I got in at that's off the 50. $55, $20, $32. Come on. Nvidia had 253 million in volume, almost 254. I want to see if I can get back up to this shoulder line of this Head and Shoulders, the SPX. To the 200. Back to even. God. Ameritrade's running a little bit behind Tastyworks. About a couple seconds. They'll cut that pretty loose pretty fast once it hit the 21. DKNG. I'm going to put DKNG in here. Instrument SPS is not tradable? What? That's tradable in my book. Tempting to go out and walk around the building real fast, get some oxygen in me. I'm in this one here, 55.40 strike at 240. We got to break the 21. There we go. It's a good start. Bling. Now, another school shooting. Oh, come on. Kids are crazy anymore. We never did bring guns to school. We settled our differences with fists. No knives, no guns, no killing, just a good fight. Yeah. I don't think nobody, the only people that brought guns were the farmers. They put them in the back of their truck. But we had one murder back when I was in high school. Now we have about 50 a year. On average. Couple every month, plus 3, maybe 4. They've kind of settled down now, though. There for a while during the so I got an expansion pattern now, which is a sign of weakness. I was up $5. Magnificent wants you to get a microphone, Randy. Yep, Fat Cats ain't too happy right now. They should have bounced this up at least to 1 o'clock. 2 o'clock Eastern. Power hour's coming, so there's a lot of scary stuff happening. Yeah, we're going to go back down. Damn it. That could be a big drop. I don't know if I want to take that challenge. I'm going to get out. I'm afraid to say it, but I might. Down to 140. Spy. $5.50.15 maybe. And we'll be right back. I'm still in this trade. Yeah. Now what are we at? What? Should be up more than that. Three white soldiers have expansion pattern. That's paid. Not holding up well. God. I don't like the expansion pattern down here at the bottom at all. Yeah, I think.
Go. I'm Kevin Hinks. Catch me on Fast Market.
Kevin Hickey.
Weekdays at noon on the Schwab Network.
Welcome back to Next Gen Investing. It's now time to look at Nordstrom for under 30 today, and I'm joined by my co-host from the IC, Caroline Woods, as well as George Tillis, senior markets correspondent for the network. So George, walk us through the latest of this buyout offer, which I think is really interesting, but shares don't seem to be reacting much as we're pretty much unchanged on the day.
Yeah, they're not reacting much. And, you know, you have to look at the context of what's happening here with Nordstrom's. You know, going back just a couple of quarters ago, the stock has picked up in terms of traction.
Yep,
There's
there
always
she
been
goes.
speculation, essentially, of a takeover of the company. In other words, all the shares outstanding would be purchased by the founding family. Today, we got confirmation of that. But here's the thing. If you look at the share offering price, it's right around $23, or based on the number of shares, which is about 162 million, it comes out to about $3.76 billion. But, you know, the stock itself is really not reflecting, you know, that takeover premium, which, albeit, again, is slightly a higher premium. But nonetheless, I think this is essentially a situation where, even though the price is higher over the last year by 49%, the stock is still down over the last 5 years by about 20%. And here's the kicker. If you go all the way back to 2018, there was another offer which was rejected by major shareholders, institutions, if you will. That was around $50 a share. So now the founding family is essentially offering less than half of what they offered just 6 or so years ago. And they're basically saying that, look, this is a great offer considering, you know, if you look at the conditions we're in economically speaking, or the current market conditions, they actually
Spy
see
says
this
we're going to
premium
go up.
to fair value.
But
Now,
I don't
can
trust
see
it.
where they're coming from, because if you look at, the price action over the last 6 months or so, the stock was trading around $17 or $18.
550.
Which,
Didn't you say it earlier? 550 something?
The current price relative to the estimated forward
Your 550 right here.
$17 or $18 would put it around 9
550,
times
81 or something like
earnings.
that.
Right now it's trading around 12 times, so it is trading at a premium to that 9 times earnings. And the reason I'm bringing up that 9 times earnings is because if you look at the earnings growth for the business, it's relatively flat. And so typically speaking, if you see businesses that have some positive sales growth, which is the case here for Nordstrom, sales growth is rather modest, around 2%, and earnings is relatively flat. Typically, you'll see these businesses trade right around, the high single digits, if not the low double digits, in terms of their earnings multiple.
Okay, so fair in terms of the more modest growth, but I guess when you compared it to estimates, Nordstrom in this latest quarter that it reported last month blew past analyst estimates, and sales were stronger than some of the peers like Macy's and Kohl's, so it was certainly an earnings winner. I guess I'm just curious about the timing. Would now
Somebody
be
wants
the
to
right
buy my
time
property.
for Nordstrom to go this route?
Well, that's a good question. I can't say for sure, but I will say this. Obviously, there's a special committee that needs to bring this officially for vote. And, if you look at the ownership stakes, insiders and family-owned have about 17 or so percent. Institutions still have the majority, around 54%. Now, the offer back in 2018 was rejected at $50 a share. I think there's a possibility this also gets rejected at $23 a share, irrespective of the fact that, maybe some market conditions right now are poor on a comparative basis. If you go back and look at Nordstrom's, and I'm going to look at the pre-pandemic year of 2019, total sales back then were essentially $15.5 billion. Fast forward to the last 12 months, sales, even though they had a really good quarter last quarter, were only about $14.7 billion. So sales in the last essentially 5 years are down compared to where they were 5 years ago.
That ain't good.
And earnings, this company's still profitable. They earned about $284 million last year, but that's down about 49% compared to 2019 at $564 million. So my point is maybe the situation for this business is not dire. I'm not going to put it in that context. But obviously, sales growth is decelerated, earnings growth is decelerated, price also is decelerated. It really comes down to what's this franchise worth, and I think it's a great franchise. Both their private label and their premium brands that they offer. It's a great department store, and maybe this is why institutional investors who own the majority may end up rejecting this offer, even though it's slightly higher than the current price.
Yeah, and I think that's a good point, George. It'll be interesting to see how this plays out, because I think this isn't the first time we've heard these type of news to headline just circulated, but I mean, we haven't seen it come to fruition, and so we'll have to be watching. I think there's a bit more legs to this story than perhaps in the past. We will leave it there, though. Great insight, George Hill, senior markets correspondent for the network, and Caroline Mutz, my co-host for the day. Appreciate the insight and you joining us for this entire hour from the NYC. That'll do it for Next Gen Investing. Coming up next, we have the watch list with Nicole Petalidis.
This election season,
Dan Ives says that Meta is using AI the best.
by the numbers coverage of the presidential cycle.
Coca-Cola
Impact your financial future?
Next week is going to be a crazy quarter.
still in this trade.
Are fraught with risk. Nope.
Coca-Cola hits an all-time high as Nvidia loses $279 billion. They make it sound like a big deal. Let's get rid of this. news. Live news. Yeah, that'd be good. One heck of a run this morning. I got out of it right there, and I'm back in it now, so. I'm going to add big time here in a second. Could have got 120, 125 right there. Get 10 of them. I got 2 now. GRPN. I haven't looked at that one in a while. God, Walmart's Walmart had a 3 this week, had a all-time, well, not about all-time high, but a 3-year high. Recession stock. Oh, here we go. I'm going to add on here. We could drop more. This thing could be worthless. A triple bottom at 55.08. Jenny. The Dow Jones is in the red. The Russell's in the red. We're flat more or less, except for the Dow Jones. It's been hit the hardest, and it's only down 76. All the other ones are flat. Dollar index down. Gold futures are up. Well, they keep pumping gold. Everybody's pumping gold. All the YouTube channels. Bitcoin futures down to 58,170. There's my sweetheart Nicole. Come on, baby.
More labor data. What are you watching?
Yeah, so far today we're getting the start of a 3-day period here, Nicole, where we're going to learn a lot about the labor market, right? We got our first one today showing not as strong of a labor market as we've had in the past. The JOLTS, job openings, labor turnover survey came out this morning. 7.673 million job openings. That's significantly lower than the highs we saw 6 and 12 months ago. Last month's revised from 8.18 million down to 7.91 million. Now that's our first look at the labor market this week. Tomorrow we'll get ADP payrolls and jobless claims, and then of course Friday we'll get non-farm payrolls, where the expectations are, after 114,000 jobs last month, 160,000 is the estimates. Unemployment going from 4.3 to 4.2%. the market will like that, but wages are expected to go from up 0.2 to up 0.3 and month over month, and 3.6 to 3.7%
Not my wages.
year over year. Not sure how the market will take that if wages firm and start to head back upward, Nicole. But the next 2 days, a lot of data focusing on the labor market. Now, we still have productivity and costs, PMI and ISM services. So between now and the end of the week, a lot of economic data, Nicole.
Okay, and you're also watching crude oils. It's fallen below $70 a barrel. Some of your thoughts there?
Crude oil really showing the effects of the relationship between supply and demand. Why is that? Think, Nicole, of all the tensions we have going on in the world with Ukraine and Russia, with Iran and or Israel and Gaza, with Iran, with China, now Libya and OPEC Plus.
Iran and China getting into it?
All these issues going on, and yet crude oil finds
I don't know if that's the truth or not. I ain't heard about that.
Where is it? 1.3%, trading 69.41. So now below $70 in crude oil. Now that might be tough for energy companies, but it's actually very good for many.
China and Russia, weighing in the
Airlines,
threat.
Cruise ships, they all do better when crude oil prices are lower. So crude oil breaking below 70, pretty significant. And don't forget, against inflation, a lower crude oil price. So pretty good news there, Nicole.
All right. Thank you so much. Good to see you, Kevin Hanks. We've had some breaking news, folks, on U.S. Steel. Right now, it is open and it's down about 18%. This is the Biden administration is preparing to block Nippon Steel from buying U.S. Steel, according to the Washington Post. This is a $15 billion deal, and it would have gone to Nippon, which is the largest Japanese steel maker.
We're coming down.
Assured folks that it would remain run by U.S.
Triple bottom into close, I bet.
Directors. It's a $15 billion proposal, but it has been mounting and political opposition. It's based in Pennsylvania, a battleground state. Of course, you've had the U.S. Steel Workers Union has been facing some resistance, so it's a lot of back and forth on this. In the meantime,
So far, I've had a pretty good day until this one here, and it's not down that bad.
for volatility multiple times throughout this day now, and it is continuing to the downside each time it resumes trading. Right now, $28.20, down almost 21% for U.S. Steel. Now for a look at the bigger picture in the market, Phil Argues with us, Director of Investment Strategy, Signature Estate and Investment Advisors. Thank you for being with us. So, what are you thinking about the market here today? We have seen volatility. Even tried to give it a go today, back in the red.
Well, thanks for having me on, Nicole. I think it's important to step back and look at the bigger picture. First of all, yes, we're getting some volatility. I think this is expected just with the amount of economic data that's coming out this week. Kevin talked about it in the prior segment, but I want to take a step back and just think bigger picture, longer term first. If you look at the leadership in U.S. equities, really for the last 16 years, since 2007, it's been all U.S. large cap growth. And it's been, sort of an uninterrupted outperformance of large cap growth stocks, which is normal during any economic cycle. But the important thing is every economic cycle, if you go back through the 90s, back to the 80s, every economic cycle has a different asset class that's leading. So if you go back to the 1980s, it was all value. It was consumer staples, was a big outperformer. You get to 1989, lead up to a recession, leadership changed. We went from value outperforming, then over to growth. And obviously the growth, dominated the 1990s with the culmination of the dot-com bubble. And then later, in 2000, obviously the rotation switched again. We went from growth outperforming to value. Value dominated the early 2000s up until 2007. So we've had this huge run of 16 years where growth stocks have outperformed by a huge margin. And just for context, large cap growth has outperformed large cap value by nearly triple the return over that time period. They nearly 10x'd the return of emerging markets, right? So we've been in this huge long run of large cap growth outperforming. That's normal during an economic cycle. What tends to work at the beginning tends to work all the way through to the end. but we know that we're late cycle. So we've got to start thinking about when do we start rotating out of large cap growth? Where do we start looking for value?
God, I keep saying that.
And this economic data that we've gotten earlier this week, as Kevin alluded to, the JOLTS report, is showing signs that the economy is slowing down. So I think it's important for historical context not to get caught up too much on the one day Nvidia's down or growth stocks are down and values outperforming. I think this is we're getting close to an inflection point where the trend will reverse, and it's not going to be for a couple months. This is going to likely be a trend that will reverse and continue to reverse for probably multiple years. So I think investors need to just be aware of these changing dynamics, and this is normal. This is what we get towards the end of an economic cycle.
So at this point now, if you start to see some reversal and some rotation, are you moving out of certain positions, moving into other positions that seem like they may be better bets for the near future or the next year or two?
So 100%, and I think it really depends on your time horizon. So if you are, in the camp that we're gonna have the soft landing, Jay Powell's gonna thread the needle, and the economy is gonna continue to grow, you're still gonna want to own tech, communication services, and we still own those names. We certainly do, but we do have an eye for the exit. If we start to see weakness in the labor market, some things that tell us that the economic cycle is coming to an end. But we've also started to dip our toe in things that are much more value oriented. So financials, energy are two areas that trade at significant discounts to the market on a PV, price to earnings basis. And then also we've taken a little bit of a defensive position in utilities as well. If the cycle starts to turn, you would expect interest rates to come down. Utilities are a good defensive play. But if the cycle continues and we continue to see this, demand for data centers and energy, utilities also have an upside, way of participating in the upside there as well. So we recommend kind of a barbell approach, but most importantly, you got to be willing to pivot and tilt as the economic data kind of points which direction we're going. And while we still like growth and we're still in those names, if the cycle is coming to an end, that's an area where we're going to look to underweight and favor some of these more value-oriented areas, and certainly those parts of the market that have been left behind for much of the last 15 years.
So a barbell approach, right? Having some risks, some safety plays, I guess, more defensive, I guess you could say. We're going to get the jobs report on Friday. We're getting some of the beige book print right now as we speak. It talked about economic activity, which grew slightly in 3 districts, but the flat or declining districts also increased, and that increased to 9 from 5.
One lazy day.
That, there are some tough prints. I mean,
Anybody get the puts on the way down?
And showed some slowing. In fact, people started to talk about a hard landing again. This is the big picture of where we are. Do you think things could change? I mean, when do they change to something more positive across the board instead of this one's good, this one's bad, this one's good, this one's bad?
It's been a lot of that. And so, look, I think importantly, so we look at 2 things that give us sort of...
Give me some water.
And within this context, you're going to have prints...
I'm going to take a nap here soon.
But there are 2 big...
I'm going to try to figure out how to use these
most importantly is the labor market.
Earplugs.
If we continue to print payroll reports that are above, let's say, 75,000, I think we're okay. If we have jobless claims that are still below 275,000, right now we're at 230,000, we think the cycle continues. But historically it's usually weakness in the labor market coupled with weakness in credit markets. So if companies aren't able to roll over their debt, you start to see credit spreads starting to widen. That coupled with labor, that's where you tend to get the real economic weakness. And we think that economic weakness, when it comes, it's not an if, and unfortunately it's a when, has historically marked the turning point between this growth in value and a big leadership change. So we don't think it's imminent. Yes, we get all these data points, jolts earlier that Kevin was talking about, but we don't think it's imminent. But you want to stay nimble. You want to be on your toes.
And you still are overweight tech, financials, and energy right now, right? Just to be clear.
We are. So we do have. I mean, we are positioned for the soft landing. We think that's still the that's where we want to be. However, we know, okay, if we see weakness in credit markets, we see weakness in labor markets, we would expect to shift, to a more defensive posture. The challenging part, as you mentioned, Nicole, is you get these prints we saw yesterday. Obviously, a big spike in volatility. Construction spending was down. ISM manufacturing disappointed. And I think part of it, you got to look through some of this, day in and day out stuff and go back to your sort of core thesis, which is that, hey, if the labor market's holding on and credit markets are still functioning well.
At 130 now, I got these at $1.
I think we can get through, these periods of some patchy data. And I think it's important to
be a good idea to get out right now here.
Does it ultimately affect the labor market? We'll find out on Friday. That's
If we break the 63, boom.
And also tomorrow with jobless claims. But importantly, I think it's important to put these weekly reports that we get into a broader context and stay focused on the longer term.
Good to see you, Phil. Thank you so much.
So I'm up
Phil,
about 100 right now.
Estate and investment advisors. Thank you. Coming up, Options Corner.
I got 10 of these and 2 of those.
Unusual options activity for the day and how investors are looking to trade on recent news. The Spider Utilities ETF, Chipotle, Apple, big names to watch here. We'll be right back.
Hard time breaking it. Last 3 times we were up here, it didn't break, but doo-doo. Drink it. There you go. Now we're talking. 150, I'm up 500. 55. So I'm gonna get out here at the double top.
Empower your portfolio with the Schwab Network. Available anytime, anywhere, on any device.
55.24. I'm gonna get out now, hell with it.
Schwab Network.
Trading the trending
150.
games every day. I'm Tom White, host of Fast Market. Ready for
Double
you,
top off this
ready
head
to
and
go
shoulders right
at
here.
12 p.m. Eastern on the Schwab Network.
Welcome back to the watch list. Time for Options Corner. We analyze unusual options trades that we're seeing throughout the day, real trades. We welcome in Tom White, host of Fast Market here on Schwab Network, taking a look. And you actually found one focusing on the utility sector in particular, which has been at the highest levels that we haven't seen since 2022, really, right? You found a bullish play in that group. So interested to hear more about that, Tom.
Green again.
The utility sector within the S&P 500, one of the best performing sectors so far this year, and you have to wonder about that. Are people pushing into the utilities for maybe a little bit of safety? Is it because that we've seen yields come down, the 10-year now below 3.8% as inflation starts to pull back? Is that the reason why? It's dividend-paying ETF here, the XLU, a lot of dividend-paying names within it. You've got Nextera, Southern Company, Duke Energy. Those are the leading names within this ETF. But this one's definitely been outperforming. The relative strength indicator, you get the chart right there, but the RSI, or relative strength indicator is at the 72 level. So that's overbought. Anything above the 70 level. So if you're looking at it on a technical basis, maybe getting a little bit stretched here today, but can't really bash against this one. 2.9% dividend yield in this ETF. That's one of the reasons why it might be considered a safety play along with those falling yields. So this might provide some opportunity for investors. But we did see some bullish activity in there. You mentioned this ETF is just below all-time highs that we hit a couple years ago. But we did see a buyer out in the January monthly cycle. So about 135 days to expiration. Trader bought over 5,000 of the 82 strike calls, paid an average debit of about $1.15 on these. So the break even of 83.15 over the next 135 days. That's about 8.5% above the current share price in there. Call volume, there's only about 25,000 calls have traded across all option series and strikes, but that's still about 4.5 times normal daily average volume, Nicole. So people keep pushing into this area this year, and this trader thinks that XLU is going to continue to move higher into the beginning of 2025.
Yeah. As you noted, a defensive play, and people like that, particularly in a barbell approach, or we always see people sort of having that defensive way, particularly during volatility. How about Chipotle? When we had Brian Nickel go over to Starbucks, and there's been obviously a lot of eyes now on Chipotle, and it's at $52 after the split, right? Tell us about the neutral to bullish trade that you found for today.
Yeah, shares a little bit weaker today, but still up about 16% this year. But on the flip side, those all-time
We got three crows.
$69 a share that we saw in June. It's fallen over 22% from those levels. So we've seen that pushback. Brian Nickel, he's out, right? He helped transform Chipotle. Now they've got over 3,000 outlets across, mostly North America, but with expansion plans to hit about 7,000 over the next couple of years. So that'll be a benefit for them. And if you look at this sector as a whole, whether it's the fast casual or fast food type chains, the growth rate is still there for Chipotle. Last quarter grew 18% on revenue number. Overall growth rate of about 16% over the past 5 years. Comparable sales were up 11%. That's double, triple what we normally see out of chain restaurants. So they're hitting on all cylinders. The new CEO, the interim CEO, Scott Boatwright, he's been with the company since 2017. So he's been there longer than Brian Nickel was, who came in at 2018. Chief Operating Officer going to take over. Now, does that change the narrative? Well, I think a bunch of investors think so because of that pullback we've seen from those all-time highs. But we did see some neutral to bearish activity in here as far as unusual options activity. And this is out in the October monthly cycle. So you've got 44 days to expiration where a trader sold out of the money calls with the expectations that, hey, the stock might go up a little bit, but it's not going to go up a lot, or it's just going to continue to fall as that trend's been in place over the last couple months. In that October monthly cycle, traders sold 5,000 of the 55 strike calls, collected a credit of about $1.78 on those, so that break even at 56.78 over the next month and a half. That's about 7% above the current share price in there of Chipotle. So it might be somebody trying to offset some losses on their long stock. It might be somebody just taking off a long position, but this trade setting up that maybe gains are going to be capped here in Chipotle over the next month and a half.
All right, thank you for that. And last but not least, we're watching Apple. Target price raise over at UBS. That would actually match the all-time high of 236. So you found a bullish play. I'd like to hear more about that. Now, of course, let's not forget the big iPhone event next week too.
Yeah, that's the big catalyst I think that a lot of traders are focused on Monday, that it's Glow Time event that they're going to have where they're going to release the new iPhone 16. That's the 18th generation of the iPhone. And expectations are expanding as we speak on sales for this because it's going to be AI enabled, right? All these new software updates that they're going to have in there to run AI across their ecosystem moving forward. They might release some new AirPods also. potentially some other products during this event. But I think if you take a look at how the stock's performed, up about 14% so far this year, down a little bit today, giving back some of the gains that we've seen so far this year. The ramp up that we've seen as far as expectations going into this, all the analysts, including Dan Ives that we have on the network, kind of saying, hey, this is a super cycle. Well, I've heard that story before, Nicole. I don't know if people are going to run out to buy a phone just because it's AI enabled at this point, but everybody's expecting a super cycle. Apple did tell their suppliers to prepare for about 10% more initial iPhones, and that's according to the Nikkei wires out of Japan, that, hey, they expect production to have to be ramped up because demand's going to be pretty robust. But all eyes are going to be on that event on Monday. And the unusual option activity that caught my eye today was out in the September 13th weekly cycle, so 9 days to expiration. They're going to capture that event on Monday. And typically we see a pullback in the shares whenever they have a product release because we usually ramp up into the event. But we'll see on this one. But this trader's setting up maybe for some gains moving into that event on Monday. In the 220 strike calls out in the September 13th weekly cycle, trader bought over 9,000 of those for an average debit of about $3.70. So the break even for this trader, where he's profitable, is 223.70 over the next week and a half. That's about 1.5% above the current share price. So you don't need a massive move to the upside, but you are paying a pretty hefty debit on that $3.70. Calls are still out trading puts, even though the stock's down a little bit today by nearly 2 to 1 ratio at this point. But yeah, this is going to be a big one on Monday afternoon when they release these new products. And this trader's betting that, hey, by the end of next Friday, we're going to see some more gains for Apple.
Tom White, thank you for that. I agree with you. I can't wait to see what actually happens. Will people, in fact, run out and upgrade their iPhone? Is AI going to make all the difference? Dan Ives thinks so, as you noted. So we will see. Thank you, Tom White. Options Corner today. We appreciate it. Coming up, we'll look at a new platform aiming to invest in the explosive growth of women's sports, starting with WNBA. Now, Fortuna Investments joins us with their first television interview on the platform with a very famous guest. So stay with us, an NFL, former of the NFL. You'll hear more.
Trading at Schwab is powered by Ameritrade, bringing you futures and forex for round-the-clock market access, even when equities markets are closed. All on our award-winning Thinkorswim platforms. So no matter what or when you want to trade, Schwab has cutting-edge tools, curated education and insights, and trading specialists ready to help, however complex the strategy. With a wider range of opportunities, you can trade brilliantly with Schwab.
Kickstart your morning with a full dose of commodities, technical analysis, economic data, and live reaction in global markets. Available anytime, anywhere, on any device for free. And available on all your favorite streaming services. Futures with Ben Lichtenstein every weekday, 8 a.m. Eastern on the Schwab Network.
Knock, knock. Number one broker here for the number one hitmaker.
Thanks for swinging by, Carl.
No problem. So what are all those for?
This lets me adjust the bass, add more guitar, maybe some drums.
Wow, so many choices.
Yeah, like Schwab. I can get full-service wealth management, advice, invest on my own, and trade on Thinkorswim.
You know Carl is the only front man you need.
Oh, I gotta take this, Carl. It's Schwab.
Have a choice in how you invest with Schwab.
Accelerate your market knowledge and shift your perspective into full view. Real-time example trades, a full hour of trading insights. I'm Tom White. I'm Kevin Hayes. Catch me on Fast Market, weekdays at noon.
Always cleanest Jim.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab
Yeah,
Network.
what's up?
Hi, good afternoon. This is Bella. How are you doing today?
I'm a little shook up.
Daily live exclusive content tailored to today's investors.
Broadcasting 24/7 from our studios in Chicago.
And from the heart of Wall Street at the New York Stock Exchange.
Up to the minute market insights.
Example trades and stock-specific analysis featuring the smartest minds in the business.
No, but who's going to pay for it?
No politics.
No noise.
Analysis ahead of the biggest events for the economy.
From bell to bell and beyond.
No.
Watch live
and on demand.
24/7, 7 days a week on SchwabNetwork.com.
And on all your favorite streaming services.
Available anytime, anywhere.
On any device for free.
Schwab Network, empowering every investor and trader.
Every market day.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 6 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Neil, how's my favorite client? Quick question, Carl. Can you offer me the same choices as Schwab? Choices? Yeah. At Schwab, I can get full-service wealth management, advice, and invest and trade on my own.
Come on, you know Carl's the only choice you need, right? Neil, tell me you know this.
Gotta run, Carl.
Schwab. Have a choice in how you invest with Schwab.
Welcome back to the Watch List. I'm Nicole Petalides, live on the floor of the New York Stock Exchange. Last night, Caitlin Clark, the Indiana Fever, secured a playoff spot, guaranteeing one of the league's most recognizable players appearing in the biggest stage. So Clark and the Chicago Sky's Angel Reese, we watched her as well, right, became the faces of this explosion that we saw in the popularity of women's sports, women's basketball in particular. So for a closer look at some of the opportunities, economic opportunities, right, let's talk to our guest, Justice Parmer, CEO, Fortuna Investments, and Frosty Rucker, Vice President of Sports and Entertainment, Fortuna Investments. And of course, you'll know Frosty as a 13-year NFL veteran. I'm very excited for this interview because I think about now you're launching into this platform. Justice, you've been with Fortuna Investments. You've had a successful track record in other areas, technology and mining and space. Why now? Why this particular platform for women's sports, Justice? Where do you see that opportunity?
That's just it, Nicole. The setup is outstanding. I've never seen a setup so robust and so buoyant at this current time. This is a financial channel, so statistically speaking, the women are underrepresented in basically every statistic out there. And then that's everything from Fortune 500 companies only attributing 6% of their advertising spend to women versus the 94 to the men. The leagues are now drawing record amounts of interest and attention. You mentioned that this Caitlin Clark and Angel Reese effect that's really come to light, this year effectively. And the thing is, every sport on the up has those those athletes that transcend and take these sports and leagues to the next level. And I think we're witnessing that at this current moment in time. And it's really, really nice to be on the forefront of this booming industry.
And Frosty, you're involved in this. First of all, I looked back. You were not only a great NFL player and USC, and everybody knows you from the Bengals, the Browns, the Cardinals, and of course, last but not least, the Raiders. but you seem very entrepreneurial from younger age. I saw you at Street Clothing. You were working on legalization of marijuana. You're very interested in growth and opportunities. So why now women's sports is it for you at this moment in this particular juncture?
For one, thanks for having me on. I think having a diverse nature in all I do within my lifestyle and who I am helps in this. I'm very comfortable with the knowledge of how professional sports runs from a player perspective, also as operation, as I inspired to do that for a very long time. And now, like JP just mentioned, the rise of women in WNBA specifically is just the right move. Supporting the league in their efforts to grow the sport and broadcast the ladies is where we see this trending, and we really want to be an addition as far as a subtraction when it comes to how we help out in society.
And it's interesting. I love this dynamic here. Where do you make money?
It bounced up to 190 and right back to 105 like that. Man, this is a tough market on this pullback.
Do everything. So what's on the agenda in the first few months?
Yeah. So we've really honed in, obviously women's sports is a very broad platform. We've really honed into the WNBA. As you well know, the WNBA is owned over 50% by the NBA, so it's got the backing of a big brother or big sister. So there's a lot of stability there. We like all aspects of the league. We love the programming aspect because it's kind of on the shoulder season to the big leagues. It's now in the national media attention, and there's something really kind of special happening there. And then in terms of our current focus, we're looking to deploy at least $50 million of capital into an equity ownership stake. We're having very deep discussions with existing franchises and clubs. And incidentally enough, there's a franchise expansion opportunity that's really kind of caught our eye that we've been spending the last few months in really kind of honing in to see if we can potentially be a part of a because the league currently has 12 teams. They announced 2 successful franchise expansion teams, Toronto and Golden State. They're going to announce Portland as the 15th team, and there's a 16th team that's going to be going to market for the 2027 season, which is very, very interesting. And Nicole, to your point, it hits on a lot of those, in the team ownership, not only can you influence the, or support the players in a really, really nice way, but it has that ecosystem of the finance nature, the corporate sponsorships, the stadium, the developments, merchandise, all areas that we're very, very comfortable with in VC company building.
Yeah, and I think you made a good point too. I mean, it has the backing of the NBA, so I mean, there's already plenty of muscle behind it, let's say. And when we watch Caitlin Clark and Angel Reese setting new records up, it was fun watching them in college and fun watching them set new records in their new roles. In fact, to your point, we're seeing stadiums sell out that have never sold out before the WNBA. We're seeing eyes and numbers for viewership for women's basketball that we've never seen before, more than the men's in some cases. So, Frosty, at this point, you keep the lifestyle brand, Active Legends. Is this just another move for you in your entrepreneurial state?
Yeah, this is something that I've wanted to do for a very long time as I transitioned out of professional sports. Meeting JP while I was playing for the Raiders and having a chance to understand who I am and what I can bring to business. And it's just been great. This is not just another thing, it's a passionate thing to help push push the WNBA down the court, so to say, is a very key thing that I would love to explore. And I think we'd do an incredible job. Like I said earlier, being able to be a professional athlete and seeing it from that side, being a part of 2 different CBAs while I was in the professional leagues in my decade of playing, decade plus, I bring a lot to the table. And as a group, we really think we can support our franchise itself and also the WNBA with a lot of fresh ideas and new ways to market this next generation of young ladies coming up.
Yeah, and look, I mean, you understand the staying power too. You were an NCAA 2-time champion yourself. You're watching these young women really take over, and now they're only just beginning. Yeah, you know, you deserve all your accolades, well earned. They're only just beginning in their careers, so hopefully they'll have long careers. Justice, when you think about this, how
You got 55, 08, 52.
umbrella of Fortuna Investments? I mean, this is going to be one area that you'll be pushing. What else has been doing well for you, and does it fit in with some of the other plans that you've had?
Absolutely, great question. I mean, it's straight, and we've thought long and hard about this. We don't, when we embark in new areas, we like to win. We've had a track record of winning. We've had a track record of building companies and very, unique asset classes. We've currently spent the last few years very deeply immersed in the space exploration industry. Very, very exciting. And when you break down the thesis, it's we're talking about the same things. It might be a different industry, but these are basically startup companies, and that need a lot of love, need a lot of lifting, need a lot of thought and consideration, need some capital, obviously, but it's companies and organizations that we're trying to get to that next level. And so that fits extremely well with things that we've already done and that we're looking to do forward. And then once we have our opportunity or shot at this, I think we're going to do an exceptionally good job of community relations, of increasing shareholder value. And as you pointed out, they don't necessarily need our help. They're doing exceptionally well, on their own. But I think we can really bring some unique ideas and help and services into that league.
Yeah, and look, women's golf has been doing really well. You just came off of the Olympics, where we saw so many incredible athletes, Olympians, women, in sports, so dynamic. So I'm sure there's many opportunities. I know that you said in the notes that you'll initially target equity investments of $10 million to $50 million in the WNBA, but I'm sure that you'll be able to expand this in many, many ways. That being said, we're almost done here, Frosty. I'm sure you watch some of the women's sports. Do you have any favorite women athletes that you've been watching, whether it's the WNBA or the Olympics?
Well, I would keep it real. Caitlin Clark has expanded my vision in the WNBA more than I already was looking into it. I do like Juju coming out of USC, coming out. I'm a big fan of hers. I come from the background of watching Alex and Felix run. I love all sports, and just to be a part of this rising sector and be a part of a change is always what I'm looking forward to. So I'm happy and I'm up for the challenge and up for the opportunity.
I'm sure. It's so exciting. And of course, are you ready for some football? It's time. It's time for kickoff, everybody. I'm telling you, everybody's going crazy. I work on the floor of the New York Stock Exchange. Everybody, I mean, I know there's fantasy football teams, but any game, any time, it's an exciting time. Do you have a favorite team or who you rooting for or betting on, Frosty?
I root for everyone who cut my checks. So just so everyone knows that if it's the Bengals, the Browns, the Raiders, or the Cardinals, I'm rooting for them. And when they play each other, I try to stay neutral and stay out of it.
Oh, you're like Kelsey's mom. Yeah, right? You're like the Kelsey mom when the two brothers play each other. You just try and... I get it. But those are your teams and your old friends. And so, yeah, I get it. It's great to see you both. Thank you so much for the opportunity to learn more about your growth and investments in women's sports. Nice to see you both. Thank you so much. Justice Palmer, CEO of Fortuna Investments, and Frosty Rucker, former NFL star, as well as VP of Sports and Entertainment at Fortuna Investments. Thanks. 90 minutes left in the trading day. We've seen some back and forth action after yesterday's big sell-off. Right now, the Dow's down about 60 points. Here's a look at the numbers. The S&P is sitting at 55.13, down 0.25%. See down arrows across the board. Let's get to those numbers. And let me just note that the small caps are down 1/3%. Let's continue our look here at the market. We're going to look at some of these tech stocks, Intel in particular. We'll bring in Caroline Woods, senior markets correspondent here on Schwab Network, looking at Intel, which obviously a tough day for Intel, and it's been a tough year for Intel.
It certainly has. Intel shares down more than 60% year to date. We've seen some of the chip makers try to rebound from yesterday's sell-off. Not the case for Intel, though. Shares are down another 2.7% right now. There are multiple news headlines swirling for Intel. Just to break a few down, there's the Bloomberg report that the CHIPS funding and plans could be in grave trouble, saying that there are growing questions questions about if and when Intel will even get that CHIPS Act funding from 2022, saying that Intel has grown frustrated with the government dragging its feet and has urged officials to release it faster. But then apparently, according to this report, Intel has resisted sharing certain information by the U.S. officials who are seeking to really vet its viability. I will say the CFO is speaking at the City Tech Conference today and did say that it's unlikely that they'll get any of that money until the end of this year. And then there's this Reuters report that Intel CEO Pat Gelsinger and other executives are expected to meet to present a plan to directors later this month, and could have to talk about some drastic measures to really right the ship, including shedding various businesses, including its programmable chips business. And they'll also talk about ways to reduce capital spending, including potentially scrapping plans to build a $32 billion factory in Germany. And then there's another Reuters report too about Intel's contract manufacturing business that has apparently been dealt a setback.
I got 550.15 for the day opening price on the SPY.
Helping as well. And then of course yesterday there was the report that Intel could be kicked off the Dow because it's the worst performer on the Dow, as we said, down about 60%, a little bit more than that year to date. I will say there was one piece of good news today. D.A. Davidson upgraded shares
Need to put an alert on that.
Sell or reduce, but there is a catch. Cut their price target to $21 a share from $34. Intel is currently trading at $19.50, so a little bit of upside there, but not all that much according to D.A. Davidson.
Yeah, look, I mean, there's no doubt they're trying to make a lot of cost cuts, saying there's no stone unturned when they're looking as to what they can cut to try to save more money and make it happen. But they said that won't be realized till 2025. I mean, shareholders are extremely frustrated with this stock. Let's turn our attention from the down arrows to GitLab, which is a winner with an up arrow.
Yeah, a huge winner. Shares are up about 19% right now. The software development platform reported earnings that topped analyst expectations. They also raised their full-year outlook. I think the outlook is really what's driving shares higher today. They said they expect full-year sales of between $742 and $744 million. That was above a prior outlook of $733 to $737. They also raised their full-year outlook for adjusted earnings, saying they now expect 45 to 47 cents per share. That was higher than the previous guidance of 34 to 37 cents. The CFO said, as we enter the second half of fiscal year 2025, I'm confident that our ability to continue to exceed customer expectations and in the opportunity we have with AI to further accelerate tangible business outcomes. We saw quite a few analysts hike their price target following this report. Wells Fargo is up to 75, B of A is up to 68, Baird raised to 62, RBC raised to 60.
55, 25s. I'm getting ready to take his trade.
80% of analysts are positive on shares. So GitLab shares up 18.5% right now, but still down more than 15% year to date.
Yeah, and that goes with Intel, which is down 61% year to date. I mean, it's tough, right? Tough, but nice to see some up arrows there today. Caroline Woods, thank you so much. Let's continue our conversation on some of the movers that we've been seeing. Dollar Tree, for example, is a big laggard in the S&P 500. In fact, the shares are falling to four-year lows, had disappointing earnings and revenue. Their earnings report from Dollar General last week sent those shares to six-year lows. So what's going on with the consumer pinching the poorest? What's behind the struggles that we're seeing in the discounters? Joining me right now, Inaz Durand is with us, advisory services at SimilarWeb. Thank you so much for being with us. That is something that Dollar Tree really noted. I mean, they talked about the intense pressures that consumers are facing. You're hearing that in so many places. What's going on?
Indeed, actually, and it's a trend we're seeing across the board, right? Across different retailers, discount retailers in the US, we're seeing actually 18% decreased traffic in the last 6 months year-over-year, and it's across the board, across various categories, whether it's big box, whether it's
SPY should have triggered right
fashion, consumer electronics, etc. It's being a bit downside. Why? So the easy answer will be inflation, easing and shifting consumer behavior. Maybe a fringe of consumers are not going to retail stores because they have more money. I don't think it's the right answer. We're seeing actually these dollar stores are being very constrained by rising operational costs. And as you know, they have way lower margin as they saw low price item, right? And they're struggling to compare against giants as the likes of Amazon, Walmart, or even Temu that have their product range that have higher operational margins, and then thus can offer more discounted items to the customers.
So at this point now, folks are feeling that pinch. To your point, it's across the board. You're seeing in big box. Granted, there were some areas that did better, like Walmart. But for example, Dollar Tree talked about the number of people that were coming in, that they were spending less. I guess there's no urgency for folks to spend. Even, it used to be that they were looking for a discount. Even when they see a discount, they're skipping, right? But some of these other names, I mentioned Walmart, but you could probably put Amazon and Costco. Some of those are still doing pretty well. Why is that?
Food.
I think, it's
groceries.
all about, as I mentioned, the operational or higher operational margin of these players allow them to entice customers with bigger discounts, right? If you're thinking about Amazon or Walmart, they also sell like these bigger purchase items like, AirPods, etc., where they do high margins on it, which allows them to push for these very aggressive discounts that then puts these discount stores like pretty much in a bad situation.
Yeah, understood. Tell me about consumer confidence, because that's part of the volatility. Even the consumers are feeling volatile. One day they say, okay, I'm going to go spend, and another they say, oh no, maybe I shouldn't.
Actually, and that's pretty interesting because we're actually seeing an overpart of retail, an uptick in interest for retail, right? But maybe, I guess, their consumers are shifting to other type of goods. For instance, what we're seeing is an uptick to second-hand clothing retailers. There is a very good hype for marketplaces where people sell and buy their own goods, their clothes, their home products. So I guess it's not completely a whole decline. It's just maybe a quest for more quality than these discount stores, and maybe a taste for sustainability as well. That could be one of the drivers that makes people leave these dollar stores.
Yeah, as you talk about sustainability, I think you make a great point, because younger folks like to go to those thrift stores. The jeans, if you return a jeans, then you can get a jeans. Diamonds, they want lab-grown diamonds. It's just a different mentality. I mean, there's a demographic that's coming up that are they're not interested in the high ticket, right? But they can't afford it anyway, a lot of them, not all of them. A lot of them can't afford it because this time, I mean, rent is so high, gas is so high, food is so high. I mean, who has money to spend on anything?
And actually, that's really interesting is that a lot of discount stores used to sell like branded stuff, right? Like very famous brands, like household item brands. However, there is this big movement among Gen Z consumers that is dupes, right? So they will tell people online that they found the equivalent of this expensive brand that might be sold, by the way, on discount stores, but they're not going to be primarily driven to these discount stores. They will look through these bargains on TikTok videos, etc., and try to find the best deals that may not be these brands, these famous brands that have been around for 20 years anymore, and still get the best deal.
It's great to see.
But
Thank you for that. Yeah, thank you for that, Inez. Thank you, Inez Duran. Thank you. Similar way. Still ahead, we're bringing our panel to talk all about those job openings, or lack thereof, right? It was a slower market, actually the lowest since 2021, and we're waiting on a labor print on Friday. What do we need to know? We have our guests ready, Sam Stovall and Ed Butowski, next.
Neil, how's my favorite client? Quick question, Carl. Can you offer me the same choices as Schwab?
Yes.
Yeah.
We all have the
At
same
Schwab, I
color
can get full
ties.
service wealth management, advice,
All the
and
same color
investment trade
suits.
on my own.
Come on, you know Carl's the only choice you need, right? Neil, tell me you know this.
Gotta run, Carl.
Schwab.
Have a choice in how you invest with Schwab.
I haven't bought a tie in
Power your portfolio with a Schwab
8 or 9
network.
years. I got a whole bunch of them. I went on I think I got 10 or 12 ties. Them things ain't cheap. If you tie a double Windsor.
We're watching jobs, jobs, jobs. Job openings? No. In fact, they've declined. In the JOLTS report, the job openings report, it showed that we've sunk to the lowest level of job openings.
Okay, there's my support.
2021, fewer than 8 million. In fact, new jobs added. So what does it mean for the outlook for the economy?
Just got my support just triggered.
We'll get claims tomorrow. We'll get non-farm payrolls on Friday. Our
Yeah.
panel is ready. Ed Batowski's with us, managing partner at Chapwood Investments. Sam Stovall is with us, chief investment strategist at CFRA.
We're almost to my support on the SPX.
818,000 fewer non-farm payroll jobs from the spring of 23 to the spring of 24. We have to make sure to add that in. So things weren't as good as they seemed, perhaps. Sam, where do we stand now? It's good to see you.
Hey, Nicole, good to talk to you again. Our feeling is that we're probably going to see an improvement come Friday's numbers. I think they're certainly more important. The JOLTS report, the initial claims will give us sort of a hint as to what we're likely to see on Friday.
Well, they're taking a lot of credence to this jobs report.
Guarantee that the Fed will cut in September. And now, once again, investors are wondering whether it'll be a 50 basis point cut rather than the 25 that we're still sticking with.
Yeah, and Ed, he mentions claims here, and 8:30 last week. People are more into jobless claims at 8:30 in the morning than they have been ever in a really long time. I'm sure you would agree because we're all watching them. Ed, what are you watching now, and what are you thinking?
Well, I'll tell you, agreeing with Sam, I do believe that we're going to see a rate cut in September, but I also believe that it's going to be 50 basis points. And I think some of this JOLT report out today really laid claim to the idea that the job market is a little bit stronger than what people thought it was. Because you have to remember, you're looking at jobless claims, and that those numbers have gone up. So you're looking at a very slow economy still, even though the labor market is really done by surveys, and it's not a real strong indicator. You have to look at GDP numbers to really get a strong indicator of the economy. But I do believe that we're going to see a rate cut in September.
Yeah, understood. And Sam, when we look at JOLTS, sometimes we say, oh, well, they're not listing jobs because they're all taken and everybody's employed and everything's wonderful. Or is it really the story that they're putting fewer jobs out because they're trying to watch costs? Are you finding that companies are, we just heard about Intel trying to cut costs with no stone unturned for how they can cut costs. Is that more of the mantra that you're hearing now, Sam?
Well, I think certainly when you look at the headlines, bad news, if it bleeds, it leads. And usually job closures are the ones that get greater headlines than job openings. So we are seeing that with the JOLT report, that hiring did rise more than anticipated, but at the same time, the job openings fell below expectations. So, I would tend to say that, Ed could end up being right with a 50 basis point cut in September. I don't think that the Fed will come out of the blocks like a sprinter from the Olympics. They'll let us know that they're not behind the curve, but I think they're going to try to keep their powder dry.
Yeah, and some people would interpret the 50 basis points as worrisome. You already have September worries, you have slowdown fears. The 50 basis points could insinuate that the economy is terrible or something worse. Could that mean sell-off, Ed? What kind of reaction would you expect from the market quickly?
Yeah, I do believe that the market is pricing in a 50 basis point drop. And I think anything short of that will be really difficult for the market to digest. So I think 50 basis points is baked into the market already.
All right, that's interesting. So you think the market's based on the 50. Sam, I spoke with Ken Leon earlier today. He always speaks highly of you. I know you guys work closely together. Technology, financials, communication services. He said those were some of the areas that CFRA was still moving towards as far as investing. That sound right to you? And what do you say about those sectors? Is that where we might see some growth or good investment ideas?
Yes, well, certainly there's a difference between near term and longer term. Our expectation, our analysts focus on stock growth in the coming 12-month period. And so majority of our buy and strong buy recommendations
Definitely
are
fast
in
scalping day.
communication services, financials, and tech. Of course, we are in the challenging period for the market. September and October of election years are the double decliners, if you will. And it's the more defensive areas that tend to hold up best in this slack 2-month period. So staples, utilities, healthcare are among the ones that are down the least, whereas in a sense all sizes, all styles, and all sectors have posted declines in these 2 months of election years since 1992.
It's great to speak with both of you today. Ed Batowski, Chapwood Investments, Sam Stovall at CFRA. Ed, Sam, thank you both. That's going to do it for us here on the watch list. I'm Nicole Petalides. Glad you're with me every day at 11 a.m. here on Schwab Network, where you can get the app. It's available in the Apple App Store. Tune in 24/7, schwabnetwork.com. Thanks for watching. Keep it right here. Market on Close with Oliver Reddick is next.
This election season, stay out of the muck and the mudslinging with Schwab Network's By the Numbers coverage of the presidential cycle.
How could this election impact your financial future?
Next week is going to be a crazy political week.
Election trades are fraught with risk. No agenda, no hysteria, just good old-fashioned analysis of what policy means for your portfolio.
Stay informed, stay ahead. Tune in to our election coverage on Schwab Network.
The market is a multi-trillion-dollar beast. When there's profit there, you take it. That's always going through my head.
My job as a trader is to just make money.
With a history and a geography degree, how did you find your way into trading?
Trading attracts a lot of the best and brightest students because it is this enormous data set. It is incredibly competitive. And so if you really want to put yourself out there and test yourself and find out how good you are, it is very attractive.
So how are you exploiting human weaknesses?
Being lucky in trading is great, but it's not the formula for success.
You need to be able to find opportunities in the marketplace and sift through enormous, staggering amounts of data.
You certainly see patterns. Context is so important.
I think the best traders I've seen have insatiable intellectual curiosity. Otherwise,
knifey poop.
Certain parts of your skills will become outmoded by competition or by technology.
When we look at your whole brain, we don't see any activation in these emotional or reward pathways, as if you don't have an emotional reaction.
I'm not very good at sales, turns out. I'm very good at trading.
I have a trading system that I've used for over 10 years now, and it's almost second nature to me.
Do you think that this is potentially a human superpower?
Schwab Network's like no other financial media you've watched because it's all markets, all the time. It's 100% finance. We look at everything as traders and investors. And everything we say, everything we do is through that lens. There's no ulterior motive, and there's no subjectivity. There's no random guesswork about what we think. We are following the numbers all the time, relentlessly. We have the best CEO interviews, hands down. They're longer, more thorough, and tailored specifically to our audience. We never take our eye off the ball, which means we're always ahead of our peers.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim. With robust charting and analysis tools, nearly endless customization, and up-to-the-minute news and insights. Trade brilliantly with Schwab.
Good afternoon and welcome to Market on Close. I'm Oliver Reddick. Thanks for tuning in. We got an hour left, 60 minutes. Stocks down. Not that much though. Looked like it could have been another pretty ugly day, but we got a good rally. And then it faded though. So right now we are heading into the close with some pressure back on.
Back on.
And the rally earlier, wasn't very impressive. It was on bad data.
We are now in power hour.
That is a good thing. So wasn't a big believer of it. VIX now shy of 22. Seems about right. Last employment report was a domino that got us to VIX 65. Why not go into the next report at an elevated VIX? Seems pretty reasonable. Not as high as it was, obviously, in the midst of the chaos and the end trade blow up and all that stuff. But when you've got such high stakes right now for the economy, seeing some volatility ahead of the report, I think is very reasonable, especially when you've seen the deflation of the AI bubble, if you will. Market's got a tough battle ahead here, and that makes the economic data even more important. Look at the way today we moved on job openings, jolts that came in light. Wasn't a good number. Pretty bad one, actually. It's been a couple years. So when you've still got this problem with AI dragging, with NVIDIA down, been flip-flopping throughout the day, but generally down, tech soft. So obviously you take that huge momentum trade, put it to the side, and that leaves you with pretty much the macro narrative as the driving force for stocks right now. And that makes sense given that we've been rotating, seeing strength in more cyclical sectors. Obviously the economy becomes a lot more important. Here's the catch. Economy's slowing down. And unless you can put the situation back in the box, close Pandora's box, whatever you want to call it, then you've got a pretty rough outlook. About dollar showing us that, down about 0.5% here. Can you stem unemployment once the sovereign rule is triggered? Historically, not really. A lot of folks talking about the yield curve uninversion today. Tell you about that later on. Definitely have some thoughts on that one. It still remains probably one of the most misunderstood and misidentified indicators. Luckily, we've talked to Cam Harvey like 1,000 times, so I know it pretty much like the back of my hand now. We'll talk about it at the end of the show. Crude oil down below 70 bucks. WTI still pretty light. So really not a lot working right now. Maybe you could argue WTI coming off is good, but you could also argue that it's a sign of waning economic demand. If you look at the comparison also to Chinese stocks, you'll see that I think there's a role being played there too, because China just hasn't been able to really kick things off. That data still remains pretty sluggish. One reason why maybe there's not too much demand for crude, and the high for FXI pretty far behind us. We haven't talked about the Chinese stocks much, but just a little reminder there on what's going on. WTI, also, by the way, this is like the tech low for the year. I think if we start making lower lows, demand becomes a big part of the conversation. Today, again, not a lot of leadership in the market. You are getting a few kind of stock-specific stories moving. One interesting one we'll talk about is Seagate, which is like has a pretty interesting chart, one of the better-looking semiconductor charts, but it's just very few and far between right now. It used to be just this giant garden growing, healthy and flourishing of all these different AI names, and now it's basically a smattering of messy charts. And this is about as good as you can get. That big green candle for Seagate engulfing the last 4 days. Pretty encouraging chart there. But again, this is like the best you can find for the semiconductor stuff, which of course was the market's main propellant for a long time. Look at the intraday action, by the way, to come full circle here on the way jolts and data this morning moved us, as we saw the dollar get walloped, the 10-year coming down. This is really the situation that puts 50 basis points on the table.
Boom.
Again,
just hit my alert.
In time, that's not what the market wants now. So it looks like it's going to take a bashing over the head for people to understand that, because we rallied earlier and faded it down. Kevin Hanks joining me here to kick off the discussion. All right, Kev, it's like people want to keep doing the bad data's good thing in the middle of these sessions when you get a bad print like jolts. You try to turn it around in a rally. It doesn't work like that anymore. When are people going to wake up? We don't want 50 basis points. Am I wrong?
No, we don't. I mean, the
right.
The market,
50 basis points? We don't want it?
The market always wants more than the market is willing, than it's going to get.
Right.
It always wants more.
And maybe now it wants more than it actually needs, or than it should want.
You want a light touch on what we're about to get, because the big mistake is the reigniting of inflation. That's the mistake. That would be the legacy killer for Powell. Now, I don't know if that'll happen, but you know why it won't happen? Because he's coming down slowly.
Well, you're taking a little bit of a different tack than I am. I'm saying that if we keep getting bad data and the odds are going up for 50, that's telling us that it's not reflation risk, it's recession risk.
I understand what you're saying. You're saying is if it calls for 50,
you don't want to be in that situation.
Right, exactly. So that means the news is getting worse and worse and worse.
Kind of feels like that today. Jolts is not good.
Jolts showed more weakening of the labor market. Now, we've got...
That's what they wanted.
As you know, 4 data points we're going to get.
I don't get it.
This week. Tomorrow, we're going to get ADP and jobless. That's going to be interesting. And then we'll get the big one on Friday. And so there's going to be a lot of data. Between now and the closing bell on Friday, we're going to know a lot more about the labor market.
We definitely are. I mean, look at tomorrow. Again, like the fact that we got that move in bonds on Jolts, which, look, an important number. We've seen that move the market a few times in the past year. But this is a big rally today because last week they tried to sell bonds, and now we're pushing that right in the opposite direction.
Well, that could whipsaw if you get... I look at the bond market and the note market right now, and how is it going to react to wages that are ticking higher if we get them on Friday? Both month over month and year over year, how's it going to react to that? And so, I look at today's trade, Oliver, and it's just a classic version of we opened down, rallied, sold off, rallied, sold off. We've tried, this market is just moving in a choppy version, up and down. Yeah, it looks like if we close around here, we're going to close down between 1/4 and 1/2%, but that's about where we started the day. But we've had a couple of nice round trippers through then, and I would the 10-year note and the 30-year bond rally today, that would catch my attention if I was worried about the overall market.
Yeah, I mean, look, 10-year back down to the lows. And I'm really just thinking that you don't want to root for the situation in which this chart breaks lower and suddenly we'd start talking about emergency cuts and all this stuff. So I know you're picking up what I'm putting down. Ginny's with us too, out in the newsroom. Dollar Tree, kind of playing a role in this today, Ginny, with the stock getting absolutely wrecked. It was like a fresh reminder that people are cutting costs on every level because their traffic was actually still up. It was the price point and spending levels that dropped.
Well, so what I think is so interesting about this, Oliver, is we talked a lot about like the strength of the U.S. consumer, especially post Target, Walmart, hearing very similar sentiment, and then it was like the unraveling last week with Dollar General, which now I'd say very similar results that's been reflected by Dollar Tree. It tells you that this is a dollar store specific story where like these companies are not right now at the pricing flexibility enough to be able to continue to make a significant amount of money. I mean, like disappointing profit, disappointing outlook now, so no signs of it getting better. And I think what's so amazing, today's blundering move to the downside comes on the back of it was one of the worst performers last week. So showing, I think, a really important. No longer the case. You need a company that's huge with tons of pricing flexibility like Walmart. And I think it just goes to show the different ways the economic downturns and upturns have hit these dollar stores.
Yeah, it's pretty amazing. It's been cut all the way down to this point. It's like a surgical degree of belt tightening, that people have done, not just in, the retail, but it kind of feels like markets now too. It's kind of the same thing. It's like people aren't buying the expensive stocks anymore, just like not buying, the expensive stuff. It feels like there's an analogy there.
Hey, keep splitting your stock, and then maybe it gets more inflation-proof, I guess, because that seems to be the theme. Is every company that stock price came over like $1,000 is now splitting. I think that there's still several that are splitting in just in the next couple of weeks, even. But yeah, I think the story with Dollar Tree is interesting. I also think that the elephant in the room that continues to be mentioned on their earnings calls is the fact that Family Dollar is still like one of their worst investments, I'd say arguably ever, because it continues to be like this black eye on the company. I mean, I know they tried to spin it just differently several earnings straight, but every quarter we mention this like lagging portion of sales. To me, that says this was a bad investment. I don't know the solution from here but it actually makes, I mean, Dollar General's move to the downside last week look less painful, and that's saying something because Dollar General's also pretty much at its 52-week lows.
Okay, yeah, it is across the board, right? 5 below 2, it hasn't done well. Walmart's sitting up there on its perch. That's pretty much it, basically, at this point.
Margins, they have margin flexibility. I think that's huge right now.
They're the only ones that can make it work, and the grocery business also helping. So, wow, Dollar Tree down 25%. Thought maybe there'd be some kind of a dip buyer, but nope, nowhere to be found. Thanks, Jenny. Appreciate it very much. All right, let's continue the conversation about the macroeconomy and how to invest in it. Philip Strail is the Chief Investment Officer of America's Morningstar Wealth. Here in studio, Philip, great to see you again.
Great to be back, Oliver.
So we've got some interesting stuff here today. Obviously, we had this big NVIDIA sell-off yesterday, which is kind of like, obviously, the market's engine seems to be sputtering a little bit, but then it's trying to rotate into these other things. Problem is, can we rotate if the economy is on a downslope? How does that work?
Yeah, it's a great question. I think in some ways it's just continuation of kind of the broadening of equity markets and all.
This was yesterday's video for today's SPY and SPX. And I'm going to put a price line on the 21 here. This is called a hangman candlestick, and it pulled on back and hit the 9 today. So that 9 is going to be a solid support on the SPX. And we're going to draw a trend line on this. And this is what we've got to hold tomorrow if we do pull back. If we don't hold this trend line or this price line, and it's going to be the average right around 55.18 somewhere, 55, a little bit under 55.77. We did kind of go below that 9 today, and I thought we were more or less going to have a pullback to the 21. Now this is the 21 EMA, and that's your second support. If we do fail the 9, she could easily pull back to the 21. And I'm going to put a price line on the 21 here on the SPX. I'm only using the moving averages. So we type in 9 EMA. 53.97. We had to hold to 55.17 today. That was right in between here. Those are the two major support levels. So I'm going to go to the yearly time frame now and see where my moving averages lie. This is called the yearly daily. And at 63 will be right here. 55.18 more or less. The 63 EMA will be right here, and that'll be your next support if we don't hold this 55.1792. And I'm going to put a price line all the way across that. So that's basically all I need to know. And we have a gap. We have a gap right here. So I'm going to color that gap in on the daily. We had a big gap up. We could just hold the gap and then run back up to the top. So I'm going to definitely put a price line on the gap fill. We got the bottom gap, and that runs into the 63 EMA. And we're going to type that in here. Let me see if I can do this right. Had a brain fart there. Yeah, I'm just going to type it in right now. No, you dummy. Because these things are going to move around. I should have typed in weekly, on this trend line right here. Should have typed in the price. But we're going to put a price line right here on this gap and call it the gap fill. We hit that today, so that's called the gap fill. We could easily come back down and touch that again tomorrow and double bottom on the SPX and hold that support. If not, we're going to pull back and hit that 63 right here, which I think would be a good spot at the bottom of the gap and try to run it back up to the top. So if we don't hold the gap, we're definitely going to pull back and hit this other support level. So keep that in mind. That's on the daily. So these are the 4 different support levels that you're going to be looking at. And I'm going to type in gap in here. So when I pull this up tomorrow, I'll know exactly what it is. We got the gap right here, so that's going to be a gap support at that 5501. I'm going to type that in there too. $5501.32. Then I'll know that that's the gap. Support when I come in here tomorrow to trade this trade. So this is the way it's going to look. We need to hold 55.1792, and if that doesn't hold, it'd be 55.01.32, the top of the gap. And then if that doesn't hold, we'll go down into the gap fill and hit 54.55.29, which is off the 63 EMA. And then bottom line 54.53.97.42 for the bottom line support level to hold. The SPY, we also kind of went below the 21. Let's just pull up the weekly first. On the weekly, we're right at the 9, so I'm going to put a price line there on the 9. This has to kind of be close. They're never perfect. At 550.41 today, I called a perfect one though on the video that I did this weekend. And then that's the 9. Then we've got the 21. So we're going to put a price line on the 21. And then the bottom line will be the 63 way down here, which I can't see. So that's going to be that number right there. 538.16 is going to be my support to hold if we do not hold the 9. Now I'm going to go to the yearly daily. And I'm going to look to see where we are here. We're below the 21, which is a little bit bearish. We could easily come back down here and do the same thing. You've got the huge gap. So I'm going to put a price line at the bottom of that body of that candle right there. And that's at 549.40, which is only $1 difference from where we were today. And we did hit that top of that gap today. So I'm going to color that one in. Gap plays, if you've never traded them before, you'll have a good learning lesson now. And we're going to the bottom of that candle right there. And that's going to be the bottom support of that gap. And you want to go ahead and put a price line all the way across. And that's at 543.71. So 3 different support levels, and then the bottom line will definitely be back down here at 538.43, and then we'll readjust it and look at it later. So what we need to hold tomorrow or break above would be the 21 EMA, and that's going to be your resistance level. So if we do break out and get above that, then we can run it back up to the 9. But if not, she's going to hold this gap right in here, and I'm going to type in gap. The gap's pretty good solid support, and if we don't hold that top of that gap, she'll definitely pull back to the bottom of it. That's how important that is. I mean, that's a solid support. If it pulls back, it's going to hit the bottom of that gap and have a gap fill. And that price support right now is 549.40. If that doesn't hold, then we'll type in top. It's good to know this. And then the bottom line support will be back down here at the 63 at 543, 544. I'm going to round it up a little bit because you got that red line, you got that there moving up some. So right at 544. And I'm going to put an alert right there just in case we miss it. And I'm looking for that 543. So I'll type in the alert 544.51. at or below, and I'm going to type in 63 EMA on daily. That sums it up. That sums it up. We need to hold that gap. That's the way I'm going to call it out now. That gap support at 549.40, and if that doesn't hold, we could easily pull down to 544.51, and then bottom line would be 538.43. Now I'm bearish. We had a real serious sell-off today. I think it's the pre-election sell-off. If you know anything about money or stocks, Kamala's going to not tell us what she's going to be doing during her administration, so we more or less got to think of all the rhetoric she said in the past, and that's probably the same stuff that she'll pull on once she becomes president. For right now, she's trying to be a centrist and making a lot of promises that she doesn't believe in, and we'll just have to see. If you're a Democrat, I used to be a Democrat, so I know how they think. They don't like to be honest, for one. We like to beat around the bush, and then our plans can always change once we're elected. That's why I left the party. I like Trump because Trump says it as it is, and we know exactly what he's going to do. I'd vote for Kamala if I knew she wasn't a flip-flopper. So that's basically what I think we're in. We're in the pre-election sell-off, and September is always the month to remember. People have been calling the pullback in September. We do need a correction, a good one, and I think we're going to get it real fast and then bounce up real fast. So it's one of them times where you say, oh shit, I missed it again. Once we have a good pullback, and it could be all week long, or we could start to turn around tomorrow. This is a short week. We're just going to find out. We need to hold the gap. If we don't hold that gap, then we're going to drop down to the bottom of the gap. I've got an alert set for 544.51, and then I'll see what goes on from them. I'll probably have to go back and watch this video in the morning to remember what I said, but that's the way I'm looking at it. I'm looking at the SPY. We both have gaps, and if we don't hold the gap, we'll go down to the bottom of that gap on the daily time frame. This is the sneaky snake trading strategy, where I talk about chart patterns, moving averages, and being in the now. And I wish everybody a safe trading. Don't try to overload yourself when we're in very volatile times. We got just less than a couple months before the election, and I'm just going to play it real safe until then. And I'm going to repeat that. I'm going to play it real safe until then. Have a great day. I was off just a few cents on the gap today, so I'm quite impressed with that. Look at there, I mean, right to the penny. On the SPY.
So
I gotta listen to my videos more often. They're more accurate than I am when I'm live, almost.
AI is super important. The number one thing we want to do at GitLab is make the developer, the security, and the operations personas more effective to deliver software. AI is a way to do that, and on our earnings call we talked about 3 customers that adopted our AI features in their development process: Barclays, F5, and KeyBank. And so everybody's evaluating AI solutions and seeing how it will impact their development cycles.
Okay, and right now Do you can you upcharge? Can you upsell? Have your prices changed as you are utilizing this new technology? I imagine that if it's as big as it is, you might be able to squeeze a little extra juice from it.
Yeah, we're a seat-based model, and so when you buy GitLab Premium or Ultimate, it's per seat. And for AI features that we have, we just launched GitLab Duo Enterprise that just went GA this past month, and it's a seat-based pricing. And so we think that early in a big market, the $40 billion TAM that I mentioned, it's really important to be seat-based. And so in the procurement process, it's easier to know exactly what you're going to spend, and so you can budget accordingly.
Okay. Right now, when you're getting new customers, how big are those deals, and what are the size of those companies? Are there still pretty big fish to catch out there, or at this point, is it smaller businesses, startups?
Yeah, absolutely. I was really happy with the strength of the enterprise customers this quarter. Customers over 100K in ARR grew 33% year over year. Ultimate, which is our highest priced product that has advanced security and compliance features in it, grew over 50% of bookings. It was over 50% of bookings, and now comprises of 47% of total ARR. So, we do see sort of a cautious spending environment out there, but we have seen stabilization from prior quarters, and we do see strength in the enterprise.
Okay. Brian, thanks for the catch up. Appreciate the details.
Awesome. Thanks, Oliver. Have a great day.
Absolutely. We'll catch you next quarter. Brian Robbins.
Boing.
GTLB up 20%. All right. And
Yummy, yummy.
Over the past 2 years, despite being down this
Randy.
year on the year to date. Coming up, we're going to take a look at the options traders, positioning, market makers.
I'm up $800.
What they don't.
900.
Equities are lower, but still very much within reach of a positive day. Dow's basically there. Not a lot of clues from Bitcoin. That's a little changed. The only thing that's very obvious right now is that investors are really considering
230
from the Fed. Bonds are rallying a ton, and the dollar is down.
Profit. Take profit. Take profit. We could hit the 200, but I'm going to get out. We hit the resistance right here. Could be, no, that goes down a little bit. So yeah, I'm going to go with that other one. If that holds there, it'll move up to the 200. That only if that holds there. See how it hit right there and how it hit right there? So that's kind of solid. Left shoulder, right shoulder. You could bounce up and hit that, but I'm not going to take that risk. Not when you're up that much. Yeah, I could see 3 black crows again. Might even see them on the weekly. But we could come back. I think we can come back here and fill that gap eventually. And probably before the election, we'd go even lower than that. But I'm real pleased about this year's support level that I called out in that video. I wish I'd have been smart and played it that way. I got all excited about that opening today. I did get out. I mean, I didn't take no risk. And then I tried to scalp it again, and I got stuck. But if I'd just listened to my video, I got to do that more often. I mean, look at it. I said we were going to come down here and double bottom on that wick. today. If you go up to the minute, I mean, there's the bottom of it right there. Look how close I am. I mean, that is fucking, excuse my language. That is real good. I'm kind of having a lack of confidence here because of yesterday. So I'm having with him. That's why I wanted to hurry up getting out of trades today. And if I haven't getting out of them trades like I did today, I'd be stuck because it was like a minute, 2 minutes, you're up, and then back down, you're below your entry. But the gaps up were huge and the gaps down were huge all day long. I mean, it's like this one right here. Getting out of that trade when it hit the 200 and then it nailed, and I got back in it and run it up. I mean, that was genius. And then you had the 3 black crows and it hit the 200. Then you had another 3 black crows and it hit the 200. Then it bounced up and hit the 200. And then had that big knife. I mean, it was a very volatile day. You get stuck real fast if you're scalping, but they were like in 3-minute, 5-minute intervals. Every one of these breakouts were in 3 to 5 minute intervals. So I'm quite impressed on how I handled it today, but especially in the last hour or so when I scalped it twice, and I just got $900 on that trade. Because I went back and I looked at that video. I was sitting here watching it. I said, man, that's got to be frickin' it. I got to be, like Randy said, we're just 2 months into the election. And if they steal the election, the fat cats are going to get their way. I only know if Yoko was saying he thought there were more hedge fund people talking about wanting Trump to win, but I sure in the heck ain't heard it from anyone hardly, except Jim Cramer and Joe. And these people on Schwab don't talk about it too much because they don't like to mix politics, and that's why I like watching them. I don't have to get upset all day long. I'll sit there and argue with CNBC all day because of the way they're politically inclined to be progressive liberals. Almost all of them. Anymore, it used to not be like that. Home Depot was real conservative, Welch or whatever his name was, and you had Carl Icahn, and now we have Jamie Dimon on our side. He was a big liberal. But you look at the CEOs of all these big companies are all progressive liberals, from Disney to BlackRock to Binary, Disney, Target, all of them. And that's why I get kind of confused at times, because I was listening to everyone on there and they're going, if you got some articles, if he's got some articles stating different, I want to know about it. It was in the 55-25s, the ones that I've been calling out. I moved it up to get closer to the money. Now we're out of the money. The 25-25, the 55-25s. We didn't have that big of a bounce today. I mean, we were kind of gung-ho that we were going to go higher. So if we stay above the gap, we're still bullish, but if we go below it, we've got a pretty good another drop, I think. And I think we're going to come down and hit the 63. I really do. This is bullish, inverted hammer. We could be like tomorrow, have a nice little bounce up to the 21 and then back down again to the 63 and fill that gap on the SPX.
You still have liquidity in this market, and we still are just kind of selling off and just grinding to the downside. Once again, I say that's mechanical in nature. You still see the defensive sectors like utilities still catching a bid here today. This is not a sell everything type of sell-off right now. But if that liquidity kind of drops back to the downside, now we had a holiday, shortened week, we had something that occurred on Friday, but the liquidity is still pretty good. You start seeing that thing start to turn to the downside here, and you're starting to sit at 25 contracts on the bid, 25 contracts on the ask, which is fairly thin, and you start seeing these sell-offs. That's where you have these massive gaps. And that's where these gamma levels really do have a really big, a lot bigger impact to them. Oh, yeah. We're not there yet. We're like 60% bearish right now, and then 40% of it saying, okay, this is not as bad as maybe the price action's telling you.
Fair enough. All right. Sprinkle in a little fundamental economic stuff. I think that number goes up to like 70, but totally, I got you. Just purely based on the technicals and what we're seeing for the flows. I like the point about liquidity because it seems like you can imagine a scenario where 55, that breaking point, you get below it, liquidity starts to get strained a little bit, things get a little bit nastier. But for now, this could just, be a little bit of a churn before a big number. Thanks, KG. Great stuff. Good analysis. As always, Kevin Green. Let's get into some detail on NVIDIA and the antitrust stuff when we come back. Might also get a little chat about Supermicro. I'm looking forward to catching up with Corey Johnson when we come back. Real smart tech guy. Back in a moment.
Doo-doo. Flat day today. SPY just hit the 200. Freaking SPX back another $80.
Spotlight the biggest market trends on Trading 360. 11 a.m. Eastern, only on Schwab.
Right to the 200 out of the trade. So top of the gap.
How's my favorite client?
Great.
To the 200.
Investing themes, so now I can easily invest in trends like wearable tech.
Trends?
All that research sounds exhausting.
Nope, Schwab's technology does the work. So if I spot an opportunity in robotics or pets, I can buy those stocks in a few clicks.
Can't be that easy.
It is with Schwab.
Schwab investing themes. 40 customizable themes, up to 25 stocks in just a few clicks.
Binge watch the market with Schwab Network. Tune in 24 hours a day, 7 days a week on schwabnetwork.com and on all of your favorite streaming services. Schwab Network available anytime, anywhere, on any device for free. Schwab Network.
Tomorrow is Thursday. Man, these days have been hard on me mentally, especially today. I got one song in. I'm gonna do a reminder. Well, yeah, I'm gonna do a reminder video. And the kid's still pumping his AMC and it pulled back. I just want to keep commenting on these AMC videos and these GME videos, because these people have been talking about this move for months. And again, have a false breakout. We come back and hit the 200 on GME. Now this could be, if it wants to hold, it'll be okay. But if it doesn't, we're back down at 2070 again. And the same thing with AMC. This kid's been pumping this AMC for 8 months, 6, 7 months. It really annoys me. Big time. And he's getting followers. I've been following him for a good 7, 8 months. When it was up to here, he was pumping it at $8. Then we had that one big breakout on the split, and it sold off. I said, it ain't gonna last. In the last 2 months, he keeps saying, it's gonna break every day, it's gonna break. He's consistent. Mikey. I want to teach Mikey, he'll do it. He'll do anything. Mikey will trade it. He'll trade anything. Freaking SPX went to 210. I think I'll type that in there next time. I'm surprised he ain't blocked me by now. Days like today, man, once I cut this thing off, I'm done for stocks. I don't want to listen to another ticker until I wake up in the morning. Well, YouTube, I really appreciate everybody in here. We're going to see if we hold the top of the gap tomorrow, and I think that'll be a leading indicator that we're going to be fine, but God darn, them things are up to 265. Oh my. That's $1,700 if I'd have held it. On the SPX. On just 10 contracts. And it hit the 200. $1,700. Up $1.30. $1.70.
Companies and technologists and venture capitalists.
Instead of 700, it had been 1,700.
The San Francisco ferry building. The valley's come up to us here in San Francisco. And I think that, I think what Google has done, a company that's been accused of being a monopoly, both in this country and in Europe, Google was formed out of the ashes of that battle. Indeed, Google's headquarters is where Netscape once was, where Silicon Graphics once was. So these battles are top of mind to, I think, the biggest companies as they get big right now. But NVIDIA's gone from
Dow Jones went green
to a dominant company in business and in technology, and yes, in the stock market, in very rapid fashion. So,
man, I made so much money using that 200 SMA. It's unbelievable. Is that being kind of gun shy? If I'd held that, that'd been $1,800. Oh no, 320. That'd been 2010. Now I'm almost that would have been a $5,000 day. In case you people on YouTube don't know what I trade with, I'll show you here. Oh, God. 380. $2,800. I'm thinking about adding on to that's my trading platform. I've got these on these other monitors, and you're watching this one here. I got stocks over here, and I got this thing hooked up to Apple. This desk I've had for 20 years. You see how I used to attack it with a knife. Here's my printer, a laptop. Used to have just laptops. No, this is a real nice computer here. I'll probably end up getting another one eventually. That's $2,000, just that piece. It's my light, my neon light. Women live in hell here. Reality of the Philippine Women. I might want to watch that because I always thought they were free, more or less prostitutes. I'm going to watch that after I'm done. I was going to go find me a wife over there. I think the very first girl I ever kissed was an Asian. All right, well, that would have been a good trade right there. It always ends up like that, you know it, when you have a huge sell-off at the end of the day. We created a new low. It just nicked that day low right there from yesterday, or that support level into close. That's really not a bad looking chart, but it was hard to trade. Very hard to trade. I mean, this is where I got stuck. I was getting ready to sell it, and all of a sudden the knife came. I added on. That's what made that trade so good. I tripled down on that. Because it was so cheap from where I got in at it. So what time is it? We've got 6 more minutes.
Our sensitivity levels are high then if we're kind of going for a subpar number and, you know, running with it like bonds are here.
Yeah, so I think...
Randy, you can always get you a mic and we could be teamwork up here unless you're just shy of it. Anybody. I've had a couple try it, and I just said, no, it ain't going to work out. I remember that one guy that started bad-mouthing Vegas when I was gone at work, and I was told about it. He did. I said, bye. Because he kicked her out. She kicked him out. I wasn't aware of it. You won't hear me bash too many traders. I don't hardly ever do it. I think it's best that you just kind of not do it because everybody's different. Because of all the emotions that are involved in it, for one. Sometimes you can interpret something actually not the same as what you would think. How would I say it? Sometimes you can misunderstand somebody, and there was good intentions behind it in a way, and you just kind of get emotional and then you take it wrong. Tesla came back strong there at the end. Run up and hit the 200 SMA. I've called this little pullback right here right to the penny. I had 217.77, and we hit 217.53 and 217.60. That's where I would have said that right there. And then it run back up to the 200. So I'm going to wait and trade this again tomorrow. The only thing, Larry, about that one is the China. The competition in China is daunting, but they're more or less in control because all these other companies can't put these cars out like you can. Elon's got the money. That's the difference. I can understand about stage fright. I've been doing it for a long time. But I have experience acting and all that kind of stuff and playing in front of people and being a comedian. So we've got one more minute left. Yesterday was a real intense day because I got stuck all day long and I eventually got out with a loss. And today I made it back plus 3 times, 3x, 2x for sure. It would have been 4x if I'd have held on to them calls. Now it's at 0 at 5 cents. It ran off. The SPX. So watch the videos and see if you can write them numbers down and remind me. I was really impressed with the video I did yesterday on the SPX and the SPY. Someone just sold 72,000 shares, 32,000 shares of Tesla. Okay, well, great job today, Randy. Magnificent. Roaring City, Jesse, Link, M, and you people on YouTube, thanks for sticking in there. We'll catch you again tomorrow. Let's be a little bit cautious and careful. We're going to have this volatility, I think, for a little while. Until this election is probably going to be one of the biggest elections ever when it comes to the market. Hillary was in bed with Wall Street, and they were a little upset that she didn't win. And then Trump got in there, and they were okay with it. I've been through all the presidents. Reagan, I named them off, I think. Reagan and Bush 2, Clinton. I've been watching the market since 1980 and didn't decide to trade it until the internet came into play. And then it took me a couple years to get enough guts to buy a gateway and to get online. I had no idea how to use them. I'm not, technically I'm not very, very smart. I don't like things messed with. I had a guy a little while ago when I was watching the crash of Obama, I was going to give him a PlayStation because I didn't want to play games anymore. I never did really play them anyway. And so I gave it to him, and he didn't have a TV, and he tried to hook it up with mine, and he messed up everything. It took me months to figure out how to run everything right again. So he knew exactly what he was doing. I think the older I get, the more I don't want to know about it. So we'll catch you later. Thanks, everybody. What do you do? I'll tell you what you do. Cook dinner for her. Get her some flowers. Tell her how much she means to you. Tell her you were wrong. And she'll come running back to you. Tell her that you quit chewing tobacco. Make a list of 10 things that annoy her, and then hand her the list. Unless you want her gone, then say, I ain't changing this, I ain't changing that. I'm still going to be a slob. I had a girlfriend that couldn't cook. And that was one of my biggest criteria is you got to be able to work in the kitchen with me. Chicken was always raw. It only takes a few minutes. 3 minutes on one side and 3 minutes on the other, honey. It's not hard. So I started cooking. When she come home from work, dinner would already be on the table for her. She doesn't have her license at 30? That's going to take some work. That's going to take some work. So we'll get on out of here. I want to thank everybody again. Here comes this prank calls. Let's see if we can do a good one here. Always clean janitorial. May I help you, please? Smooch, smooch. Didn't want to smooch. I'm getting sick and tired of this. I get 5 or 6 of these calls every day now. It's never been like that before. I had this same number for 15 years. Stupid AI. Probably Russian misinformation. So we'll catch y'all later. Well, thank you, Mr. Hamster.